All right, that was a close one. Got about 40 seconds to go. Okay, CrowdStrike is up pre-market. We've got Shopify, Booking.com, AppLovin, NVIDIA higher. About 10 seconds to go, 5 seconds to go. Meta. Okay. Markets are open. Futures at highs. I'll be trimming a few more things this morning. Taking some profits off. SpaceX did report last night that was lower last time I looked. Apple, what's Apple doing? Apple, little fade. All right, there goes NVIDIA. NVIDIA's on the move. Okay, NVIDIA's on the move. All right, futures are on the move. S&P 500 higher.
YXT halted to the upside.
Okay, NVIDIA with some partnership with SpaceX noted last night by Frano.
If you look at the rest of this year, to answer specifically, I think that the next two quarters are very similar to the current quarter from a CapEx level perspective.
All that said, I come to you with my Yahoo Finance Alpha Space stat of the morning. It reflects a rough estimate of how much in CapEx SpaceX
NVIDIA looks good.
spend in 2026. Total CapEx for SpaceX in the second quarter was $18.4 billion, much higher than analyst estimates around $6 billion. I even saw some around $6.5 billion. Commentary by Johnson on the earnings call.
NVIDIA's on the move.
CapEx could each remain at similar levels as of that of the second quarter, implying full year CapEx of about $65 billion, give or take. Wall Street was modeling for $50 billion in CapEx for SpaceX this year. Let's get into these SpaceX numbers and also ones from AMD, which I think are being viewed very wrongly by the market. That was a darn good quarter by AMD. Art Hogan is B. Riley Well's chief economic strategist.
NVIDIA's rising, looking good.
Brooke, I know you've been covering SpaceX all morning. What do you got for me?
I think what we're seeing here is the expectations were so high for both AMD and SpaceX. So when you take a look exactly what you just had said, it seems like that is what investors are focusing on. This big ramp up of what exactly CapEx spending could look like in 2026, now implicating that this can mean upwards of $65 billion within CapEx spending on top of what analysts had expected, or far higher than what analysts expected, of roughly $50 billion.
Okay, give it a few minutes. Leave the markets to settle down a bit.
$5, $255 for shares of space. And they noted that because of these major implications, what exactly does this mean when it comes to the ramp up into 2027, and just how much money will they spend? So even
All right, S&P just pulled back in a little bit.
Are back a bit there, and there's fear of just how much they're spending on all this.
The risk pivot did move higher.
From what I was able to gather from reading around, talking to people.
Our Brent was saying that that risk pivot level
Financial guidance and
76.80, so we want to stay above 76.80.
a concern here how much spending
76.80.
is
scaling and is spending heavily. You also, of course, have the lockup period that is coming up now tomorrow. So this is also weighing on this stock as well. And I found it interesting that they very heavily leaned into Starlink.
We got some support here at 77.65.
Contracts and
Resistance overhead.
will be needed in the future with Elon Musk talking about robotics and self-driving, and that you will need more connectivity because of that. So that was what they really leaned into, which is their moneymaker, of course.
Well, at the Morgan Stanley note on SpaceX got me giggles for a little bit because they were one of the first ones that I've seen, at least today, that is saying, we welcome more shares coming to market because this is a generational opportunity. But I'm not saying they're encouraging, but they're saying more shares come to market. The average investor go out there and buy a generational company much cheaper than I feel. Would you agree with that? Is that the right action to take right now?
Yeah, I think it's pretty difficult to call something a generational opportunity. It's trading at 77 times sales right now. They reported what they could about progress. So the Starship had 12 or 13 test flights, and that seems to be moving at pace, but it's a money burner. Starlink obviously had better sub growth than had been anticipated, but not enough to move the needle. And their only real revenue source right now is actually leasing out excess compute. So just may well be a generational opportunity, but it might be the next generation before it actually comes to fruition.
All right, let me just get with you here on that one. The market essentially ignoring Elon Musk calling out $1 trillion in revenue potential by 2030. The IPO in June, that prediction was for 2031.
Okay.
On something, this company can go to $1 trillion in sales for about $50 billion.
S&P consolidating at highs.
That's aspirational. I think it's the way to express that. It's not different from what Elon Musk has talked about with Tesla for the 15 years since it's been public. So I think it's, good investors know that. They know there's aspirations here. There's, great things to be had, but, the pointing to something that's going to happen in 29 or 30, certainly in the here and now makes things very expensive, and you're pulling forward a lot of that positive potential.
But as a fellow resident,
Okay, starting to bounce again.
The way I saw it, there was a lot of sequential acceleration in really all key parts of the business, especially that lucrative data center business. Yeah, people are concerned a little bit about that third party. Who the hell cares? And this company's growing so strongly, and this is one of the best games in the space.
Okay, Apple pulling back in a little bit. Nvidia's still going. Our New York banks look a little mixed, but okay.
Business that is so lucrative for them and it's growing. I would say that what Wall Street was
Okay, let's see what's moving at the moment. We've got Shopify, Booking.com, Amgen, Nvidia at highs. Okay, Wynn had earnings last night. Wynn up.
You saw that, yes, it beat the consensus, but perhaps the whisper numbers were higher, and so it didn't beat that. I mean, this was a stock that was really priced beyond perfection, and as one analyst said, this was not exceptional results. They were great results, strong, but it was expected. Even the data center said that
Lilly,
was expected.
higher. Booking.com.
So this stock, one analyst had pointed out, this stock over the last 12 quarters, this company guides very well to almost to the penny, but over 6 of the last 12 times, the stock has sold off after strong results. So this may be just a pattern that we see with AMD.
Yeah, exactly. So silliness. I was one, and I can call myself silly. I had a lot of bad calls too, but not me. Don't get to. All right, I'm gonna get back to you real quick. Elon said came out, put out X. They're all in on NVIDIA chips. Is that bad news for AMD?
Okay, NASDAQ.
It's an apples and oranges comparison. AMD's cutting edge GPU chip is still behind NVIDIA's leading edge, and that's where Elon Musk is putting all his chips, if you will. And I certainly think that with the amount of CapEx they're going to have to spend to get to their eventual
Big gap ups this morning.
Source of that capital, as NVIDIA has been sprinkling some capital around all of the artificial intelligence space. So I think he wants to.
Wow, nice looking start to the day. Dow Jones, Amgen is up.
Quick morning. On the topic, in October 2025, Base Power closed a massive $1 billion Series C funding round. The Gary Future startup $3 billion. Building on that momentum, the company secured another $1 billion Series D round this week, more than tripling its valuation to $13 billion. Capital addition and value This latest capital raise brings base power's total funding to $2.5 billion. Nationwide to U.S. rates right now. Base for system. Well, on the show, base power comes out of the CEO. Zach, good to see you, my man. Congrats on this raise. It's a big move.
Okay, Merck, we had many pharmaceuticals are up yesterday. NVIDIA is still pushing.
First of all, thank you for
Okay,
having me.
NVIDIA is still going here.
Thank you. We've made a lot of progress in the last year. We've ramped installations massively. We're now
Okay, pre-market high is, okay, we have the pre-market high right here. Okay, we're above that pre-market high. We're moving on volume. Looks like we're going to move into this gap area here. Or not really a gap, but this space overhead to new highs. Looks like that's where we're headed.
In my opinion, the best home battery on the market by far.
NVIDIA moving
Very exciting design and manufactured by our team here in Austin. So really made the jump
into earnings.
almost entirely vertically integrated. So very, very exciting stuff for us.
How is the battery itself different, Zach, compared to last time?
It's really purpose built for the use case to be a grid asset. So it's larger, easier to install, more efficient, switches over in the event of an outage much faster. And it's just a way more effective grid asset to support the grid in times of need and to back up homeowners when there are outages.
Why Illinois?
It's a great state for battery storage and the value of capacity.
NVIDIA still pushing, looking for an opening range breakout. That's some decent volume already this morning.
Share that with our homeowners, our members, in the form of lower prices. So the value proposition.
Okay, NVIDIA, Frano mentioned last night, putting together a deal with SpaceX. All right, up here at the highs. SpaceX will use NVIDIA chips exclusively for its AI infrastructure.
For a ton of reasons, and we can talk about all of them, but in our opinion, the main one is just the control over supply. And when you're scaling rapidly, we went from 1 install a day 2 summers ago to 100 installs a day today. And we plan to continue scaling very rapidly to meet all the demand we have from consumers. You need to be able to control the supply because if there are issues with your suppliers and people are making the things that you're selling, you're not going to be able to scale. And so controlling that supply chain and manufacturing the batteries ourselves in Austin, the product that we design, it means we can iterate quickly, it means we can scale rapidly. And when problems do arise, we can solve them with our team versus working with a bunch of different companies that maybe don't have their incentives as aligned as we do.
Texas is really, of course, not to tell you this, but I'll mention anyway, it's north to the central place for AI data centers, right? It is ground zero. This is where a lot of these things are being built. How stressed is that grid in Texas?
NVIDIA
I think the reason
above its pre-market high.
Kind of the home of AI in America is because it is the
Nice pop
and AI
on news so far.
To energy and the entire growth of the compute industry has basically come down to how fast can you get power and where can you get it and how can you scale it. And Texas is the best place to.
Okay, Bollinger Bands opening up. NVIDIA, Bollinger Bands.
To help continue to grow that advantage and scale our energy resources in the state, but also to help the rest of the country catch up because we need all we can get if we're going to build the AI infrastructure that's going to be required to continue to scale all the great progress that's happening in that space.
Zach, I want to get your thoughts on this comment we got from NVIDIA CEO Jensen Huang, who's speaking at Stanford University to computing class. I believe it was lately. So the amount of energy that we need for AI computing is likely to probably we need 1,000 more power, 1,000 times much more power than we have today. As someone in the energy space.
Okay, NVIDIA.
Well, we're going to need a lot more power, but we're also just going to need to use our system more efficiently. And that's why where we think battery storage is really effective.
NVIDIA at the highs.
To increase the utilization of the system, the grid, and let people know that
Chips are up. We got, what is, SK Hynix is down 1% at the moment. Inside day, SK Hynix.
The size of the system, the capacity of the system. We also need to make it way more efficient. And so,
Okay, we got the futures. We got S&P higher.
We will be able to develop those things and scale our capacity to electricity, but it's going to take a lot of capital, a lot of hard work.
Okay, S&P 500.
People solving problems, and it's going to be a challenge for that.
Nice gap up this morning. New highs now.
Where do you see this business in 5 years?
Well, we think the opportunity is absolutely enough.
Okay, there goes SK Hynix on the move. Chips are on the buy.
And you know, we see an opportunity to scale the business across the U.S. and eventually internationally. So we have a massive road ahead of us, and you know, I think for a lot of people outside in, it looks like the company is really far along, and you know, we've got the big valuation. But the truth is,
NVIDIA.
For us, and if you're in our office with our team, I think everyone here knows that and appreciates that and sees the scope of the opportunity and the scope of our ambition. And the truth is, you know, we're really just getting started.
Why do you think base power succeeds where Tesla stumbles?
I don't think it's about us succeeding and Tesla stumbling. In fact, I think we have very complementary missions. We just have a totally different business strategy. Tesla, at least on the energy side, is primarily an OEM and a hardware company that they sell these products at a gross margin. We're more of an infrastructure company. So we own and install these assets and bid them into the wholesale markets as a resource that sits on the balance sheet. And so it's just a fundamentally kind of counter position strategy entirely.
Zach, I still have to take you up on that offer to come up here and visit you at HQ. I think it's very interesting technology. Congrats on this race. Hope to see you soon.
Thanks, Brian. We'd love to have you in Austin.
I appreciate it. All right, let's get moving here. Next quarter out from Circle. CEO Jeremy Allaire is just wrapping up his earnings call and will join me.
NVIDIA.
Are you ready for an electric joyride? It's just a few clicks away. Introducing electric e-bikes. Experience what it's like to feel
Broadcom higher today. Broadcom
best-selling electric bike.
gapping up. Broadcom.
We have every type of bike, type of rider. Ships to your doorstep for free. Little to no assembly required. Hop onto your next adventure.
Look for follow through.
Electric e-bikes. That's great.
You still haven't broken up with bad bras and gone to honeylove.com? Take your current torture device of a bra. It in no way fits your body.
I'm looking for VWAP.
The underwire stabs me and
God, what is it?
That's spillage. That's not bad. And there's no underwire. Don't take it from me.
Okay, we're back to VWAP. NVIDIA fading. Back to VWAP.
There's things probably has on and they're linked to wrinkles, dullness, and fat. News. Each believe that specifically proven to cure signs of zombie cells.
Okay.
Last minute passport panic? Apply online. Fast. No stress. We've got your backside of the passport. Helagov.com. She's my best friend, and I hate that she's gone.
New York Fang.
We've been discussing where I
All right, we're about to break out the new highs as double top for now. New York Fang components. Microsoft pulling back.
They made it easier. And now I get to live near it. Oh, you worry too much, dear. It's all fabulous.
Broadcom, NVIDIA. Starting to bounce.
Time to celebrate. With luxurious outdoor furniture, entertaining pieces and accents. We have everything.
Okay, SK Hynix looking pretty good. SK Hynix, NVIDIA starting to bounce. SK Hynix trading at its pre-market high. SK Hynix above its pre-market high, looking for a follow through.
What we received about a week and a half ago, their July finals. Last look, 53.6.
Tesla on the move. Tesla.
Rather dramatically, 54.6. Now this remains the
Tesla looking for that follow through.
expansion expansion territory, and it's the best read since October of last year. If we go to the composite, last read, the mid-month was 53.6, exactly the same as the service headline. This composite number, 54.5. So it also improved, and it's also the best read since October of 25. We still have ISM service PMIs to be coming out at the top of the hour. Interest rates are moving just a bit higher, mostly because oil really isn't dramatically lower like it's been the last several
Tesla
days.
looking good.
460 places, 10s up 1 at 421. 2s are up 2 basis points.
Markets are a bit extended. I'd be thinking about taking some profits off the table. Looking for a little mean reversion. Same can be said for Tesla, looking for mean reversion back towards the 50-day. It's been off for the last few weeks. It gapped down last week on earnings. Microsoft pulling back. Okay, Microsoft's starting to consolidate. It's run up, finally. It's not going to go straight up forever. I closed those call credits on Friday when I was out, as it looked like it was just going to keep going, and in fact is exactly what it did. So institutions have bought. Let's see if this pulls back. They'll probably be selling some covered calls up here. Wait for this to pull back in a little bit. S&P is starting to pull back a bit. S&P. All right, we're starting to bang out this range. 95, 95. All right, so that we got this level here, 78.20 down to 77.65 for now. S&P pulling back. Hedge flows for now are pointing down. Made new all-time highs yesterday. Now we got a gravestone doji. We could see some mean reversion, just giving it a little bit more time to see what the institutions have in mind. SK Hynix. SK Hynix trying to continue.
Team, what really stood out to me is things were trending in generally the right direction across the board. You started to see the feeling about the future improve. You started to see the direction in which prices paid was moving improve. Still elevated, but moving in the right direction. Most importantly, something that you discussed yesterday and talked about is you're starting to see that employment figure as a sub-index of the ISM numbers start to get off the map. And it was something in like the 52 range, if I recall, which is in the expansion territory for manufacturing. So you're starting to see new job growth. You're starting to see a deceleration of the rate of inflation, and you're starting to see a feeling amongst those surveys that's a little bit more optimistic.
Yeah, the manufacturing was 2.3% above June and actually was at the highest level since May of 2022. Let's talk about what we're seeing here with some of the earnings and such. We'll get to that. I also want to take a look at some of the commodities. Sterling, it's good to see you. And I know you're looking at gold and silver. Let's talk about that.
Okay, SK Hynix. All right, we're looking for the follow through today. We talked about looking for a follow through today. We have a doji so far. It makes sense. I mean, we're pretty extended at the moment, and hedge flows right now are dropping. So this is more bearish.
Noticeably here today. Along with that, this hunger for risk assets, this general feeling that the economy is feeling better overall. We can avoid any news shocks. Gold is kind of a
Okay, all the New York FANGs, for the most part, fading, except NVIDIA at the moment. NVIDIA and Broadcom are trying to hold on to gains. SK Hynix pulling back in.
$100 in gold lately. And so is it a safe haven at this point? Because we're still risk on in the market.
Give it a few more minutes. Let the market settle down. Decide if it's going to trend lower. If we're going to get a doji. S&P is already starting to bounce.
Passes, and we're seeing that being highlighted today. It appears that we've come off the boil in the Middle East at least a little bit right now. And gold likes to see a healthy economy. It kind of likes a little bit of inflation, but it doesn't do well during crisis periods. So right now, I think this is a risk on play. Gold being used as a risk asset.
Qs, we got sweeps
That's attracting some speculative interest in the market.
for August 5th. Today, 0 day, $3.7 million trade. Very nice. Thank you, Dollar. SK Hynix still pulling back. Broadcom pulling back a bit. Wait for the markets to settle down. Let me be very clear. If the markets do extend a bit higher today, I'll be reducing my exposure. Short-term options, anything that expires in the next 2 weeks. Let's see, what did I buy yesterday? I bought some Apple, right? Apple. Those are November calls. So got plenty of time for Apple to do its thing. Apple. Okay, it needs to get above the 50-day. So I'll start adding to Apple. I have November 320 calls. All right, so we're just a little bit out of the money. Looking for it to get above VWAP and above the 50-day. The volume suggests that institutions bought the dip. Okay, Apple. The volume suggests institutions are buying this dip. Okay, yesterday, some decent volume. Starting to buy. Stochastics, MACD, RSI starting to reset. Meta might do something today. Meta, we sold some put credits. We took those off, I believe, on Monday. These put credits, took those off on Monday. All right, Meta is back to the 50-day. Still early. Intel's on the move. Intel's still pushing higher. Intel's above its pre-market high. Okay, let's look at the top 5 stocks on the NASDAQ. Shopify. Okay, it's below its pre-market high. So we had profit taking come in on earnings. We got booking.com. Gapped up. It's seeing some profit taking. Amgen, it's above its pre-market high. Amgen is a pretty good candidate so far. Bollinger Band's opening up, top and bottom. Amgen looks good. Okay, Amgen looks really nice. Okay, Amgen looks good. Let's see, NVIDIA. Okay, NVIDIA is holding up very well. NVIDIA. Looks like it wants to do something here, NVIDIA. All right, so we'll come back to NVIDIA in a minute. Amgen looks good. We're just going down the list. AppLovin. Where's pre-market high? It's below its pre-market high, so I'm not interested at the moment. Okay, Rocket Labs, RKLB. That dipped last week, finally turning back up. Rocket Labs. Rocket Labs looks good.
Engage with you in chat shows me those who engage with you outside.
Okay, S&P turning back up. Okay, looks like NVIDIA wants to go here. NVIDIA, I like NVIDIA, but it is above the pre-market high. We need to see some volume. So it's going to take a lot to exceed the first 30 minutes trading volume. Average, maybe. We'll see. SK Hynix. SK Hynix still looking good here, above its pre-market high. Continuing on with the top 5 stocks on both the NASDAQ and the S&P. S&P, Carlyle Group. S&P top 5, Carlyle. Charles River, I always get those two mixed up. Win reported last night. Win is up, holding above VWAP. International flavors and fragrances. A big gap up on earnings. Lilly's been active. Yesterday there was a lot of talk about pharmaceutical companies. Merck was on the list. Merck, J&J. Okay, these are pharmaceuticals are in play. Okay, and let's see what I just heard an alert there. ISM 54.1 versus 54.5 forecast. ISM. Watch the markets here. ISM is out. Okay, markets. What are we going to do here? Watch the futures. Okay, there goes pharma's in play. J&J, Lilly, Merck, Amgen. Okay, NVIDIA looks like it wants to go here. NVIDIA, opening range high right there. We're just sitting here for now. Okay, all the chips just saw some profit taking. Chips. Banks were up yesterday. Let's see, Citigroup. Banks following through. Follow through day. Citi, Bank, JP Morgan, Goldman Sachs, Wells Fargo, Morgan Stanley. Okay, let's look at those. Morgan Stanley, Goldman Sachs. Okay, JP Morgan on the watch list. JP Morgan breaking out. Okay, Citigroup, back above the 50-day, moving higher. Citi. Okay, looking good, folks. Looking good so far. NVIDIA looks like it wants to go, right? NVIDIA looking really sharp. NVIDIA. No follow through yet. SK Hynix. That pulled back in a little bit. Okay, let's look at the banks. Banks looking pretty good. Watching for that opening range breakout. Citigroup above its pre-market high. Citi.
All right, let's move on. Let's get out to Kevin Hicks, who joins us now for a look at some of this data. As I mentioned,
Okay, chips again pulling back a little bit. All right, NVIDIA looks like it wants to go. Don't see the volume. Okay, volume's starting to come in.
Previously number 54.0, looking for something around 54.5, comes in at 54.1, so slightly better than last month, but a miss versus the consensus. When we break down these numbers, Sam, ISM, let's see, the employment 47.4, that's slightly down from last month. Prices paid.
Opening range high 222.
We're getting a lot of ISM number. We got the PMI composite final about 15 minutes ago.
Watching NVIDIA. Okay, New York Fangs right now are saying look elsewhere. We had 1, 2, 3, 4. This is day 5 off of that bounce. What an incredible bounce. Okay, so I don't want to lose sight of what's actually working right now. Shopify is up. Shopify gapping up. Let's look at the 60-minute on these. Okay, we want these to be trending. That's way extended. You don't want to chase after that right now. Booking.com. Okay, I'm looking for something a little closer, like right here. Back on the 24th, when it transitioned above the 20 EMA for day trades and short-term swing trades. Amgen, that gapped up, so that's going to be extended. Okay, Amgen, man, what a nice start to the day, right? Started right at 392, up 10 points. Okay, Marriott, I see a lot of comments about, okay, Marriott is just turning the corner here. 3-candle reversal, Marriott.
Gained 36,000 jobs, financial activities, gained 10,000, professional and business services gained 9,000. The losers, leisure and hospitality. Maybe that's a post-World Cup, thing with restaurants and bars and things like that. They lost 11,000 jobs in leisure and hospitality. Trade, transportation, utilities lost 8,000. And then natural resources and mining lost 6,000. One interesting point on the ADP number was the data, the pay insight that you get, and a nice jump in job changers. Their income went up 7% for job changers. Job stayers pretty flat at 4.4%. But yeah, a nice jump there.
Okay, let's see what Marriott can do. All right, NVIDIA is trying to take out the high.
interesting. All right, that's the macro out of the way. Let's focus on the micro. We have so much to digest on that front this morning.
NVIDIA. Okay. NVIDIA looks like it wants to go here. Citigroup. Okay, that's about the breakout. Citigroup. Banks looking strong. What's Citigroup about a week and a half, 2 weeks ago? It looked like it was going to get above the 50-day. Finally getting back above the 50-day. So this consolidation working out. It speaks to the idea that you want to have longer dated options, September, October, November now.
Across the board, but there's a couple things there. August 6th is a key date for SpaceX. Why? As much as 900, the lockup expiration hits August 6th. So there could be massive amounts of supply. Now that doesn't mean that the people that are the lockup expires are going to naturally sell their stock, but there probably will be some. So August 6th is another big date on the
mentioned that 92% on revenue. That looks pretty good at this point. Just walk us through your thoughts on this market. I mean, as I mentioned, Kevin, we've got more records today set on Wall Street.
Okay, here goes Citigroup. Watch the banks. Banks look good.
Obviously, these kind of AI adjacent type of sectors as well, materials performing.
Banks are bid, folks. Okay, so that looks good. NVIDIA going. NVIDIA is about to go. NVIDIA is about to go. NVIDIA. Okay, we're up against the opening range high. Watching that volume. Citigroup. Continuation. Okay, so when the whole group is working, Citi, Morgan Stanley. Okay, that's bouncing. JP Morgan. JP Morgan breaking out. Okay, JP Morgan. Goldman Sachs. Wells Fargo. Wells Fargo looked best. Wells Fargo. WFC. Okay, PNC Bank. I know some of you have Bank of America too. Bank of America. BAC. Okay, so let's keep in mind what's going on right now. Okay, so let me see what I can show you here. Trying to make a point. Okay, look at the S&P 500. Okay, it has based for the last 10 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9. It's based for 10 to 12 weeks, and now it's breaking out. Okay, so the odds are we could see higher. We are extended, so if you're going to buy anything, make sure you're buying it on dips, and you have plenty of time, especially if you're trading options. Make sure you're out in September or October. Last thing you want to do is buy, well, I can't say, I'm just talking for myself here, okay? So I don't want to buy anything. Okay, NVIDIA is moving higher. I don't want to buy anything that's going to expire on Friday unless I'm going to day trade it. If you have a mindset to swing trade, make sure you're doing September, October options at this point. I mean, I have some that are out in November and December that look like they're going to continue. But the odds are we're looking pretty good here, and we'll continue. All right, let me just mark this up a little bit while NVIDIA tries to push the high. Let me put this on NVIDIA so you can watch that. NVIDIA. Let's see if this breaks out. Okay.
You can bet on this and win. You can bet on this and lose. This and lose. This and win. This and lose. This and lose. This, lose, lose, win. And lose, win. Even this, lose. Betting isn't investing. Investing is fun. It often rewards patience and discipline over shots in the dark. Long belongs to those who invest. Own your future. Don't bet.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at SwapNetwork.com. Streaming entertainment business primarily uses Disney Plus and also saw revenue increasing 11% in the quarter. Shares of Disney up over 10% right now, $100.32. Let's take a look at some of the winners on the day. What's driving the S&P 500 higher today? We've got Charles-driven Labs up 11.7, with resorts up 10.4%. We obviously know the story there with what's been on some of their earnings, as well as revenue. You've got Hawks up 7, Eli Lilly up 5.6, 9 after their earnings report this morning as well. Pretty good. We'll talk about that later in the show. However, on the session, a couple of earnings movers here. It's one of them down 18. CBS is another earnings mover we're seeing today on the way lower, down 5.6. The beaters down 17.
Okay, what's NVIDIA? NVIDIA is trying to continue.
Obviously, with what's been going on in Iran with geopolitical tensions, we've got this earnings momentum, this obviously positive earnings shock to the market, which continues to help things out here. I mean, tech has been on a great run in recent days. What are you telling your clients right now?
Yeah, this isn't a good day to come on and talk about potential warning signs, but we've been
Markets are breaking out. They're so reactive on these shows. It's unbelievable. Very little forward looking. NVIDIA is moving, but it's not like taking off to the races. Citigroup, we got an opening range breakout looking for a follow through in Citigroup. Citi, watch the banks. JP Morgan on the watch list. And Bank of America. We got opening range breakout trying to follow through. JP Morgan. JP Morgan. Okay, pulling back in a little bit. Okay, Broadcom looking good. Broadcom. We bought some Broadcom yesterday. We got back above the 50-day. That was the threshold. We needed to get above the 50-day. So I won't add to this until I see the next pullback and bounce. I have November options.
the long-term rates and long-term volumes are usually there at the scene of decline. The textile bubble with the housing bubble burst.
What do you think the market chooses to somewhat ignore a 30-year post-fight?
Okay, watching the S&P.
So we just have so much positive investor psychology that you can basically, when you're in a market like this, and particularly after you've broken through that early June high, you're going to have so much momentum that people are going to just disregard any of the potential warning signs and say, hey, this time is different and we're going to go higher. Whenever you see a bubble burst, somewhere in that equation are rising long-term interest rates.
This market to suggest that perhaps the Fed's lost control of the long end. Do you think the Treasury Secretary is worried about that, given this recent participation in the yen intervention?
Well, we're worried about it. I mean, what we saw in the 30-year.
Okay. Snowflake pushing higher. NVIDIA looks like it wants to go. Okay, the banks, when they're all moving together, it's a good sign. Same thing with pharmaceuticals. Pharmaceuticals all moving together. J&J, Merck, Lilly, Amgen. All right, these are starting to see some profit taking. Okay, let's go look at okay, let's go look at rotation here. Let's go to the daily, and we want to look at the sectors. Okay, you can see the sectors that are strengthening: financials, healthcare, industrials, real estate, tech. Okay, nice rotation here. Tech has been strong for the last few days. Starting to see a little bit of money come out. That could bounce. This could turn right back up. There's nothing here that says this can't make a U-turn and move back up into the green zone. We've seen that happen many times. But look at the sectors over here that are rotating in, improving. Okay, they're in it. Let me pull that over there. Sorry about that. The improving quadrant. Okay, improving. We got healthcare, financials, industrials, real estate. The defensive sectors have been lagging. Now they're starting to move back up. So these could rotate in, which would help the markets. We're up. First week, breakout to new all-time highs after 10 to 12 weeks.
So we do think it's a challenge. It's not going to turn the market down necessarily in weeks or months, but it's going to close up far more expensive to fuel these investments.
Yeah, it's interesting, Mondo. Warsh, the new Fed chair, he wants these Fed governors. With their conversations, micromanaging. I mean, there's no need for it. There's no need for them to continue yapping about it constantly.
Since we're multi-asset investors, for us, we're at our minimum goal now, but it's a very good shock absorber for a portfolio. When something very bad happens, you'll be happy that you have gold in that sort of flight to safety haven aspect.
Okay, materials, industrials, consumer discretionary, tech.
Keeping your duration short, holding some gold, and then holding some commodities. I mean, we've seen the price of oil come down, but we're also in the midst of this deglobalization effort, which I think and we believe is going to put pressure on commodities writ large going forward.
Interesting take. All right, Fritz, always a pleasure. Thanks so much for jumping on and joining us today. Really appreciate your time. Fritz Folks, their Chief Investment Strategist over at 3Edge. Coming up, we'll get a closer look at the big picture with the team from Charles Schwab, Morning Trade Line. I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going? First base, sometimes, next. Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
All right, S&P is pulling back a little bit.
Trading at Schwab is powered by Ameritrade.
NVIDIA, no follow through. I don't feel the energy just yet. That's why I like to wait until after 10 o'clock. The energy doesn't seem to be here. Certain sectors they're looking better. Pharmaceuticals, the banks. Okay, banks fading at the opening range high. So no follow through just yet. Let's see what else is working here. We said travel and leisure, right? So Marriott. Okay, that continues. You see the difference? See the difference? The trend is continuing. It's not falling off. It's like yesterday was Palantir. Okay, Palantir giving some of it back right now, inside day. or a inside bar, really. Inside of the top 20-25% of yesterday's range. Candle, rather. So we're looking for the volume to pick up again, Palantir. We'll come back to this shortly, but just wanted to show you Palantir. No follow through yet. Up a lot. Yesterday, the chips are just moderating right now, so we have to keep searching for what is actually moving the markets at the moment. We got rotation. Okay, so looking at healthcare, rather consumer discretionary and tech. Let's look at consumer discretionary. Consumer discretionary would be Tesla and Amazon. Those two make up 50% of the weight. Tesla, looking for a follow through. SpaceX. SpaceX did have earnings, and we're looking for buyers. Okay, looking for a higher low. This could be forming a base right now, so I'm watching this area. Okay, so watching this area for price action to base and eventually do that. Okay, do we know if it's going to do this and back and forth before breaking out? Probably the latter, I would think. Okay, maybe it bases a little bit more. If it does break out, we'll know. The talking heads will be mentioning it. The NVIDIA is still trying to go here. NVIDIA looking good. Looks like it wants to go. NVIDIA. Consumer discretionary does look good though. Okay, gapped up today. Consumer discretionary. Healthcare, Doji. Materials. Industrials. Okay, Brother Bill already mentioned Caterpillar this morning. Caterpillar. Okay, Caterpillar in the lower half of yesterday's range for now. Okay, S&P turning back up. Looks like a flat doji day. Okay, back to trace. Okay, hedge flows, watching hedge flows here.
While that correlation is not perfect, stocks do tend to outperform when that is above the boom or bust line, particularly given the strength we saw earlier this week with that 4-year high. Just getting over to you, really interesting notes that you've said across this morning. The market
feels like a doji day. Let's see what market internals are saying. Market internals, where is my, there we go. Market internals. Up down volume needs to be 2-to-1 or higher for bulls. If it's 1-to-1, it's a doji day. Survey says, waiting for the update here. Survey says 1-to-1. All right, so I'm not expecting big moves in either direction. We got positive gamma. We had positive gamma yesterday. Notice all the red. There's a lot of negative gamma in this area. 0 day. Let's go non-0 day. Let's look at net open interest. Net open interest. Okay, very clear where we're in between these two levels. 78.20 and 77.65. We're closer to 77.65. Watching Hero for a turn.
It certainly is. And obviously a lot of this is being propelled by the earnings, as Nate mentioned here, which has been nothing short of spectacular, quite frankly. I just had a chat with my previous guest, Nate, about, the potential warning signs that investors might be ignoring at the moment. And one of those is the long end of the yield curve. Is that something you're monitoring right now? I mean, are we in the all clear? Can the earnings continue to outperform to a point where we can continue to, I guess, not pay attention to a 30-year 0.2 almost?
Oh, it's absolutely important.
All right, 1-to-1. There's no momentum when it's 1-to-1.
Sam, I think you're probably aware of this, that when you make a news cycle high, yes, that's very important. So what, it was 5.2 on the 30-year. We hit, 5.28? I think we're down around, I can't remember last, 5.19, 5.21, somewhere in there. It has to do with the velocity, though. So if there was, for example, the sub something going on with the yen, carry trade, and there was an unwind and selling of treasuries, or China was selling treasuries, and the velocity of the 30-year began to break out, and it looked like that it's all about that velocity and the confidence within the fiscal dynamics and our government's ability to both fund and service debt, etc. Yes, all of that's very important. But if the 30-year were to, for example, just climb a little bit every couple of weeks, I don't think the market would have any problem. If it makes this big move in a short period of time, it's driven by some type of a catalyst or an event, a geopolitical, systemic situation, whatever. That's a different story. So yes, I've got my eye on the 30-year. New cycle high is very important, but I'm looking at the velocity of the move as well.
Concern. I mean, how are you looking at fixed income growth as it pertains to, say, treasuries versus like investment grade corporates, for instance?
I think from our perspective, our fixed income strategies bond market has done a phenomenal job, and we're really looking through a lot of the noise recently. I think now more than ever.
All right, so New York Fang is telling me to just chill at the moment. New York Fang. Okay, we got a doji. Tight range. We're coming back into the little pop, so we're giving back some of today's gains. We're trying to get above this double top. Nice.
Of that as well, there's credit space. So as a whole, we have a less favorable view of considering equities, commodities, cash within the space. We're still selling some opportunities.
Great stuff. And Nate, just to sort of cap things off with you, obviously we throw it ahead now to a couple of memory names reporting later tonight. SanDisk, Western Digital. I mean, what are you expecting to hear from these companies as far as the cyclicality of this business, or perhaps the lack of cyclicality in this business right now?
Well, I mean, you imagine, so sentiment is so important. If you go back a couple of weeks, and maybe it was even last week with Samsung and SK Hynix, they beat the numbers. There was a little bit of issue, I think, with SK Hynix's margin. The volatility over in the cost fee and everything, that's a different story. But the sentiment around chips, CapEx, AI spend was so bad that it was a sell in the news type of event. It started with Alphabet. It started with their CapEx guide, etc. But if you fast forward to today, I feel like that's been healed so much that it wouldn't surprise me if that dynamic has been reversed, that relationship's been reversed, where expectations are SanDisk is going to be raised. I don't think there's any problems with the supply, the demand dynamics right now. The whole supply coming online is like 2028, etc. So I would expect that you would be raised, given that right now the sentiment around chips, look at SpaceX's CapEx guidance. I think chances are you can see a positive reaction. It's not the same market with the sentiment around AI that it was 2, 3, 4 weeks ago. A lot of that has been healed, so we'll see.
Like the same market as perhaps a week ago, maybe some people being caught on the wrong side of this trade as well. Good time to be reporting earnings. Really appreciate it, guys. Thanks so much. Nate, the Director of Analysis, Chartered and Wealth Advisory.
Okay, NVIDIA, no follow through.
Trading Schwab is powered by NVIDIA, giving traders even more ways to sharpen their skills with tailored education. Get an expanded library filled with new online videos, webcasts, all crafted just for traders. And with guided learning paths stacked with content curated to fit your goals, you can spend less time searching.
Okay, let's look at the New York Fangs. Apple consolidating underneath the 50-day. Amazon consolidating at the highs. Turning the corner right here. Amazon looking pretty good. Broadcom above the 50-day yesterday. Doji today. Meta. Okay, no follow through it. Stuck at the 50-day. Google looking pretty strong here. Google.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Schwab Network delivers real-time market insights, live NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com. Let's run from the chart for AMD. This is the year-over-year chart we are seeing right now. Up 70% in that time. It is down 6.5% right now. All this that makes it worse than we got last night. So that is very much a focus for the trade. Joining us for a closer look at this is Alex Coffey, live from Chicago this morning. Alex, I'm just looking across some of the sell-side notes today, and I mean, it does look like a number of analysts have actually kept their buy rating. I've seen price targets raised across the board here. I mean, is this a case of just too lofty expectations, or just like an Nvidia story today?
Yeah, I mean, your guess is as good as mine, Sam, to be honest with you. When it comes to the reaction of some of these AI winners, it can be really, really difficult in terms of knowing what's going to be enough and what isn't. So let's start with what the expectations were. And versus expectations, this is an impressive report. So adjusted EPS were $1.66, beats the estimate. Revenue grew about 50% year over year, and it also beat the estimates. Data center revenue more than doubled, up over 107% year over year. Of course, beat expectations as well.
Let's look at, all right, Google looking okay. All right, because we're in a doji, we are leaning a little bit more, fading a little bit bearish right now. Because we're in this doji situation, 1-to-1 up down volume. I want to do a little bit more analysis here. Junk bonds looking a little better, so that looks good. A 10-year yield, 10-year yield pulling back a bit. Okay, 10-year yield pulling back. We've got junk bonds pushing higher. We got the New York Fang for now just telling us chill, bullish, but a little fade now from the gap up. We're still up quite a few handles, 28 handles or whatever. S&P. Advanced decline percent. Let's take a look at that. Okay, we had a nice little pop into today. All right, so 2 days up for the week. We're taking a break. 2 steps forward, 1 step back. 1-to-1 up down volume. So it's telling me that some rotations probably occurring. Let's see, New York. Let's look at the S&P 500. Equal weight. So remove the emphasis on the New York Fang components. We're at highs. Okay, you can see over here on the far right. We hit the new high. We faded. Wouldn't be surprising to see a little bit more fade. All right, hedge flows continue to move lower, so we're trending lower. Hedge flows trending lower. Coming up to support. We're coming up to support. what might be support. At 77.65. 77, we're right at 77.65 now. Okay, next level below that, about 77.50. 77.50. Okay, that's down here. Closer to a gap fill, 77.50. 77.50.
Yes, it is getting hard to get back off the bottom. And I really think that we're going to probably sell off again as the market just progresses through the day. I don't know that we'll hit those earlier lows that we had seen, but I do think we're going to sell off. So I really like where it traded down earlier today. So what I'm doing, Sam, is I'm selling
AMD.
expiration going out a few weeks. It's the 460, 440 put spread. Now I want to collect about $7 for that. Right now that's trading somewhere in the range of 5.5 to 6. So the stock would have to come down lower to get filled at $7. If we can do that, my break even on August 21st would be 453. I love that spot in AMD, and I think that's an opportunity here to just collect a nice amount of premium.
All right, good look at AMD shares down today off the back of these earnings, but quite a good run, as we said, year of the year up 170% odd year, I should say, over the last 52 weeks or so. But just turning our attention to the broader market here, I mean, obviously record set once again. Look, memory is a little bit softer going into some of these prints later tonight. Back 7, bit mixed, but all in all, things are hanging in there. So it's macro data. What's your take?
Things are absolutely hanging in there. I'm quite surprised actually of this massive rally in the face of the talk about multiple rate hikes. Still don't know what's happening, with the Strait of Hormuz and Iran. Earnings have been solid. There's no question. Earnings have been really, really good across the board. I think the CapEx concerns are a little overstated, but I would be a little bit over.
Okay.
We just ran too far, too fast.
It certainly has been pretty fast and furious.
All right, I'm not doing much of anything. I'm just waiting for the time being to see if we can't get fade down to support and get a bounce. We'll want hedge flows to turn up for now. Mondo took some puts early on, so that was a good trade. We got a lot of negative gamma, so you know that is more bearish. Let's look at 0-day, if there's any new. All right, 77.45, that's a 98 percentile. 77.45, 91%. Okay, so there's no 99 percentiles on the call side. 97, 97, 96. All right, so we're right up against the support area, right in this area. Looking for hedge flows to turn back up. No longs yet this morning. No new longs this morning. As we fade. Materials, you can see materials. This is a 60-minute. 60-minute. Just looking at the rotation coming into today. Okay, rotation coming into today. Okay, looking at the left upper quadrant, the improving sector. You see materials there? Materials, healthcare, defensive, financials, which we talked about this morning. Industrials in the green box on the far right. Upper right quadrant. Communications pulling back as Meta, Google, and Netflix see some profit taking. Industrials, let's take a look at industrials. That's hanging in there. Materials look good too. So we'll look at both of those. We'll look at industrials and materials. Okay, let me look at that. Industrials and materials. All right, let's look at materials and see what stocks look good here. Allegheny Technologies, fading. Let's see, Nucor Steel. Okay, the steel stocks had some interesting things going on here. Here's a 60-minute, a little extended. I'm looking for an edge. Right now, the markets have pulled back, so I'm looking for an edge. These sectors that have turned.
Whether ETFing or 401k, saving, spending, or even retiring. You can count
Freeport McMoran.
Market insights, live support.
Okay, it's extended. I don't want to buy it. It's bullish, but I don't want to buy it on an extension like this. It's up too much. Yesterday, we talked about Callaway Golf. Did they have earnings yet? It's supposed to be earnings today, right? Callaway. Oh, it reported already. They beat consensus, Callaway Golf. Okay, let's see what they reported here. Callaway. This is considered consumer discretionary, right? Travel and leisure, golf. Third quarter revenue 415, 435. They reported 612. Huh. So they reported 39 cents. Okay, hard to tell here. Net sales are climbing. Income is climbing. Look at this column right here. All right, that looks okay. Callaway Golf. Okay, this one popped up on a scan over, what was it, Monday night into Tuesday. We saw Callaway Golf as a potential trade. MACD stochastics turning, RSI rising. It's in a sector that most people are paying attention to. All right, it's trending on the 60-minute. So you know I love it when it touches the 60-minute 20 EMA and then starts to turn. This is actually the weekly. Duh, that's the weekly. 60-minute, same idea. Looking at the 20 EMA, it touches the 20 EMA and starts to move. So that's actually a pretty good thing. You got the 60-minute 20 EMA, you got the daily 20 EMA, and you got the weekly 10 EMA. Stock is trending. It's breaking above this level. Callaway Golf looks like a pretty decent swing trade setup. Okay, it just keeps breaking higher. Just had earnings. It's August. Golf would be good until, well, depending on where you play. It made it through this level too. All right, so that's good. Next pivot probably up here somewhere. So 26. I might buy some Callaway Golf. Okay, let's see. CALY. I just want to have a opening range breakout. We got it. We're above pre-market highs. The only issue I have is that the markets right now are producing a doji day, 1-to-1 up down volume. So I'm kind of skittish at the moment. You know that I've been taking profits off into strength, especially on the tech side. Anything that expires in the next 2 weeks, option wise, I've been rolling out or taking profits if I have profits. I did that with Microsoft. What's today? Wednesday. I did it on Monday or Tuesday. What day was it? Microsoft. We took profits. I was talking to, who was it in the room about Microsoft? Finally came back, gave us a profit. Yeah, we got a lot of smart people in the trading room. Doing nothing makes a whole lot of sense. Okay. Okay, S&P is starting to turn back up. Okay, watch the hedge flows, Watch it here. Hedge flows turning up. Okay, there goes Apple. Apple's on the move. Apple's on the move here. Watch Apple. Okay, watch Apple. Okay, AAPL. Apple, opening range breakout. Pre-market high. Okay, Apple on the move here. Okay, so I have some Apple calls from yesterday, right? We bought Apple calls yesterday. Looking for this to move back above the 50-day. Apple. NVIDIA is still fading. All right, so we got 1 out of 10 New York FANG components looking good. Google's starting to do something. Google was an observation a few minutes ago. Looking for this to continue. It's above VWAP. Pre-market high, opening range highs at the highs overhead. Okay, Apple. Apple looking good. Apple. Could see 2 to 3 upside, 2 to 3 upside to pre-market highs. All right, so we're above the 50-day. Alert. Apple back above the 50-day.
exactly in line with what I would.
Okay, Apple's back above the 50-day. That was a threshold I needed to see. All right, I needed to see that higher. Okay, the S&P is still pulling back though. S&P is pulling back. Apple's pulling the other direction. Hedge flows turn back down. Okay, I have no S&P exposure. All I have is VIX. VIX calls. I have no S&P calls or puts. I have no Qs. I have no IWM. No index exposure at the moment. I've been reducing my exposure into strength, just sitting on my hands, waiting for some obvious edge. The edge with Apple would be a move above the 50-day. After a gap down, we want to see institutions picking up shares. The volume's starting to pick up. Okay, so on the daily looks good. Okay, we're below the 105 on Grover's ES chart. Okay, let's look. Callaway Golf. Okay, Callaway looks good. Callaway looks like it wants to break out. Callaway, let me see what kind of options they have here. Callaway, C-A-L-Y, Callaway. November, let's see, there's no volume trading on this one. Callaway, September 20.
So I want to leave us with a quick market thought here. I mean, obviously record times now that we said at the open, the NDX and the Brussels have both slipped.
Yeah, Sam, you know, the momentum yesterday,
Callaway Golf, I just bought a couple of 20 September 20s.
driven by earnings at this point, Sam. It pushed aside the geopolitical headlines at this point.
Okay.
So obviously, with the vision that is later today, we'll be watching. Really
50 deltas, 50 deltas. All right, looking good.
It's trading 360 allocated. We track market trends and companies that shape investment decisions, all with expert analysis and actionable concepts. From inflation data to sector rotation, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360 in market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Schwab Bank Investor Checking satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors.
Okay, we're looking for this direction to change. Right now, we're still dealing with 77.45. We just dropped through 77.65, so that's 20 points there. We're still trending, so expect more of the same. We would need to see up-down volume start to surge 2-to-1, 3-to-1 in order to think that the bulls are stepping up. Right now, it's still 1-to-1 down, so it's a mild pullback. Dealer hedge flow isn't really that pronounced at the moment. They're not like selling like crazy, selling futures. So as we move lower, dealers will be selling futures in order to hedge. Once it starts to turn back up, they'll be buying the dip. Okay, Apple's still going here. Apple. Meanwhile,
Change in sales based on their guidance, but not the same rate of change on EPS.
The biggest headlines, live analysis, breaking news, and sharp trade ideas, minute by minute. With shows built for
meanwhile, we got higher highs and higher lows on Apple. Pre-market high is overhead at 313.60.
So that would be a further downside area to watch.
not inside. Actual data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free.
Okay, I don't like this lonesome Apple doing its own thing. It's above the 50-day. 50-day is a big deal. Above the 50-day, it's got to stay above, got to close. Got to close above that 50-day. So this is one of those exercises that you have to wait and see what it's going to do. Meanwhile, I had a nice little push off the low, a higher low. We've got pre-market high overhead. We got an opening range. We took out the opening range. Okay, we took out the opening range. Pre-market high is overhead, so that's what we're looking for.
Closer look at the company's second quarter earnings beat and what is next in the software space. The stock will be lower this morning after the current quarter guidance came in below estimates. Our disruptor today is DoorDash ahead of earnings this afternoon. The stock is down about 10% this year, nearly 30% of the all-time highs that we hit back in October. Alex Coffey will preview the report and also have an example trade for us. Then in our 360 round, we are going to examine the fallout from SpaceX.
Pre-market high.
They beat estimates on both the top and the bottom lines, but the stock is pulling back today in part because of that second quarter CapEx number.
Opening range high.
Lots to get to there and a lot more, but let's check in with the market, see how things are shaping up on this Wednesday morning.
Okay, MACD and stochastics are starting to show, RSI is starting to show overbought.
758. On the Nasdaq, we're just fractional unchanged now. We're at 29,732. On the Dow, we are 1% higher though this morning, 54,650, and the Russell 2K down about 0.2% right now at 30,3063. As we take a look at the 10-year, fractionally lower here, we're at 464. The dollar hovering below 100 right now.
Okay, so let's look at Pfizer for Jeff. Pfizer, 200 days right overhead. We've got Lilly. That's taking a back seat. Lilly, J&J, Amgen, Merck, Amgen. Let's see what else.
Revenue climbing nearly 50% from last year, while 13% higher just from last quarter alone.
AbbVie. Okay. Abbott Labs. No. Okay, so earlier we were looking at sector-wise stocks that are working, international flavors and fragrances. Okay, breaking higher. This is the hourly chart, 60-minute. Okay, Apple. Apple is moving above the 60-minute, 20 EMA.
GPUs, networking, and really directives among competing with, say, NVIDIA for those various AI systems. They did say the Helios shipments will begin this quarter and to ramp into the fourth quarter. And Lisa Sue did note that, of course, right now, 2027 AI revenue may even be too conservative. but we did not hang on to these positive
Okay, 60-minute, 20 MA, we're starting to transition.
beat on revenue, earnings, and guiding by expectations, and notably so, we've seen a pretty substantial move to the downside, really, since we got these numbers, as you mentioned. The stock had more than doubled.
Okay, for right now, Doji Day.
Closer to say 14 billion. Buy-side expectations around the AIGB's demand in the future instinct also are still inflated. So I think that we're
Okay, Apple. Apple. Looking for a higher low now. Opening range high. Pre-market high. Got to stay above that 50 day. Not much to do at the moment. Okay, SK Hynix starting to bounce. VWAP at NVIDIA at VWAP. Okay, back to what is actually moving in the markets right now. We got Shopify gapping up today. Shopify gapping up on earnings. Not much to look at right now. Booking.com. Booking. BKNG. Booking. Doji. Amgen. Bullish. You can see that it's clearly very bullish here. 20 EMA, 60-minute. Marriott. Marriott transitioning back above the 20 EMA. We had Wynn Resorts with earnings. Wynn Resorts. Let's look at Las Vegas Sands. Okay, that's transitioning. Las Vegas Sands. Okay. Callaway Golf I just mentioned a few minutes ago. Starting to move back up, Callaway. Okay, it bounced at the 20 EMA on the 60-minute. Looking for this to take out 20, perhaps.
I think you're going to see this love-hate relationship with technology. We saw
SK Hynix, SKHY. All right, it is starting to trend. What's SpaceX doing? SpaceX. Okay, gap down on earnings. Looking for a retake the 20 MA. SpaceX, we would have loved to see this. We would have loved to see this gap up massively. But we are, the saving grace is that we are breaking trend, or it appears to be. The volume looks good. Okay, RSI just needs to move back up now. I got a feeling we're going to bounce here. The lows are probably in at 105 for now. 104, 105.
just got to be prepared. And I can't put a pin on it, but I'll tell you, the love-hate relationship with tech is what's driving this volatility. You've got over-levered purchasing on hedge funds. This is one of the big reasons we saw, just
Apple. All right, so this looks good for SpaceX. Okay, SpaceX. Let's look at Cerebras, CBRS, Cerebras, above the 60-minute, but you can tell there's a range here that we need to take out. Cerebras, I think I marked this up several times already. CBRS. Okay, so we're looking for this cup. Okay, the bag holders over here up to 245, 244, 245. We need to get above those. 230 here, 231. So Cerebras is still basing. There's nothing to look at really for now. Caterpillar looks good. What's Coinbase doing? Coinbase, nah, nothing there. S&P is just not doing anything. 1-to-1 up down volume. 1-to-1 still. Okay, Apple looks like it wants to keep going here. Apple. 1-to-1 up down volume still. SK Hynix turning back up.
Companies that stand to be profitable with that spending. Amazon is a great place to make look as an example. When we heard the earnings of Amazon, we knew profitability is just right around some of these names. We've been leaning into leadership, just like you said, Amazon, Apple, Microsoft. We've been bought ahead. And the good news is the saving grace has been Apple for us. Because June and July.
What's McDonald's? What's that doing? McDonald's trying to get above the 50-day. Still basing down here. McDonald's, if you're looking at it, SOXL, semiconductors, inside day. Semiconductors, SOXL. Body of the candles inside of yesterday's range. We did make a new high. We did not make a new low, as you can see over here. So we need it above that 50-day moving average. 21-day, sorry, 21 to 50 days overhead. RSI trying to rise. We got nice volume the past 4 trading days. So maybe they're getting ready for NVIDIA earnings. NVIDIA looking good. It is fading off the high, so going to give you, there goes Apple. Apple going some more. Apple pushing higher. Apple pushing higher. I already have a position in Apple. I haven't added to it. Okay, pre-market high is where I've headed, where I'm looking for price to head. Apple, I have November calls, so I have plenty of time for Apple to retake the 21-day, get back up to the highs. I have November 320 calls. Apple. Okay, Intel's turning. Might be an opportunity on Intel. Intel, if the chips start to catch a bid, Intel catching a bid, chips catching a bid. Okay, Intel's turning off the low. Gold, what's GDX? GDX, gold miners? Yeah, that's a big one there. Gold miners. Yeah, GDX. Good one, Captain.
I have not talked to anybody about yet, so I want to really shift gears here. I would say investors pay too much attention to what's happening in Iran and not enough to China.
Gold miners, opening range breakout. Let's see what the 60-minute looks like on GDX. All right, so look at the 60-minute on Apple, looking really stronger here, much stronger. Volume starting to come in. Let's look at GDX for Captain. Very strong look to it. Okay. All right, it looks good to me. The daily GLD gold coming out of a base. All right, so 1, 2, 3, 4, 5, 6-week base.
That is going to be something that many countries, especially for AI dominance, China, there is a clash that's occurring. We're concerned about Iran, we're concerned about Ukraine. It should be a lot of souls, a lot of lives being lost there, a lot of stupid decisions being made. But the real battle is over minerals and who controls the AI race. And the issue with what we have to do is that every 4.5 years, things change. You know, it may take 6 months for the new administration to reposition, but the different administration has different views and stances on certain things.
Okay, breaking a downtrend too. Gold might be worth a shot. GDX, gold. Let's see what silver looks like. Silver, I'm surprised Cayman's not talking about silver. Silver as well. All right. GDX.
really appreciate joining us to take a closer look. We've got through quite a lot there, so really
Okay, might be worth a shot here. Gold. If inflation starts to pick up, if the Fed starts to raise rates,
John Kaufman is joining us with his trades today from Marvell, Netflix, and Meta. That's next on Trading 60 on Buffett.
nice catch there, Captain. All right, GDX. Let me see what kind of option volume they have on the miners. GDX. Been basing for 6 weeks. GDX, let me go out to at least October, November. Let me go out to December, January. Okay, we got a decent amount of option volume and open interest at the 55 deltas. That'd be 85, 85.90, 85.90 vertical. This is like day one. Day one. Okay. Looks good there. Thank you, Captain. That's a good call. That's a really good call.
So they're the only U.S. telecom company, or really telecom company that owns their own manufacturing facility. I do think that first mover advantage that being said, it's a different industry, so many people just play it safe, make sure everything runs safe, so the regulations are good. So I get it. But I do think that they are going to benefit greatly. I think that the revenue potential could be billions of dollars over the next 10 years.
That was Raul Shah from Doc Shah Financial on potential opportunity for hims and hers if the FDA ends up approving peptides for pharmacy compounding. They are recommending 6 of them for approval. Raul joining me on the latest episode of Market Matters, which is available on your favorite podcast app now. We'll get into the major themes that drive the healthcare sector and also what the future holds for HIMSS, as well as for United Health. You can also find Market Matters on Schwab Network's YouTube channel. But welcome back to Trading 360. I'm, of course, Marley Hayden. It's time for the big 3. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat taking us through the charts, as always. Here to take us through the trades, Don Kaufman, the co-founder of Theo Trade. Don, always great to have you on. We've got a mixed picture on the board, though. S&P's got a new record. Dow's seeing a nice pop to the upside. ADP came in a little bit weak. How are you looking at things right now?
Yeah, let me allow me, if you will, to option geek out on everybody for just a moment. With the upside move.
Low tick alert minus 800.
Low tick alert. All right, so there you go. Apple just turned back down.
Invert the call skew inverted. Now, for those of you that don't necessarily speak option geek, understand the demand is so high to buy at the money and out of the money calls that the implied volatility has actually gone up with the marketplace going up.
So if you will, you can measure this almost as like a crash to the upside, and the unwind of that inverted skew is going to bring some very short-term violent volatility to this marketplace. This is not like an omen that, yeah, we're necessarily going to crash, but look for short-term, very erratic and disconnected broken moves as the hedge on this inverted skew unwinds.
All right, so how does that come into play with your big three selections today? Are any of them potentially getting caught up in that volatility? Because you've got Marvel as your first pick. They've had a pretty significant pop over the last week or so as we've moved back into the semi-trade, but they were really caught up in the pullback.
Look, Marvell is a bear market rally at this particular point in time, and you're exactly right. It is caught up in the midst of this upper. I mean, Marvell has traded from 330. It's topping out around 330, which we're going to see in a moment for Brick, all the way down to 165. It's like over a 50% decline. Then it gets this huge rally back, taking it to about 213 and change where it's trading right now. I think it's a great fade. And when I say fade, I mean, I'm actually going to short, if you will, into this most recent rally, but I'm going to do it with defined risk. And, I'm so transparent about that. Like, I don't want to step in and just try to short actual stock in the midst of a rally like this, because I don't necessarily think I'm going to be able to catch a top or catch a bottom for that matter. But coming in
GDX looks really good, Captain.
Allow, if you will, Marvell to come back into its most recent trend, which has clearly been to the downside. Again, over 50% decline from some of the recent highs. This trade, I'm going to go all the way out to the OCT 16, October already 16. I'm going to buy the 175 puts, and I'm going to sell the 165 puts against its $10 wide put spread, done for a $3.10 debit. Look, this trade, we recently traded, well below this. So again, this trade, right in the zone of where we believe, again, when Marvell gets back into trend, we'll head down to it.
All right, Rick, so as we look here at Marvell, what levels are standing out to you on this chart? There is an earnings event at the end of this month that does come into play with this trade.
Sure. So Don mentioned 175 to 165 or so. 164 right about here is where I had highlighted. So that was a notable supported area at which we saw kind of a double bottom type of activity. So if you were to be looking for like on that long put spread, that stands out as one possible candidate. We also have a gap here. 194, 207 represents where we had an upside gap recently. Recent highs as well include 223. 232 and here 252. We did have an intraday fluctuation below that level, but for the most part, that's where we saw price stop and start. The old support became resistance. So if we do look at our price activity today, we had our gap up. So now we are on pace for a Harami type candle where our smaller red candle is completely contained within the real.
All right, watching GDX, this looks good.
Previous larger green candle, a sign of indecision, of stall in the market here. So a breakout would be important either beyond that 223 level or beyond that 207 level that represents yesterday's respective high and low. So if we were to think about our next set of indicators here, our moving averages, we can see that we have our 5-day, 21-day, and 63-day EMAs all converging together in the low 200s or so, 200 to 210 roughly. So that gives us a confluence point to watch out for either a breakdown point or as a supported area if we're more bullish. So we can also see that RSI has improved somewhat here. We have been rallying, making new relative highs, and we've also crossed above that 50 hit line that separates bearish from bullish momentum.
Okay, NVIDIA still hasn't done anything. The New York Fangs are taking a break. Not surprising. We've had quite a reversal on these. So, I mean, if you look back 5 trading days, I mean, this is just more than I anticipated.
Marvell today down about 1.33% at 2.
That's a hell of a move. Now we're back up to the highs now. Okay, let me just put that on here. Double top potentially.
It's kind of ironic because here's a nice downtrend, but I think Netflix has some legs to the upside here, albeit minimal. Yes, my trade
on Netflix is bullish, but it's only going to be bullish to the point where I think Netflix can actually scrape back and get above 8. After that, I think really all bets are off here. This is one that is definitely caught up in a downtrend. There's no question about it, but it started to have a little bit.
Okay, so either a double top or a pending breakout here. Okay, looks good. I'm gonna make this one solid. Make this dashed.
Just over a month out, step 18 is going to buy the 77 calls.
Yeah, that looks good.
So it's a very tight $3 wide spread done for a 90-cent debit. The only reason I'm using a $3 wide spread is because, quite frankly, I don't see the rally anything beyond 80 at this point as being necessarily sustainable. So get to 80, pulls back, but
Wow, this is the first time I've seen this guy post something bullish. Okay, Intel still looking pretty good here. Intel.
All right, Rick. So as you look at the technicals here, are you seeing a chance of us to get back up towards that 80 level?
Well, 78 to 80 is the level that I could as well. The reason why 78 being that break-even level for the trade, that's a gap level right here. So roughly 78 to 80 represents that gap area here. You can also see that 78 mark was resistance down further. So we haven't quite cracked above that level yet. So that stands out as an area to watch going forward. Another gap here around 73. Recent lows and subsequent highs, then lows once again as well. Here, did also have
All right, looking good.
65. Quite a drop from those old highs here. 126. We're down 41%, 42% from that point. So a pretty rough road for Netflix traders here. We can see
All right, they're talking Netflix on Schwab. GDX looks good. GDX looks good. Nice catch, Captain. I can't tell you how many weeks I've been looking at gold every week. Been watching it about what, 6 months ago? Nah, it wasn't that long ago. It was in June. Was it June? HCPG was no, it was over here. It was over here in March. HCPG was talking about potential for a bounce and a follow through. It did bounce, but it got rejected. 50-day just kept dropping. This is a pretty long base now. This base about 6 weeks. So we're definitely breaking a downtrend. Definitely breaking a downtrend. Okay, so that looks good. Actually, I want to pull this up here. Up there. More points of contact along this level.
Earnings, but still a lot of concerns about that CapEx number. Still down year to date, not as much as Tesla, but second worst performer in the Mag 7. So how
All right, so that looks good. We're breaking above the 50-day. You know how I think about the 50-day as a key area to watch. 10 to 12 weeks on the S&P. We break higher. Today, we're just kind of consolidating. I'm going to take a 2-minute break. I'll be right back.
This clearly in the real world. I hope you got some water out there.
Yeah, let's try that again. Another stock that we're watching today, by the way, is Shopify. Absolutely surging. Actually, at one point in the section, the most since 2015, continues to hit top line 6 consecutive quarters. And that's the direction of listening. It's interesting. One that we cover in the e-commerce space, but it continues to have lots of momentum and is growing super fast. It is an astonishingly busy earnings period. Force. This is what's to come. It's going to bring down the trends from AMD and Disney. And this is how this stocks are in this Wednesday session. Okay, everybody take a breath. It's halftime here in San Francisco, the beautiful city of
to rotate skews. If the stock is flat, the difference and finally task with the stock. So to create the price quality give us a shout. Check out this. So yesterday I'm just sitting right here, killing some time. Seriously need to get back to see what shop the fuck is on your side. Just like me.
If your self tanner isn't white, throw it out. Most self tanners are full of diamonds. Here's a benefit. Beauty by Earth is one of the only non-toxic self tanners I've seen. So beauty here, even better results.
This is what technology is. So SpaceX is the big one in storage. It's basically flattens. With SpaceX, there's been limited effect. Then there's the there's the continuing ATH. Expected second things yesterday. That wasn't enough for the first one. Given that it's important to send so big focus. So minus 300 million. The same thing for this factory.
All right, so GDX looking good. I think a lot of people have seen it now. Starting to see NVIDIA bounce. NVIDIA starting to bounce. VWAP. Volume starting to pick up a little bit. Okay, up-down volume still kind of complacent. Not much going on here. Let's see charts. Yeah, 1-to-1. It's a little bit more skewed 2-to-1 on the Qs, 1.5 on the SPY, 1.5 on the NASDAQ Composite, 2.3 Still pretty much doji, slight downward movement. Watching NVIDIA for a bounce here. NVIDIA watching for a bounce. NVIDIA looking for a bounce. Oh boy, kind of a boring day. Slight downward sloping. Hedge flows still have not turned. We're easing below specific support levels. The next one is 77.20. NVIDIA is trying to turn up. Watch NVIDIA. NVIDIA looking for it to push off a VWAP. Flat VWAP for now. 1-to-1 up down volume. The banks look good. The materials look good. The metals and mining, as Captain mentioned. Freeport pushing higher. Freeport gapping up. Okay, Newmont mining. What was it? Junior miners. What are the junior miners? Miners, M-I-N-E-R-S. Junior miners. GDXJ also pushing higher. GDXJ, as you would imagine.
Well, we're seeing a really strong performance for this quarter. We're seeing very strong experiences despite the macro uncertainty.
All right, SNDK. Okay, along with some of the other semiconductors and memory stocks, watching those. Micron. Okay, SK Hynix. These all look pretty good.
They managed to release Toy Story 5 this quarter and resonated very well with the audience. It also helped to push up their customer products to the highest grossing 20 quarters.
Let's listen a little bit to what Dr. Mark said about the entertainment business, the streaming business, and what's in the pipeline.
Our ability to outperform higher
All right, these all look good on the 60-minute time frame. Okay, NVIDIA. Okay, Intel. All of these are bid off the dip. So if you look at anything chip-wise, you can see these are all starting to turn up. Intel turning up. Intel turning up more forcefully.
Disney's greatest competitive advantage is what I call the IP flywheel. So it has one of the strongest and most monetized
Intel.
in the media industry. And so
Okay, it looks good on the daily, right? I mean, Intel, it's been off. It's basing. It's the 9 and 21 are going to cross back up. MACD stochastic. Everything looks good. Everything looks good to me. So maybe put credits or going long. Just make sure you have enough time.
but there's still a
11,000 of the 100 strike calls have traded. That's a 57 delta. I might buy some of these actually. 100, 120, 100, 110.
Contribution from parks, right, particularly to profit. Disney, you know, from a stock perspective, I think it's trading at 13 times forward 12-month earnings. I'm still asking the question, is Disney a technology company focused on streaming, or do we still continue to model?
All right, I bought some September 100s Intel.
I think you can't really say they're a streaming company because they're still seeing very strong on their experiences. They're also trying to invest very heavily for long-term.
That is a 57 Delta, 57 Deltas.
In Disneyland, of course, near Disney Abu Dhabi. They're also trying to add more cruise ships, 5 more cruise ships by 2031, and all these additions are going to drive long-term revenue to Disney. So I think it would be a little bit unfair to just categorize them
Intel.
as a streaming company. It's more like a company that's one of its kind that has competitive strength in its IP.
It's still early days in the Josh D'Amaro era of Disney, but how do you assess his leadership of the company and what he's tried to implement?
Well, I think
All right, let's see. Intel looking good, coming off the low pretty quickly.
before he left, he already said that Josh is ready and he's more than ready to bring the company in the correct direction. I think right now Disney, they've already managed to fix so many problems they used to have. So they're and previously now streaming is profitable, costs have come down, parks are still generating strong cash flow. So I do think it's going for the right direction.
What Josh D'Amaro can post since about mid-March. What's the next catalyst? What happens in the balance of the year with Disney that you're looking at?
SNXX, SNX. Okay.
Collaboration with TikTok. So that's quite interesting to me because Disney has always been really protective of its IP usage because that's their core competitive advantage. So this collaboration is Disney acknowledging that customer behavior have changed. They're trying to embrace the changes. I mean, Disney Plus, previously they compete mainly streaming companies and Netflix, but now because consumers, they spend so much time on screen time on TikTok, YouTube Shorts, all those short video platforms. So they are trying to embrace the new trend as well. And I think it will also help Disney for their engagement problem. The current problem that Disney Plus had is users will click onto Disney Plus to watch a specific content they want to watch, and then they will close it. So unlike TikTok, TikTok managed to convince their user to open the app multiple times in a day. So if they're able to guide that kind of traffic into Disney Plus, then customers will open Disney Plus so many times.
Apple, no follow through yet. NVIDIA trying to push a bit higher. Okay, AMD, Intel. Okay, Intel, nice little rip here, Intel.
Troubled situational awarenesses, public stock portfolio at a discount. The deal helped lift Wellington's gains for the year to 12%, underscoring Citadel's ability to profit from market turmoil, while many AI-focused hedge funds were hit by the tech sell-off. Okay, coming up, Zeus will soon start charging for its rides in Las Vegas, marking a milestone for the robotaxi company and for the industry. We're going to speak with the CEO. This is Bloomberg Tech.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are lowest cost.
Intel looking good.
And backed by research from hundreds of global experts, delivering benchmarks driven by the market, not opinions. Bloomberg Equity Indices, evolve benchmarks for today's skews, learning, intelligence, your people and your AI learn together. Good change.
SK Hynix looking for that to push a bit higher. All right, SK Hynix. Okay, we're above the pre-market high. There's a lack of momentum. It's like not doing anything. What a stupid commercial. I think you already know I really hate these commercials getting people to download these stupid games, spend money on it, waste your time. Ugh. So the chips look like they're bid a little bit here. SK Hynix, but it doesn't feel like institutions are buying. It feels like small traders are playing these trends. Like Nvidia is not moving much. And you can see the volume's not that great. No follow through. Intel, same thing, Intel. It is gradually moving higher. There are some people buying. There's a lot of option volume, a lot of flow.
Games every week. Haven't repeated yet. It's been months. Lavish luck. And you haven't gotten bored? Month 4, not bored.
Intel, let's see, Intel.
The daily rewards are honestly generous. Bless them, play for a bit, that's it. What's the rating? 4.7. On what? Trustful. I checked. I'm not downloading random. Spell it LAVISH. You're never wrong.
There's a lot of volume. Intel, a lot of volume. At the 100 strike. We're in the money. All right, looking for Intel to push a bit higher. S&P just grinding along. Probably frustrating a lot of people. Just kind of drifting lower. Each support level. There's not a lot of volume, so let's see what's trading here. Let's see.
It's in Vegas next week, marking a big commercial milestone for the company and a first for a steering wheel.
77.20 is the next level now, looks like. 77.20. We hit 77.40. 77.20 is another level. S&P. $77.20 is down here. 77.20 GEX. It looks like we're headed down to 77.20. There's a gap here. Okay, the gap. Actually, that's what I was showing, the gap. All right, there's a gap. Intel still driving a bit higher. Pre-market highs right there. Intel still driving a bit higher. S&P still fading. The Qs also fading down to a low. Looks like we're trying to bottom here. Trying to bottom on the Qs. Pre-market high is overhead. Opening range high is way up here. Okay, so we did fade the open, obviously. IWM, same thing. 10-year yield, US 10-year. Okay, we want that back down. US 10-year, we want that much lower. We want that lower. 10-year yield has bottomed. VIX. VIX fading from the high, so that's good. The commodities, Deutsche Bank commodities, have faded below the 50-day. Watching that. GDX, pointed out by Captain in the room. GDX looks good. We are fading from the high at the moment. GDX, opening range breakout. S&P still driving lower, S&P. Okay, we're going to fill the gap now. Once again, we've consolidated for 10 to 12 weeks. S&P consolidated for 10 to 12 weeks. Okay, here is New York Bank components all fading for the most part. After a tremendous move the last 4 trading days. So is it a double top or a pending breakout? RSI still strong. MACD stochastic. Momentum is with the bulls. But we are fading. There's no bid. It's just like a lack of volume. Maybe institutions are waiting for people to sell. We'll see. Advanced decline percent. Still pointing lower. Netflix fading. Our New York things aren't doing much. GDX. Miners. Nice look to it. We are at the high right now, taking a break. Dow Jones. All right, you can see the difference. This was all green yesterday. Only growth is up a little bit. Everything else is down today. Sector-wise, we've got materials, healthcare, metals, and mining. These are higher. Materials. Okay. Real estate. Okay. Amgen, NVIDIA. looking for a bounce. NVIDIA trying to hold on to VWAP. Okay, we just filled the gap. Just filled the gap.
The big three in the United States, AT&T, Verizon, and T-Mobile.
All right, we just filled the gap. We'll see if we continue to move lower.
I anticipate us to be able to acquire quite a few of their customers. So I think our service will be better. We will eliminate dead zones, leveraging basically the satellites in orbit.
That was SpaceX President Gwynne Shotwell speaking on yesterday's earnings call and outlining the company's wireless ambitions. Bloomberg Intelligence analyst George Ferguson says the connectivity business should continue to benefit from steady growth in subscribers and expanding satellite capacity. And George joins us now. There's a lot in that, but basically they said we're going to combine the work that they've done in satellite space connectivity, Starlink, direct to cell with terrestrial investments, and go after the US carriers. How did you react to that?
All right, so we haven't, we're not bouncing yet.
Companies, you know, talk since the earnings, those terrestrial carriers, the discussion around it seemed pretty aggressive, right? I think they talked about running most of broadband in a decade or something like that. And, yeah, you know, near term when we discuss the technology they have here, right? Look, I think.
Okay, so we know what the S&P is doing. Intel trying to get back to the pre-market high. Okay, pre-market, we hit this level over here. That's your pre-market high. Opening range high, we hit that and then reversed along with everything else.
And take a lot of share. Pointing to yesterday, and I sort of closed my comments initially, is that, look, I don't think those carriers are going to roll over and just give all their customers away, you know, to SpaceX. So I think you have a good old fashioned, you know, price fight on your hands. So I'm not sure that you're going to get everything you think it's worth, even if you go.
Broadcom stocks are just sitting here.
I mean, Greenfield said they will acquire those customers, and you know that word acquire didn't work. Let's go back to the core earnings outlook thesis. SpaceX's losses generally overall narrowed, in part because the connectivity business is still the cash cow.
Yeah, that's agreed. But I mean, look, I was one of the things I kind of hate to do as an analyst is to take a look at sort of 6 months.
Fossil, the watch company, accessories, $6. Garmin, that popped last week. Garmin, still pushing a bit higher. Garmin, Expedia, travel and leisure, Expedia.
It was a flash business. It looks about as good this year at this point as it looked last year.
S&P still fading.
They grew revenues 50%. They grew profit like 46%. So margins, you know, a little bit deteriorated. So it's okay. It's performing okay. Thank you.
NVIDIA.
You know, they you know, 6 times or something. Sorry, 1.3 times the cost was 6 times. So it's kind of hard to win at that. So
right. George Ferguson of Bloomberg Intelligence. Thank you for your service looking at the numbers. That does it in this edition of Bloomberg Tech. Tune in tomorrow. We're going to speak to the CEO of Western Digital after their earnings.
Flat VWAP.
It was a big show. Recap on the podcast. You know where to find it. This is Bloomberg Tech.
Okay, hedge flows are falling off. Dealers are selling futures, obviously.
Strawberry watermelon. That's good. Cheers, everybody.
Weighted indices, weighted sectors are all bearish for now. Two 60-minute candles, very bearish, a London high.
What others miss, and certified analysts turn it into clear, actionable guidance.
Negative gamma. Okay, returns, negative gamma. So we have selling into weakness. Dealers will be selling into weakness. You can see that dealer hedge flow is dropping.
Live from Bloomberg World Headquarters in New York City, we're tracking the key players, the major moves, and the capital flow shaping global markets. This is Bloomberg Deals.
Welcome to another episode of Bloomberg Deals, the only show dedicated to corporate action reshaping markets. In today's show, Poly Market seeks a new raise that would bring the valuation to $20 billion, doubling its value in less than a year. And it could be the largest pharma deal ever, but investors are throwing cold water on it. Reports conflict over AstraZeneca exploring a purchase of Bristol Myers. We'll break that down. And in just moments from now, we'll be speaking with Jeff Smith, CEO of Starboard, who has several activist campaigns underway. First, let's get to some of the big deals that we are watching, and starting with the deal, it feels like we're literally watching. It's an update on the lawsuit against Paramount Skydance's acquisition of Warner Brothers. That trial set for March of 2027. CEO David Ellison spoke about it on the company's earnings call Tuesday.
We remain highly confident that this transaction will close, and we're preparing for basic successful completion. If you take a step back and just look at exactly where we are today, we received approval from basically, 65.
Volume looks good. We're just a little ahead of ourselves, a big gap up and follow through to new all-time highs. Giving back some of those gains.
So what's the latest now? Is the lawyer set a date for this trial?
AMD is trying to turn up. Here's NVIDIA, Intel, AMD, SNDK, Micron. They're doing okay. Micron. Looking for prices to turn back up. Micron. SK Hynix. So tech is taking a break at the moment. We got metals and mining with a bid. GDX did come back off the highs for now. S&P is still moving lower. S&P filled the gap, and now it's dropping lower.
Between AstraZeneca and Bristol Myers, conflicting reports. What do you hear from your sources about how serious these conversations might have been and what it would actually mean to have the two of them?
So it is a tricky one because
There's just not a lot of volume here, sitting here, options.
between Bristol Myers and AstraZeneca, we reported say that there have been some talks, however, preliminary. Both companies are, of course, refusing to comment on the status.
77.20.
Sunday, the reaction Monday wasn't great.
Excuse me.
BMS shares were basically flat, and normally when you see a company subject to potential takeover, their shares will move a lot more. And analysts really question the logic. because its stock is has a lot of promise, you know, they have a lot of growth out of them. While BMS has been kind of thought of as like the sick man of the industry, their EPS is supposed to shrink over the coming years, and so there's just a lot of question about the
No bid. Intel's trying to push a bit higher. No bid in the S&P. Intel trying to move against the grain, moving upstream like the salmon. Okay, Intel on the move here. Intel. Pre-market high. Are the Qs turning at all? They made a new low. Trying to turn up. Intel. NVIDIA. Micron. Okay, these are trying to turn. SNDK. Seagate Technology. Seagate Technology with opening range breakouts. It is 12 o'clock, so let's see what they're talking about over on CNBC.
More businesses like detergent and diapers. Earlier this year, Unilever bought
Lines AlphaFold Breakthrough. Now, also as part of this reorg, you have Karai Kabukoglu, who will take over day-to-day leadership as the head of Line. He's already been running much of the lab's model research since becoming Google's chief AI architect last year. So the company is framing this as a natural
Intel.
And then second, longtime chief scientist Jeff decades to start a new company and several other employees plans to invest in that startup, which will also partner with cloud. Mr. Georgia, rather, is said to be amicable and doesn't plan to replace Dean as chief scientist. That position was really created.
Intel moving above the pre-market high.
So this comes after a series of that's how
Context. Especially that back. Thank you. Okay, that's Mackenzie Segal's whole bunch, but obviously the shares down a little more than 3%. I want to get back to our conversation though on where this market is going to go. 8250 conservative, potentially according to Yardeni, because of the earnings story. It's no longer FOMO, it's FEMO. It's the earnings momentum that this market has, and that's what he has been hanging his hat on. And as you heard John Waldman suggest too, broadening earnings story. Just tell me about what tech is doing. I get that the numbers are enormous in terms of earnings growth, but if you're talking about 12% for other areas of the market, that's pretty darn good too.
I think it's very difficult to get you've got internal strength. So 73% of the S&P above its 200-day moving average had this huge rebound after momentum washout. Momentum that Joe is the expert in here, but I think the risk on this momentum rebound is that it is just that, with rebound, and you could see it come back off of this strong momentum right now. Yeah, and right? I mean, semis went down 30% in that washout, so momentum died. I'm sure it was very frustrating for Joe and some of that, but you usually do get a swift bounce. This is actually one of the swiftest bounces we've ever seen. So
yeah, the fastest declines. Yeah, they're one of the fastest bounce backs that we've ever seen also.
So the risk is that it cools off, right? That it came back a little bit too strong. But there are a lot of other things to be positive about. Financials are still strong. I always look at financials as confirmation of a rally and confirmation of cyclicality.
Hedge flows still have not turned up. Hedge flows still haven't turned up.
So I do think that for the rest of the year, we see
Got some pretty decent resistance here at 77.45.
Year to date, I think that in the second half of the year, we see a return to large caps because I do expect volatility, but I also do expect this market to continue moving higher. I mean, 8,000 is only 3.5%.
Yeah, I know. It's funny asking the same thing. Next stock, it's like new.
It's literally around the corner. It looks like it's almost a, dare you say, a formality at this point. But if the earnings continue to live up to the hype, why wouldn't you get there? Then you have to start asking the Yardeni question, 82.50, whether Jason Snipe that's a little too conservative, and maybe part of that hinges on
Oh boy.
that are being talked about elsewhere on the street today. Jonathan Krinsky says the reflex continues, but shades of 2000 continue to pop up. How quickly things change, he says. A week ago, semis were at 30%, around 30% drawdown. We called time on the momentum unwind. Fast forward to today, we've seen the largest 4-day rally for the stocks.
All right, we continue to move lower. S&P, no stopping right now. VIX did bounce and then sold off. VIX, pretty interesting.
Setup has been interesting to me in the sense that July was down. You talk about the drawdown in semis and
All right, Bloom Energy. I found it very interesting, Bloom Energy. I didn't know exactly what they did. I knew they did energy, but I didn't know that they were selling these what do they call them? Hydrogen fuel cells. The CEO started working on hydrogen fuel cells back in the 2000s, I guess, 2000, early 2000s, perfected it. Now Google uses it to run some of their data centers. Oracle's using them. It's pretty cool technology. It sells these units are really cool. Oracle uses them. Google uses them. Hydrogen fuel cells. So it's a really cool technology that's taking over. Okay, watching Intel here. AMD looking a little better. Intel looking okay. Okay, we only have the number of stocks advancing here. We only have 226. It's nearly half of the S&P 500. Core 1M has risen thanks to the drop in vol and single stocks. We got 33 stocks advancing on the Q. So the Q is not getting as much action. Tech side. Still looking for a bounce. Have yet to see a bounce. Hedge flows just continue to move lower. So dealers are selling into weakness.
So far away, I feel like by design. Just meet you immediately. Full time, full show every day.
Snowflake, Datadog. There's just no bid in the markets. Amazon at the low here. Okay, Intel trying to push higher. Up against the pre-market high. Need to pop through this level or just get it over with. Rejection wise. 21 day, 50 days overhead, Intel. 200 days down below.
Same with Apple, same with many of these stocks. I'm simply pointing out that the math is very favorable. I don't think momentum's going to swoon again, but you don't need much from momentum for those records to be hit.
Let's throw up Google, Alphabet, intraday, because we had the news of, around departures related to DeepMind. Stocks at the lows of the day down 5%. So that's a significant move. How are we thinking about that as we're trying to assess company by company who's got it and who doesn't, and who's going to be a winner and who may not be? Certain companies that were deemed to be in leadership roles at certain periods of time have then had their roles questioned. I wonder what who's in this name? All right, what do you think about? What do you think about this?
I think Google Cloud revenue growth 82%. Yep. I think revenue growth 24%. That's what's important to me. I think this is a knee-jerk reaction. I think the market
Intel's starting to move above the pre-market high. Intel.
Intellectual capital, that's normal. It's normal in an environment where the stock has had a really strong rally off of earnings, but I don't think this is anything more than a near-term reaction.
Chief scientist is leaving after 27 years.
Okay. And I'm sure that there is, I know you're playing the other side, but there is a very strong team that's in place. And I don't think that means the cloud revenue growth is going to slowly deteriorate because we're seeing an executive leave the company. I think this move to the downside is an overreaction. Again, and Joe, you said that. I'm surprised by it. I think that there is a lot more talent in the overall AI industry than just one or two or three individuals. Clearly, these are important individuals. Nonetheless, I mean, Gemini has now gone through many versions. This is not a one-man show or even a three-man show. I am surprised by this. Joe, you pointed out the web services. I would also point out the chips at Google. I would point out search. I would point out YouTube. I would point out Waymo. This is an overreaction.
Yeah, we're talking about one of
Intel still driving.
Strategy. This is not, a desk filler.
There's no doubt, and I think continuity at this level of leadership is extremely important as we kind of fight through this AI race. And there's obviously some other significant players, but to Joe's point, I mean, and this is what I said earlier in terms of visibility of pockets with all the capex that we've seen, 82% cloud growth. Last quarter was 60 plus. I mean, this is significant runway. I know the stock traded down because of negative free cash flow, but it retraced back. This to me is a viable opportunity.
The deputy's taking over. So it's someone that's sitting right there alongside of an executive that has led.
Okay, we're starting to see a little turn here in the S&P. They might be covering now.
Reasons on the other side of the earnings report, stock's down about 9%. It was down more than 10, I think. So it's a little bit off of that level. Their AI costs are soaring. I don't know if anybody is actually surprised, by that. The
Hedge flows have yet to turn.
How is this company going to be defined by those internally, and how are investors going to define it on the outside? Are they going to be more viewed as a hyperscaler type business, investing heavily into the AI future? Well, their AI costs are soaring, and I guess the market's not happy about that. But you also have the lockup, which comes tomorrow, and then you have a stair step as well, which is going to be significant in terms of the supply coming on the market after that. You do have a number of target raises and lowered today, which is interesting. The battle on the street over where this company, at least in the near term, is going. Kevin Simpson's been a shareholder. He joins us now. We wanted to get his take, hear from somebody who's got some skin in the game on this. So what's your feeling after the report, knowing the lockup is coming? I've got 3 targets that are lower today and then a couple that are going up. So where would you come down on it?
Yeah, I mean, I think that there's a good reason to be oscillating back and forth in terms of price targets, Scott. But if we break it down, just looking at the
Okay, a little short covering, it looks like.
was fantastic.
Now, the stock reaction was a completely different story. These things are not moving in lockstep. And I think that makes sense because my enthusiasm for this business hasn't waned at all, but it's far different than my enthusiasm in the stock. In large part, Scott, because of the lockup that you mentioned. The first of which we're going to see tomorrow hit the street. I want to wait and see how this stock trades as we see how these
Intel pushing a bit higher. Intel, S&P. All right, it just looks like some profit taking. This is a gap right here.
Starlink revenue is up 66 billion. AI revenue grew 247%, but it's that $18.4 billion of capex that causes the problem for the street. And they're just like,
Okay, Intel
Microsoft,
still pushing a bit higher. Intel.
if you're going to spend this kind of money, you need to show the shareholder that there's some path to a return on investment. And I'm not sure that that's a story for the next quarter or two, but I think as an investor, if you're 2, 3, 4 years into the future, this is an incredible business. We're going to own it, but interestingly, we have not added to it. We put a 0.5% position in the QDevo Growth ETF at 160 because it was included in the ETF. And we've watched it come down patiently. And just because a stock pulls back doesn't mean you need to add to it. I imagine that we will, but I want to see how it trades with these new shares as part of the marketplace.
How much of the lockup do you think is already in the
Intel.
You know, it's come down.
All right, we're starting to catch a bid off the low here.
I mean, I'll be surprised if this thing sells off a lot tomorrow because of it. You're talking about a stock, Scott, that's down $100, almost 50%.
Cerebra's turning up. SpaceX coming off the low. Apple turning up. Nvidia's trying to catch a bid. Okay, looks like short's covering now.
This is a 24-year-old business. It was an inaugural report. It was really, really good in one hand, but that capex is a big deal. This lockup is a big deal. And I'm sure that Jimmy's sweating from a valuation standpoint, saying, you know, I can't value this stock. And I don't disagree with him, but I feel like this is such a revolutionary, generational change in business if it works down the road. We know about Starlink. We know about the AI investment. Can they monetize it? It can make Starship a reality. The sky's the limit.
Yeah, we'll have to wait and see on that. We know that. Thanks, Kevin Simpson, joining us with his commentary around that. NVIDIA's up today. It is the only of the mega cap tech names that actually is green now, and it's nearly a 4% move. We think in part because Elon Musk gave the company an endorsement as part of the SpaceX earnings call, said they have the best AI computer. That's a quote. So NVIDIA's up on that. Melius is talking about, they love the endorsement. How could you not, given what he said? What do you think?
About NVIDIA or SpaceX?
No,
I mean, NVIDIA, I think this, you can buy it right here, just to cut to the chase.
Buy NVIDIA right here.
Yep, I do. New money that comes into accounts at our firm, we're putting in NVIDIA. We're not hesitating, by the way. It's about 6-ish, 7-ish% away from all-time high.
All right, so nice Intel's catching a bid here. All right, moving a bit higher. Opening range high is overhead.
Demand that it can supply for the foreseeable future. And its multiple, roughly 19 times, 20 times forward earnings, is to me attractive, given the earnings per share growth rate that it's around 30-35%.
Okay. The other semiconductor name that I want to look at is AMD, because I see it down almost 6%, despite what was a good earnings report. I don't know what you could pick at and not like. What do you think?
I think Elon Musk spoke at length about Vera Rubin chips and the relationship with SpaceX and NVIDIA. We didn't hear very much about AMD. Now, AMD has relations with Meta, OpenAI, and Anthropic, but in return, there are warrants on 160 million shares there. Much different relationship. You could also look at NVIDIA relative to AMD. By the way, nothing, like you said, Scott, nothing wrong with AMD's earnings, except what we heard.
Intel continues to push back to opening range highs.
Out of AMD, but it does remind people, when you look at the forward multiple, you're looking at AMD, mid-40s, you're looking at NVIDIA, somewhere around 19.5. And I agree with Jimmy. NVIDIA, it is literally a hanging curveball down the middle.
I bought it at 199. I got stopped out at 193 while you were on vacation. I said it's the next Apple. I'm 100% right in what I saw, and I handled the position wrong. It's going to a new all-time high. Okay. Now away from tech, Disney. Let's take a look. That's a nice winner today. What was that? Was that now you love it again? It's the share price. The share price is driving again. What? You love it again? I don't.
What a jerk. What a jerk.
My conundrum is the operating results from the company, in my opinion, are pretty darn good. I don't care if you look at entertainment, theme parks, streaming, and I think there's great potential, by the way, in the studio.
Okay, we need to see that hedge flow start to trend higher now. If you're bullish, all right, NVIDIA turning back up. Intel looks pretty good.
And yet, what are we up? 2%? Stock trades, I'm not going to look right this minute, but about 14 times forward earnings. You think it should be up more? Is that what you're suggesting? I do. Here's my conundrum. I think the company itself is doing really well, but the stock just isn't. And it leaves me where I was yesterday, considering how much of a mistake am I making here? Am I being patient or am I being stubborn? Now, I'm not selling it today, but clearly in my language, to answer your original question, no, I don't love it because I don't love what the share price is. It should be up to 100%. And has nothing to do with earnings. So this is a market that wants to get behind the underdog. This is a market that wants to get behind the underperformance. Look at what happened to Microsoft. Look at what happened to Palantir. Now you see Disney today, and it's only up 1.9%. Stock is down.
All right, there goes NVIDIA. Okay, NVIDIA is starting to turn up. Here goes Intel. Intel, nice entry. Below VWAP, following through, continuation. NVIDIA also looking good. NVIDIA, nice turn. All right, that's looking good. NVIDIA.
Say that maybe there's going to be more M&A. Maybe that's what's holding this stock back. I know there are obviously some cable channels that have spun out recently and will be spinning out. And maybe the market's worried that Disney's going to enter that scrum, if you will, and pay too much for something. They did with Fox 5-6 years ago, whenever that was. So maybe that's what's holding it. Okay, we have some news crossing about Shake Shack. Brandon Gomez has those details for us. What are we looking here, Brandon?
Hey, Scott, that's right. Starbird's Jeff Smith on Bloomberg just now saying he's taking a stake in Shake Shack, calling it, quote, too cheap. They said it's a several $100 million stake and that they may now be the largest shareholder, not yet confirmed. We know as of Q1 they didn't hold the stock. We'll get 13Fs next Friday. More details possibly then. That will indicate timing of the stake that he's taken, but you can see shares now popping about 8%.
Oh, shit.
They also had earnings this morning, but right now reacting to that news.
Okay, we appreciate that. Stock's getting a big jump. We're making a call to Josh Brown as we speak for obvious reasons. He might be a shake back. Right? Probably if he's watching right now, he's feeling pretty good. And I'm sure he would agree with Jeff Smith, who thinks it's too cheap. We'll see if we can get him on the line, see what he has to say about that. Let's do quickly, I mentioned financials, having this move over a month. Private equity's been great too. So Shake Shack's up almost 10%. We try to get Josh on the line. See what happens. Apollo reiterated overweight today. Jason, you want to take that? It's been a nice move for private equity.
Yeah, it has. And I think as it relates to Apollo's still down around 10%. Fee-related earnings were up to $785 million, up 25%, which is a record quarter for them. Insurance spread income really drove some of these results, and private equity has been performing better. But I think for me, I need to see those monetizations continue to pick up to see the stock.
I think one of the reasons why private equity is trading better is software is trading better. I think there's a very strong correlation between the two. We identified that previously. I think that's important. I also think it's benefiting from this environment where the market was the underdog and the underperformance in private equity certainly characterizes itself. Okay, that's my good observation.
AMD.
Let's take a break. We come back.
SK Hynix, SKHY.
Related moves in Joe's ETF. So we need to discuss that relative to what Toby Holdings is doing today. So calls of the day related to consumers as well. We're back right after this.
All right, looks good. Looking good here. All right, looks good. Okay. All right, goes SK Hynix taking off to the upside. Okay. Okay, SK Hynix breaking out. Intel breaking above the opening range high. Intel. Okay, NVIDIA looking for it to get back above its opening range high. And SK Hynix, that's breaking above its opening range high right now. Okay, SK Hynix looking good.
Josh Brown's on the phone. We wanted to get his take on this news from Jeff Smith of Starboard. A new position in Shake Shack calls it too cheap. Company had earnings today. Stocks up now almost 11.5%.
Wow, Shake Shack up 11%.
Look, as a long-term shareholder, it's very clear that this is the company that has a stated trajectory of getting
Shake Shack, I was surprised. I thought Shake Shack was like, you know, a really high end. It's like Jack in the Box or any other place. I don't think it's that impressive. I wasn't really impressed. I don't like to eat those at those kind of places anyway. I don't know. Just an observation. Intel hit the high, opening range high. Can we follow through? Intel? All right, Cerebras, CBRS Cerebras. Okay, pre-market high, opening range high, same place.
Activist-related play. What are some potential moves that you think would be wise for this company to perhaps do? And I don't know, frankly, I don't have enough information to know if this is a pure activist role, if it's a more passive position that he just thinks the stock is cheap. I'm not exactly sure, but have you thought about bigger picture? If an activist was to get in this name, and let's look at a longer term chart. By the way, as we answer this question, just to see what the stock has done.
Okay, Cerebras also turning up, looks good.
Guys, please. Like I don't know, for 3 years, give me as you answer that question, Josh.
Yeah, so we know what needs fixing and what doesn't. Let's start with what doesn't need fixing. I'm sure Starboard looks at this and says, okay, they have prime locations everywhere that you would want them. They're in every major shopping district. They're in the airports. They're in every major city at this point. They're near ballparks. They're in places with heavy consumer foot traffic, and they've done a great job picking site locations. I would give them an A. I'd give them a B on getting the drive-thrus open, getting enough users on the app, and just building that digital future, but it's a work in progress. So I wouldn't say it's an A, but it's not a C. They're succeeding there. What are they doing wrong?
Intel.
The first thing to understand is why did this stock come down from 130 to the 50s? They shocked the street last quarter with a surprise loss. Why did they have a surprise loss? They claim that the price of paper goods surprised them to the upside, and the price of red meat. I think they were paying $6.75 a pound at one point this winter. Now, some of that is just the whole daisy chain of events because of Iran and the military action and the price of crude oil and blah, 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 blah. But in the end, you should not have a business this mature that shocks Wall Street to this extent, where they go from a profit to a loss. There's obviously operational things that could be improved. And I would bet they're not buying several $100 million worth of stock to just sit back and hope things get better. I would bet that there are constructive conversations taking place already, and that those conversations could end up with a board seat. And I think you're a shareholder. This is exactly what you would like to see. Every company needs help from time to time. This
NVIDIA.
huge potential, and anyone that wants to come in here on the equity side and help them reach that potential should be welcomed with open arms.
S&P. S&P 500.
I've got Joe, I'm going to bring into the conversation. I mean, Engaged was here.
Okay, Intel. SK Hynix.
Was pushing for the same sort of
SK Hynix. Okay, hit the opening range high, got rejected.
Not resonating. I don't know. I don't know enough about sort of what sort of operational improvements they were pushing for and what may still have to happen if there's some kind of disconnect over what some investors think needs to happen and what hasn't. And that's why the chart looks the way it does. I think it's at 35% year to date, but over the longer period of time of the chart that we had thrown up, it's, you draw lines straight across from where you were to where you are.
Yeah, this is a paradigm shift, though. This is important because Jeff Smith and the Starboard team have excelled in quick serve restaurant activism. Go back to 2014 with Darden. They replaced the
S&P doesn't look like it wants to continue. It looks like it's starting to taper off now. Okay, so it needs to continue. Hedge flows need to continue higher.
Remember this thing from 10 years ago as it related to Olive Garden. This is how active Jeff and the team gets. They changed Olive Garden's cook strategy. And as an Italian, I know this. Boiling the pasta, they weren't using salt. They weren't using salt in the pasta. Jeff and Starboard made them boil the pasta water with salt. That's how engaged they were. He did this at Papa John's.
Was it doing it al dente or no?
I'm sure after Jeff got
Yuck, 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 yuck.
Papa John's executive chairman after COVID, and he was able to turn that around. He will be active here. He'll be engaged. And I would imagine he's going to be on board.
Josh, I'll give you the last
Intel looks good.
The last word is I'm just picturing Joe in the joint slicing the garlic with a razor blade. Okay, that's all I got.
All right, I'll leave it. I appreciate you calling in.
That's pretty funny.
Take, obviously. Stock's up 11%. Seema's got the news update for us. Hi there.
Hey, Scott, here are the stories we're watching at this hour. The FAA says its preliminary review found a momentary loss of separation.
Something to note on Intel. Okay. I occasionally will look at the Appel 3 MACD time frame. You got the short term, intermediate term, and the long term is about to cross over. Long term is telling you that's a swing, longer term swing. The intermediate or default time frame 1226, intermediate time frame 1226.9. That's telling you swing, that this is looking good. The momentum is clearly more bullish, higher highs, higher lows. So Intel, just make sure you have enough time. This looks pretty good, actually.
Stop financing it and plans to make golfers majority equity holders. Scott, that's the latest back to you.
Seema, thanks so much. Seema Modi. Up next, we'll talk about some movers. Again, I mentioned booking
Intel looks good.
Up a bunch on the earnings. Joe just got rid of a bunch of names in that group.
S&P making a higher low. S&P is making a higher low, looking for more upside. Need hedge flows to push higher. We got some resistance right here. You got resistance right here at 77.45. Get above 77.45. The next level's 20 points ahead, overhead, 77.65. So above 7745, you can get to 7765. Okay. Okay. Looks good. Intel at the highs of the day. Intel. All right, 7745. Need to get above 7745. Okay. All right, so let's change this 7745. GEC 7745. Need to get above that to get to 7765. Okay. That's the gap. We filled the gap, turned back up, took out some stops, it looks like. 7765. And it happens to be VWAP. 7765 happens to be VWAP. Looks like we're headed back to VWAP. Excuse my French. Keep clearing my throat in your ear. Sorry about that. I don't even realize I'm doing it. It's a habit. Sinuses. I'm surprised. Okay, so Starboard has taken a stake in Shake Shack. So I'm not one to judge based on the fact that I wouldn't eat there. A lot of people would. Shake Shack is up big. Shake Shack looks good.
All right, let's get to that booking holding story that we were talking about before. The Shake Shack lost up 6% is booking on earnings. And it just made us think of the moves that you made in your ETF, in which you got rid of Expedia, LVS, Royal Caribbean. Expedia is a record high today. So talk to me.
The one that's painful is Royal Caribbean, because as I mentioned on the show over the last several years, the one area, the one sector in which I don't think momentum is very successful is consumer discretionary. It's a lot of fits, it's a lot of starts, it's a lot of
Shake Shack looks really good. Look at the base coming out of a base.
Royal Caribbean is a name we have had in the portfolio for the better part of the last 2 years, done really well with it.
All right, that's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12-week base.
Near term, a lot of that is attributable to what's going on in the Middle East, so that could reverse.
Okay, so I'm going to take some here. I like Shake. I like the chart. I know that Starboard is in it. They're in it for higher prices. So Shake Shack, I'll buy some. When did they report? Did they just report? Is that just news that Starboard is taking up? They had earnings. Okay, earnings up big. Okay, so they beat. Revenue up 17% year over year. Okay, so that looks good. I don't know that I'd buy it right here. I'll put a limit order lower.
So that disqualified it. That's the reason.
Okay, Shake Shack. I'll put a limit order lower. I'll do a 50 delta.
Quality metric by choice. So when the rules were created by myself before we introduced the strategy in November of 2020, I selected 3 quality criteria: revenue growth, return on equity, and debt to equity. Let me just say this: in this
is always teaching you that you're learning something about what you've done.
Intel's pushing higher. I just took a little bit of Intel up into strength. I have November calls for Intel. SoFi was up big the last couple of days. SoFi. Okay, it's taking a break right now. It needs to get above 20. SoFi. I have 2028 options, so I'm not squeezed for time. SoFi, I have 2028. Okay, so I'll get over a year and a half, almost 2 years for those to work. I have close to 50 of those now, I think. 45, 50, something like that, of the 25 strike call. So building an option position, less investment. So there's more chop in the directional changes that we've been seeing. Intel's still pushing here, Intel. Okay, that's at the opening range high. Shake Shack. All right, looks good. Shake Shack coming out of a base, looks good. All right, Shake Shack looks good.
Options action with Oliver running SIBO global markets in Chicago. What do you see from there?
Hey, Scott, we're watching VIX, which is sometimes called a fear gauge, and this week is a perfect example of why that term is a generalization. The VIX rallied a full point during yesterday's breakout 2% rally in the S&P and extended gains in the first hour of trading today as stocks tried to rally. Now, equities flirting with red, the VIX is too. That's because about 20% of the time.
Shack. All right, big move in Shake Shack.
Traded here at SIBO yesterday, a new all-time record. And at the NASDAQ, the price of one standard deviation
17% year over year.
single day move in 5 years. Here's what this means. One, bulls clearly have newfound conviction in this market. But two,
Okay, let's take a look at Earnings Whisper. Let's see, Shake Shack.
which creates the risk of leakage. today's stock.
Okay, Oliver, I appreciate that very much. Thanks, Oliver. You got a quick thought on that? Picks up, stocks up.
Yeah, I think a lot of it is attributable to the activity that we're seeing, high frequency trading, algorithms, things of that nature.
Shake Shack still going here?
I think it's more of a short-term dynamic than anything else now. Yeah, obviously. Yeah, I don't think it extrapolates anything about the future. I think it's more of a short-term mechanic of the market.
Well, you're talking about the market wanting underdogs right now. The NASDAQ has been an underdog. At some point, if momentum keeps moving in this direction, there's no underdogs left, and then the market has to sort of slow down.
Okay, we'll talk about Uber next. It is moving on the other side of earnings. Do have ownership on this desk. We discuss, we debate, we do.
Okay, looks good. Looks good. All right, Intel trying to push a bit higher. Shake Shack looking good. Intel at the highs. Looking like we want to go some more. Intel. Looks good. Intel. Okay, Intel looks good. NVIDIA. These are Heiken Ashley charts. Intel, NVIDIA. Okay, Intel looks good. Hedge flows are starting to trend in a bullish direction finally. That's looking better. Intel, NVIDIA.
Stocks of Uber. The stock is lower by near 7%. They did have a weaker than expected bookings, which is what's your read? Because I just pumped up an analyst report that moved at 1240, so not that long ago at all, from Truist. The results in that guide reflect very healthy demand for mobility and delivery, and the autonomous vehicle rollouts are going to accelerate. Yeah. So what's your take relative to the stock move and then that kind of commentary?
NVIDIA looking good.
Yes, was in line. It's up around 12%. I think when I'm looking at the stock, and again, they have free cash flow, $10 billion. They're going to continue to.
Tesla starting to turn. Tesla.
So for me, this is kind of like if the vacancy is off 7%, it's down 17 for the year. But I think that's kind of what my focus is. Like, what is the next catalyst?
Tesla looks good.
Do you have an answer to that?
I don't. That's the reason why I'm not in the stock, and I want to be in the stock because I believe in the long-term business model, but it hasn't proven itself.
stock price could be out.
Okay. We'll step away. We'll come back and we'll define.
All right, Tesla looking good. Tesla. All right, nice turn. Tesla, nice turn. Look if we can follow through and take out yesterday's high. Tesla looks good. Okay, opening range high. Daily looks good too. $50, 200-day. Tesla. This is day 10, right? Okay, NVIDIA looking good. NVIDIA, Tesla.
To go out and find a very, very compelling CEO that can help transform this business with the mentorship of some of the biggest retail names out there.
And so you described the pushback that you're getting from that company. How do you think the wider shareholder base will feel about this?
I think they're speaking today already with their share purchases. I think they're frustrated. Listen, they pay a dividend. That's good. We're not challenging that notion, but there's wasteful spending in the company. They own a hotel. What's a furniture company doing owning a hotel? And if you own a hotel, you're probably doing a whole bunch of other silly things. So we want to reallocate capital from the business operations to a much fresher digital marketing front office presence. And that may include refreshing a lot of the stores, et cetera.
Douglas, to what degree, though, is this an industry that's just challenged? I mean, Ethan Allen itself has pointed to macro headwinds, a slower housing market, higher interest rates. Is that something that just, regardless of what you change, and quickly about pretty well,
if you read the letter, in 2006, Ethan Allen was doing $1 billion a year in sales. RH, their Restoration Hardware, they're now RH, was doing $700 million, and Williams Sonoma was doing about $1.5 million or $1.5 billion and two. Today, 20 years later, Williams Sonoma is doing $8 billion, RH is doing $3 billion, and Ethan Allen has shrunk to now under $600 million. So there's no argument that the industry is stale. Yes, the industry does do better in better housing markets, but Farouk has managed to lose market share in good markets, good housing markets, and in bad housing markets.
All right, Douglas, we're not done there. And to your point, shares are bouncing after you announced your stage, so getting a warm reception there. Douglas Bergeron, founder of BGB Investments, and even Allen bounced, so is Shake Shack after that state from Jeff Smith. And that about does it for Bloomberg Deals. Stay up to speed. Subscribe to the Bloomberg Deals newsletter. It's the Bloomberg.
Some see heroes. Others only egos. We see the era of billionaire athletes. While others follow the noise, we follow the money.
Preferable benefits pilot program, DoorDash is actually giving people the chance to receive benefits and still be able to have that platform to work as they choose.
Some problems don't wait for work hours. What if you knew before it failed? Waze gives you continuous visibility into the health of your equipment, from detection to collaboration to repair. You'll know what to fix, when to fix it, and why it matters. Because reliability isn't just about machines. More moments,
fewer emergencies, reliability for real life. Waits, creating a world where nothing breaks.
Hey everyone, have you tried Cash Avalanche?
Let's go game.
It's a free slots game, free to play.
Free to play. It's definitely going to ask you to make purchases, right?
No, in Cash Avalanche, just 2 to 3 spins, and you can hit the jackpot.
Then it'll probably force you to watch some ads.
There is no ads. How about the variety of slots? We have more slot machines than real casinos. Download Cash Avalanche and unlock your welcome bonus. Your Cash Avalanche adventure.
Over her Father's Day. Fresh patch, some real hydroponic living grass that we ship to dogs all over the country. For being like a small startup business, Mountain has made it possible for us to compete with the big guys. You can see the results. You can see the ROAS. You can see the average order value. We're becoming a household name. I'm so excited for what the next 15 years are for this company.
Reporting from America's biggest military shipyard. It's Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Wall Street waits for word of a deal. Welcome to the Wednesday edition, as President Trump says a deal with Iran could come as soon as today that could bring a new order to the Strait of Hormuz. I'm Joe Matthew, alongside Kaylee Lines in Washington. Kaylee, reports say the strait could be split into 3 separate lanes, which could eventually bring tolls.
Yeah, and of course, as we're talking about a deal here, it's not clear that this is going to be a deal between the U.S. and Iran. What seems to be in the offing is a deal between Iran and Oman over control of these different passages, different routes within the Strait of Hormuz.
Well, I'm getting confused. First of all, how do you have an inbound lane and outbound lane? I guess there'd be a dual traffic, dual direction lane eventually once it's defined. But the president's been indicating that this is a deal that involves the United States, so it's unclear what we're working on here.
Yeah, and we'll see if we hear more about this from the president himself. He's due to speak in Las Vegas, Nevada, later on this afternoon. That's going to be about no tax on tips, but as always, it could very easily veer into other subjects. I would imagine as well the president might take the chance to echo what he posted on True Social today about the winner of the Democratic primary in Michigan, who, of course, we learned today officially is Abdul al-Sayed, who the president describes as a communist. To be clear, he's not one, but he is from the progressive left.
That's true, and doesn't even identify as a Democratic socialist. But yeah, this is a crushing defeat for Haley Stevens, the Democratic congresswoman, establishment candidate, and it was a squeaker.
Yeah.
Kaylee, I guess that Emerson poll is an outlier because this is a 1 percentage point margin.
Yeah, this was incredibly close, which points to the work that al-Sayed will have to do if he wants to gain enough support in the general election in November to defeat Republican Mike Rogers. And this is obviously critical for the Democrats' Senate chances. So we'll get into this with Laura Brown, a political scientist, this hour. But we begin, as always, with a check on these markets. And for that, we turn to Charlie Pellet of New York. Hey, Charlie.
Hey, thank you very much, Kelly and Joe. Indeed, the headline passed along involving Iran. Word from an Iranian news agency. Iran says these new Hormuz routes will be valid for 2 to 4 months. Indeed, headlines coming out. We'll keep you updated as they become available. Right now, we've got oil, West Texas Intermediate, and Brent. They are both lower. WTI 74.80 a barrel, down by 1.2%. Barrel of Brent down at 78.96, trading below 79 on Brent, down 0.5%. Oil lower, stocks higher for now. The S&P has been fluctuating. Any advance today will be another record for the S&P. Any gain today for the Dow will be another record as well. Right now, here's where we stand. The S&P up 8 to 77.45, building on yesterday's advance, up by 0.1%. The Dow up 464 now, up 0.9%. Stocks have been wavering near records. NASDAQ down to 76, down by 0.3%. The NASDAQ 100 index down 0.1%. The SOX, the Philadelphia Semiconductor Stock Exchange Index, right now it is moving lower. Little change from the day, down under 0.1%. The 2-year 4.20% with the 10-year currently yielding 4.62%, and the 30-year 5.17%. Spot gold up 4% now, 42.39 the ounce. West Texas Intermediate crude 75 even a barrel, down 1%. Barrel of Brent 79.13, down 42%. SpaceX after earnings plunging out by 8.5%. The company disclosed higher than expected spending on its
Groups will be valid for 2 to 4 months, so only a temporary period. Kevin Kwan also saying that this new
Tesla. Okay, NVIDIA. Intel.
A deal could be announced as soon as today.
All right, let's see. Apple trying to do something. Apple. Apple. S&P pulling back a bit. S&P pulling back. NVIDIA. NVIDIA turning back down. All right, this time of day, we're looking for B and C pivots. High of the day and then pullbacks B and C. SK Hynix pulled back a bit. All the chips pulling back from the high of the day.
The victor in this a communist loser who hates Jews in Israel said, as usual, polls were way off. She, David Stevens, who he called a socialist in this post, was not expected to do nearly as well as she did. Policies below the numbers. So tonight, scientists and also Jefferson's labor to the politics of the losing purchase. To balance it out. We should point out that Haley Stevens is not a socialist, and is not a communist, so he is notably further left than Stevens was. He's not going to be the general election candidate. How steep this is well, I think
Okay, NVIDIA turning back up. Looking for a bid, S&P, hedge flows, looking for that to continue making higher highs, higher lows. Hedge flows, looking for these to head higher, make higher highs, higher lows. A lot of negative gamma in this area, as you can see. Looking for higher highs and higher lows. Got resistance right overhead. You got 77.45s and 99 percentile now. All right, let's take that out. Okay. All right, let's take this out. Okay.
Their different ideological wings are looking to gain prominence. And what you'll see is that this debate over which direction the Democratic Party goes in won't be settled until they choose a presidential nominee in 2028.
Internal content they're around. We see William Lawrence, last the founder of the Sunrise Movement, defeating two moderate candidates. This is still in Michigan. This is the 7th district to compete with Congressman Tom Barrett in the general election.
Okay, we need to get above this 77.45.
Is there actually a narrative here, or is this something that is trying to connect the dots?
I actually don't think there is a narrative. I think what we are going to see is a lot of candidates appealing to local concerns. And the one major concern out there is the economy and people are feeling the pinch of higher gas prices. They are displeased with the inflation rate. You also have the issue of the war, and certainly for those in Michigan, tariffs on Canada have been a blow to their economy. So there are a lot of reasons to reject essentially the president's party and his candidates. You also have a gubernatorial candidate in Jocelyn Benson, who won a very large, Democratic primary race.
Okay, there goes Apple's turning back up. Apple. Okay, Nvidia is looking good. Nvidia. Apple. Opening range high here. Apple pre-market high. Pre-market high is much higher. Opening range high.
Where those independents are going to go. I wonder how you view the available share of this is a conversation in 2024 as well. How is it shaping up in 2026 as we consider the ultimate balance?
Well, I think what we have to do is look back at an analog. 2006 looks a lot like what we are seeing. A historically unpopular president, an unpopular war, issues of personal scandals, and also public corruption. All of those things are kind of combined to have the Democrats with a solid, north of 6 percentage point advantage on the generic ballot, and a very large disapproval rating of the president, which puts him on the ballot, even though he is not.
All right, AMD just sitting here, not following through. SK Hynix got rejected at the high of the day. Nvidia trying to get back up. Apple turning.
In the middle of there was about 3:30 in the morning. The Republican from North Carolina announcing he's dropping his re-election bid following a House Ethics Committee report that recommended he be censured. There's still a huge question over Max Miller. And I'm wondering your thoughts on this because the congressman is pointing to Speaker Johnson and the president saying nobody's asking to bow out over what are very serious domestic abuse.
Shut up with your frickin' politics. Jeez. They're so annoying. Let's see. Politics. Bloomberg just can't help themselves. Got to find a better market news that
for with some of these horizontal levels is repeated areas where price fails to over.
I mean, Financial Juice is good, but they don't talk much.
Now to think about our
So it's hard to tell what's going on except when there's an alert.
The trend was looking more bearish based on these selection of 4 exponential moving averages. Recently, though, our dark blue 5-day EMA started to overtake its slower moving cousins here. We have that 5-day short-term weekly EMA coming in at right about 100, which lines up very closely with the gold 63-day EMA. So those come together, giving us a confluence point.
Nvidia.
But I also noticed, though, that our 251-day EMA in orange, the longest and most significant of our 4 that we have here, comes in around 105. We failed to break above that level 2 here. So a convincing push above that indicator would be another more significant bullish indicator to keep track of as well. Meanwhile, RSI has been trending upward, taking out its previous high point here. We are above
the Intel off the highs of the day. Stocks are very choppy.
Also a good point that we have.
Still looking at 1-to-1 up-down volume, so no surprise there. Dow Industrials, 30 stocks on the Dow Industrials. That's 2-to-1 up. Qs are almost 2-to-1 down. SPY is 1-to-1. NASDAQ 1.5. New York Stock Exchange 1-to-1. Let's look at the New York Stock Exchange. NYSE. Composite, 2,400 components.
It's the 100 and it's the 97 short book vertical here. Looking for a 70-cent credit. So with that, you would risk $180 with a max profit of 70, and your break even would be 99.30. So very comparable strategy, Jenny. Of course, the last one was a 195, 190, collecting $1.50. This is half as wide, collecting 70 cents. So
New York Fangs.
Price, so half as wide. So a lot of these things sort of in alignment here. Same style strategy, same style moves today in a space where both these names are pretty big players.
New York Fang daily looks good. VIX. Our VIX is low. Junk bonds. Looking a little better, junk bonds. Okay, advanced decline. Okay, advanced decline, still pointing lower, just taking a break. People taking profits, reducing their risk short term. All right, Nvidia trying to push a bit more.
Trades into focus on Thinkorswim Desk with robust charting and analysis tools, including 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute user insights. Trade really strong.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know
Apple.
that's exactly where market
Okay, Apple.
is slowing things down. We're going beyond the earnings to get to the heart of the key
Pre-market highs overhead. Apple, can we follow through? We need to get above the 50-day. We're briefly above it. Need to close above the 50-day. See more volume over the next several days. Intel. All right, I'm going to take a couple minute break, put something on for lunch. I'll be right back.
With that 20 years, Jim's really been there to answer any questions I ever have. Makes a huge difference. We have someone that actually cares.
Welcome back to Next Gen Investing. Now, as investors start to question whether the AI-driven rally is starting to look stretched, it could be the time to think more about diversification. So in terms of the safe haven and asset exposure, as well as potential upside and relying perhaps less on traditional fixed income. But for more on the insight behind this narrative, we are now joined by Daryl Wright, managing principal at Easterly Asset Management. So Daryl, thank you so much for joining the show today. As far as like what you're worried about right now, where do you think perhaps the street is underestimating some of the broader risk we're seeing? Is it AI valuations, circular funding concerns, or geopolitical headwinds, or something else?
Jenny, I think it's all of the above. I mean, if you look at circular funding, I mean, there's no doubt that billions of dollars is going from NVIDIA to OpenAI. OpenAI is buying chips from NVIDIA, and you can just go down the list of all these folks. What does that mean? I mean, that dynamic absolutely sets things up for a bubble. Of course, there's going to be AI adoption and significant growth, but all of that circular financing absolutely creates earnings that would be next year or the year after pulled into this year, and that's going to create an exuberance and enthusiasm that might be a little much. And that's why I encourage investors today to start looking for safe havens as they think about taking some of those profits, from their AI gains.
Yeah, let's talk about that a little bit, Daryl. I mean, even if you're looking at it as someone who's perhaps even super optimistic still about the AI infrastructure build out and the technologies and the data centers and all the things associated with it, it can make sense from a portfolio construction standpoint to do something even in kind of the barbell line of thinking where part of the assets are associated with that, part of them, and something a little bit less risky and maybe a little bit different. Talk to us a little bit about about the space that you guys operate in, which is not only just REITs and real estate, but also the specialty nature of it in kind of the area you guys operate in.
Yeah, I mean, when you think about safe havens, the most important thing is understanding what you're actually going to achieve by finding that safe haven. And most folks think that means taking lower return. But we have a unique moment in the markets today where if you look at REITs, real estate investment trusts, these are real estate businesses that started the year, at a 25-year discount to the S&P 500. They've closed about half that gap this year, but there's another half to go. And in our company, Easterly Government Properties, we're a business where over 90% of our revenues come from the U.S. government being our tenant. So taking a bet on Easterly Government Properties is not a bet on on credit risk, but it's absolutely a bet on Uncle Sam. And that duration, the time, and the consistency of the dividend, enables you to get paid, while you're waiting for other opportunities in the market.
Okay, you make the case that diversification cannot just mean hiding in T-bills. And so you mentioned duration, but what are some other risks that we could be overlooking here?
Yeah, I mean, when you look at this market, again, multiples are expanding. We're in a place where the market has done very well this year. It's on fire. But in real estate, you've got to think about the opportunity, which is it's real estate. It's balance sheets. It's real cash flow. The dividend that gets paid from these stocks is 50-60% of the cash that's there, and that's real cash compared to these growth prospect earnings that you're seeing. As we think about this year unfolding. Treasury bills have been volatile. Folks are seeing possibly a 25 basis point rate hike as they think about this next meeting. The reality is that volatility is already priced into the market.
S&P is just sitting here killing premium.
Daryl, if you could kind of walk us through a bit and sort of how this would work.
Need to get above this level here. We're right at it. We hit it a couple of times. 77.45. 77.45. Okay, that's GEX right there. 77.45. We got the gap right here from earlier.
You guys operating with government properties. I also see a published yield, at least recently, that was 7.24%. So certainly a premium to where T-bills are. What is the risk then? Is it a defunding at the federal level? Is it a renovation? I guess where
Okay. NVIDIA trying to push a bit higher. NVIDIA.
This is one of those opportunities, Alex, where Doge, and the thinking that government was going to shrink over a year ago really hurt the stock. It was beaten by headline risk. But the stability of the cash flow is one of the most stable in the industry. The U.S. government is the very best tenant, AA+ revenue into the company, and the consistency of the dividend is at a 300 basis point premium to the 10-year treasury. The duration of the leases is over 9 years. So it is an incredibly stable stock with an opportunity not only to get paid a nice dividend along the way, but in addition, there can be significant appreciation.
Okay, so how important then is the current rate environment to the broader investment case, and what could happen to REIT valuations if rates move lower from here?
Well, what we're going to see is we're going through a refinancing bubble, but as short-term rates continue to, if they were to move up a bit, it's not going to have a significant effect,
All right, Microsoft no follow through. Apple's looking okay. NVIDIA's looking okay. SK Hynix bouncing. Intel's at the high of the day. Intel. AMD. Intel trying to get above that opening range high.
Opportunities to increase the portfolio, just from a square footage.
What's Palantir doing? PLTR, Palantir. Palantir. Okay, no follow through today, Palantir. Okay, Intel. Shake Shack. Shake Shack looking good. Flagging at the high. Shake Shack turning the corner.
We're building law enforcement, as we're building each of these areas that makes America safer. It's an opportunity for us to build these buildings,
Callaway Golf.
and build labs.
Okay, no follow through yet.
All of that leads to significant cash flow for investors, growing your dividend and growing the cash flow of the business. Which is an outstanding safe haven to be in, as folks are questioning a market that's just been on fire this year.
Yeah, I think a really great perspective and an important one as we, of course, reassess where to sort of forecast for the back half of this year. But really appreciate your time today, Daryl Crate, founder and managing principal at Easterly Asset Management. Now, coming up next, Disney delivered earnings that beat and shares are being rewarded today as a result. We'll break down the major takeaways from the report as well as its update on streaming, parks, and a new partnership with TikTok when we come back.
Tesla, no follow through. It looked pretty good there for a while and just kind of faded. S&P fading a bit. Breath is off, so not surprising.
She's got your smile, Carl. Yeah, your number one broker's here to welcome you to actually we invest with Schwab.
S&P weekly at new all-time highs. Yesterday, pulling back a little bit today.
Schwab helps me generate.
S&P equal weight index. Doji at the highs. A little indecision after a big move yesterday, breaking out to new all-time highs. Again, for a second time in the last 2 weeks, we broke the new all-time highs. Number of stocks trading above the 20-day and 50-day are kind of taking a break. So it looks like we're just consolidating recent gains. Not a reason to believe the market's going to pull back dramatically. It's just consolidation of gains. Apple, we need to close above the 50-day. Look a little better today. Meaning we're trying to close above the 50-day. 60-minute time frame. All right, we need to see a move above that as well and start to trend, get that line to turn up and to the right.
And a new deal with TikTok that could open the door for some fresh opportunities for Disney's vast content library. But for more on the recent quarter from, of course, Disney, we are now joined by James Ternowski, Head of Emerging Technology Policy at the Consumer Choice Center. James, thank you so much for joining the show. Always a great conversation, but walk me through what stuck out to you about Disney's results and really what we saw also in like experiences, streaming. I mean, there were some major points of strength that kind of surprised me, frankly, looking at these numbers this morning.
Yeah, thanks for having me. I think that, as you kind of noted at the top line here, Disney had a little bit of a mixed result when it came to the top line numbers for its earnings report here in quarter three, right? So we saw them go and beat when it came to earnings. They ended up going and doing $2.06 a share relative to $1.86, which is where the projections were. But in the meantime, they did miss on the actual revenue side of the equation ever so slightly. So they brought in about 22.25 billion, whereas the estimates have them coming in at 22.4 billion. So slight miss there. But really, the strength of the report for them lies in the growth that we've seen in both their experiences division and in their streaming division. And in the experiences division, I think that that's kind of interesting because their parks and cruises have done better relative to their competition. That particular area, we saw 10% growth year over year. That's really, really good. On the flip side, when you're talking about their competitors, NBC Universal was just talking about how they were seeing a decline in the attendance rate at their theme park in the same state of Florida, for example. So that was nice to go and see. On the flip side, for streaming, that continues to go and grow and look good. That's because they're gaining new subscribers. They are also certainly benefiting.
Okay, Apple looking better.
Price hikes on the actual subscription itself, and then as they continue to build out their ad revenue business,
Apple looking
that is
better.
also to continue to grow. So those are some of the key
This is
kind of
Apple.
positive takeaways that we can have from the Disney report so far.
Let's talk about the streaming side of things for a little bit. From where this is,
Changing direction. Apple after that big gap down, trying to get back above the 50-day. Looking good. Looking good.
succeeded. Bob Iger, who's in charge of Disney now, mentioned on the call that they're, I guess, quote, exploring a free product within streaming for customers. And we know that in the case of some of these businesses, they've looked at this through ad models and in other places, maybe, India and some of those different, jurisdictions that maybe aren't as willing to spend up for this. Is this a win for consumers, or is this sort of a bait and switch where we cut the cord to avoid all these ads and now it's back to the same thing?
Yeah, I think it's a little bit of a give and take there, right? Because at the end of the day, to produce content is an extremely expensive proposition, and consumers have a never-ending satiation for wanting more entertainment goods and services. So if Disney wants to go and do that without going and putting costs on the consumers, that is the trade-off that you're going to absolutely experience, because that is what the traditional media ecosystem was that they were producing shows that they thought you would like, and then in exchange for that, so they couldn't charge you for the show itself, you'd go and get advertising. And the same thing is going to go and happen in this instance. Now, I would say the only net positive difference between that versus the traditional media ecosystem was that you didn't really know or have much of a say in the kinds of ads that you were getting in the traditional media ecosystem, and in the digital media ecosystem, at least the advertisements are going to be a little bit more tangentially targeted towards you and like your interests that you're interested in.
All right, Apple.
You don't want to be spending money on all these different, streaming services. That's a net win for you if you can go and get access to something that you don't have to go and pay for. And okay, fine, maybe you have to watch some advertisements, but again, you're not paying for.
All right, close above 312, 314, 315, something like that would be good for Apple. Okay, let's look at hedge flows and see what that's looking like. Hanging in there. This level right here needs to get taken out. 99 percentile at 77.45. We've hit it a number of times and it's still there. Non-zero day. Same level. And 7,800. Can you imagine if we ran back up to 7,800 and closed up there? That'd be nice.
The NFL numbers every single season continue to go and beat records and bring in record numbers of revenue, and yet it's still such a tight margin because the broadcasting rights to go and get those deals is extraordinarily expensive, and that is something that's going to go and be a drag on a network, even like ESPN, that has certainly put out good content over the years. And certainly they have their deal now where the NFL has a part ownership.
Looking for the evening session to pick up. The bid pick up a little bit in the evening session. Dip buyers. We consolidated for 10 to 12 weeks on the S&P 500. This week, we broke out to new all-time highs. So after the consolidation, resuming the trend.
James, I mean, from an ad standpoint, it makes sense. The appointment viewing aspect of live events certainly carry more weight than a show that you can watch on your own, pace and decision point. But I want to talk a little bit about sort of the other thing that's going on within streaming, which is this sort of ratcheting up of the pricing that we've seen in recent years. Now, perhaps it's a little bit of both, but I want to get your thoughts on sort of from a consumer standpoint, maybe why this is happening and whether or not this is in the best interest of the consumers, because is it one that just the cost of content, as you mentioned, is really expensive and just to maintain some level of profitability, they need to do this? Or is this more for shareholders as the growth story for many of these companies has sort of dwindled, at least in North America? I mean, think of Netflix, where they have 325 million subscribers. So many of them are in the North America. Like, the story is no longer subscriber growth. Do they have to focus on something else to sell to shareholders, which is, hey, look at our margins?
Yeah, I think that's a great point, and I think that's a little bit of a mix of both, right? Like at the end of the day, when you're looking at contract or producing content, it's going to get continually expensive every single year. There's going to be escalators.
Yeah, it's kind of a lull in the market right now. I'm going to go grab my lunch. Be right back.
Business, especially if we're talking about bringing in A-list actors for some of these projects, it's going to be very expensive. So there's no surprise there that when you're taking on, you know, the tens of millions of dollars, if not hundreds of millions of dollars, like I'm thinking about Amazon's Rings of Power, the cost to produce that show is in that kind of a range, right? And that means that's very costly, and that's why we've seen Amazon go and introduce advertising into its streaming sources, because they have to recoup those costs somehow. And yeah, I think to a degree, companies are also trying to figure out, like, well, what is the consumer's willingness to pay? That's important for them to know. And then, yeah, I think that it is something that is important because there is a finite number of people in the world that are going to be willing to go and pay for all these different services combined, which means that you have to go and you know, find these other margins to compete on if you're looking for an investment from a potential shareholder. And that's going to be saying, like, hey, we're able to go and do better margins here. So I think, you know, is it necessarily great for consumers when that's happening? Not necessarily entirely, but at the same time, too, they are getting access to an expanded library. And these companies are trying to think through new ways of connecting consumers to new goods and services. So for Netflix, that's like rolling out a whole new kids feature. That's also going and getting in the live sports entertainment thing, which I think that consumers are very interested in. And as we're going to see in the upcoming negotiations for the new rights for these deals as they're coming up, I think that you're going to see the streamers go in and continue to go and play in this space, because that will go and justify for how they're going to go and grow the subscriber base looking forward.
Okay, pivoting here a bit, Disney did announce a new partnership with TikTok that gives creators access to its IP, which is so interesting to me. But what really stands out to you about that deal?
Yeah, this is a first of its kind of deal that we're seeing here between Disney and TikTok. And I think that it's really interesting because this is now a traditional kind of media company that's done television. It's done, you know, the entertainment space with doing movies and all that. But I think it's also noting an inflection point where you're seeing younger consumers interacting with social media, obviously, and they want to go and make sure that their IP is getting connected with those users in a friendly way, right? So TikTok is a massive platform that has billions of users around the globe. And by connecting creators to the Disney IP library, I think that also avoids potential legal issues if you're a creator in your reels, right? You don't want to go and get a copyright notice takedown going and affecting you as a creator. So this provides a sanction-free kind of way for creators to go and work with the Disney library to produce content that's connecting their viewers, if you're a creator, with Disney content in the process. And that, I think, could be really fascinating to watch, especially as they have some mega movies coming out later this year. Like, I'm a big fan of the Avengers. That's coming out later this year. I could very well easily see TikTok creators going and playing around with the Marvel IP to go and roll out with that, right? So I think that there's some really creative and cool things that could happen there. It's stuff that we'll have to continue to monitor. And depending on how good it goes, maybe we'll see other libraries go and try to do the same thing.
Yeah, the Marvel IP is a powerful library at that, but really appreciate your time today. Great conversation. James Chanowski, Head of Emerging Technology Policy at Consumer Choice Center. Now, coming up next, SpaceX just delivered its first earnings report as a public company, and investors are not quite buying it. Shares are down nearly 11% in reaction to its staggering CapEx forecast. We'll break down what's behind the disappointment right after this break.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Check, check. Options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. I'm Nicole Pedalides live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. Now we'll dive into SpaceX reporting its first earnings report as a public company, and the numbers show a business scaling fast with revenue ahead of estimates and a pretty massive cash position, as well as growth across its launch, but also a lot of expectations riding on CapEx. So for more details and of course what's driving some of today's pressure, we're now joined by Sam Badas, host for the Schwab Network. And so Sam, run us through what stuck out to you and what is of course leading to this weakness today. But I gotta say the expectations were so high.
Yeah, lofty expectations, but I think it was the latter part of an introduction that you just gave, Jenny, which is why we're seeing the stock down today in double digits. So we are off the lows, but yeah, 24-year-old company, first public earnings report here. The headlines go like this. We got revenue up at 92%. That was pretty impressive as far as that growth, $7.8 billion. Starlink, the only profitable segment as we know, 66% up to $4.3 billion. Cloud revenue, $2.5 billion. Net loss narrowed. So earnings coming in good, bad reaction. And it was, as you can see here on screen, $18.37 billion in CapEx. That concerns the street right now because the street really wants to see that return on investment, and the market hasn't quite seen that yet. It may not be for several quarters. When it does, it might be a different story. I mean, take a look at some of the hyperscalers. The fact that we have had some degree of proof of that monetization coming through. There have been things that we do know about this company, like you mentioned at the top there, but there are things that we don't know. And it seems to be a case of the things that we don't know that's concerning the street right now as to why we're seeing this reaction. Interesting, NVIDIA is a big winner in all of this, emerging very much as one that's rallying off the back of all these numbers and what Elon Musk had to say, because we saw that it was a big endorsement coming from Mr. Musk. So we're seeing this at a 2-month high, and one of the best performers across the Mag 7 in chips, because he basically said, we've decided to build exclusively on NVIDIA because we think the Vera Rubin architecture is the best. So heaping a lot of praise on Jensen Huang's architecture here, and they think it's the best AI computer, greatly valuing the close cooperation and partnerships on many levels with that company. So that's been really interesting. But I think, a lot of people have a big fat circle around August 6th on their calendars, because obviously that's when it will be an important date. The lockup expiring now, 911 million shares that are obviously going to be free from these trading restrictions. So a lot of people want to see how it trades tomorrow, as that number of tradable shares will soon rise to over 140%. So I think, that's going to be really interesting moving forward. We've got a couple of the analyst coverage notes up here on the screen. As you can see, you've got a quite diverging type of views, and it's been really interesting, this battle as to where this company is going to go next via the analyst reaction here. But there is a view that obviously that is pretty normal given where this company is at currently, guys.
Yeah, and of course, I mean, a pretty substantial move to the downside today, only continuing to drift away from that initial IPO price that we saw, of course, drive a lot of enthusiasm and very much a eye-watering valuation, but pulling back here, and obviously there's always opportunities when we see some of these moves to the downside following earnings. But really appreciate it, Sam Badas, for bringing all of these set up here for what is driving a pretty critical name to the overall market, lower SpaceX. But now coming up next, we will discuss what is moving markets right now as far as some macro trends to watch, as well as, of course, all of the factors playing into labor with jobs numbers coming out this Friday. We'll discuss all of these forces up next.
Schwab Bank Investor Checking.
Markets are just sleeping at the moment. Markets are not moving.
Client satisfaction by JD Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to Next Gen Investing. It's now time to discuss some of the broader forces that are, of course, impacting today's markets. And joining us now to help us discuss some of the overall action is Michael Monahan, partner and portfolio manager of Founder ETFs. So thank you so much for joining us, Michael, here. As we look at right now what you call this local bottom that you believe is in after, of course, say late July sell-off, what is really giving you confidence here after this reset came, perhaps at the start of that could signal at least the start of a larger pullback? But to give us your thoughts here on what we're seeing, of course, the end of July as we now assess the month of August.
Thanks. It's great to be here, Jenny. So we see three waves moving through the marketplace. Wave one is the Middle East, energy prices, and supply chain stability. Wave two is the AI CapEx build-out, and wave three is jobs. And depending on which one of those waves is leading, is influencing the market. We're constructive on the market. We're obviously very long-term investors, so we don't tend to pay much attention to the short-term noise, but we think the setup is very good. We think the local bottom was put in end of July, and we think we'll rally from here as we've seen very good corporate earnings reports.
You got a few names that are on your radar as well. I saw in the brief you sent over. Do you want to talk about a few of them? I mean, some of them, the thesis writes themselves, right? The AI CapEx cycle, they're very much falling into that camp. I see Bloom Energy is a name that certainly ties to that. One can make the case for Dell and Meta as well. You want to walk through a few of those?
Yes. So Meta, incredible earnings growth, incredible price and volume on the ads that is being served up by Meta. And the stock has got punished the last couple of earnings reports as Mark has reinvested CapEx to grow his business. We think that aligns with our vision where these founders see where the market's going and then they execute to grow. So we appreciate that Mark's reinvesting in his business. And when businesses are growing, remember Q1 grew at 30%. When businesses are growing that fast, we think they should invest more capital. On Bloom, we think Bloom is a very interesting investment. Remember that the current bottleneck in AI right now is energy going into the front of the token factory to create the tokens. And so Bloom removes the need for a grid interconnect. All you've got to do is bring gas to the data center. that use the Bloom fuel cells to create the energy to power the plant.
Okay, and I wanted to get your thoughts on, of course, Palantir after making a monster move yesterday. And I mean, I know that the focus has been so much on its commercial aspect of its business, which is growing at a massive clip, but it's also fairly government exposed and, of course, also the AI exposed. And so the durability of Palantir has been in question this year, but I do feel like some of the staggering growth we saw yesterday kind of silence a bit of that doubt.
We think so. It's been a top position for us all year. I think we were a little bit anti-consensus at the beginning of the year when we made it a top pick. There's a turnover in the shareholder base at Palantir from retail to traditional institutional investors. I think we're seeing them buying it this quarter. And really the reason is the growth is so strong, right? You're seeing 100% company growth, but you're seeing 150% in U.S. commercial, which is really the metric people are looking at because they want to see that Alex Karp and team is expanding outside of government into the corporate. So you see very high growth. And then on the rule of 40, they moved from 127 to 145 to 155 this quarter. So it's not only high growth, it's incredibly profitable growth.
Let's talk something a little different. We've been discussing with a few of our guests earlier this idea of portfolio construction and where different type of businesses can interact and provide different types of return profiles. You have listed underneath your frame here, the boring compounder. I want to talk some Waste Connections with you. Still founder led, and in a business and in a world where I think we think of founders and we think of the Steve Jobs and like these dynamic tech leaders, the Alex Karps of the world, the Elon Musks, but Waste Connections, just your everyday kind of trash collector. Talk to us about why this one stands out.
This is a great company. You happen to catch me on a day where I'm in the Woodlands, Texas. That's right behind me. I'm across the street from Waste Connections headquarters. I just got done visiting with Ron Mittelstadt. He's one of the great founders out there. And, they just bring a higher level execution. There'll be a companion podcast that people can see my hour interview with Ron. But what makes Ron really special is he thinks about his people at his organization. He thinks about the product that he's bringing to picking up people's trash. And he thinks about investment. And all of those things start at the top and drop down to really good shareholder returns.
Okay, and good place to leave it. Really appreciate your time today helping us close out the show. Thank you so much, Michael Monahan, partner and portfolio manager, founder ETFs. Now that'll do it for Alex and myself for Next Gen Investing for this Wednesday. We have the watch list coming up next.
Okay, snowflake turning. Chips not following through yet. Chips. Nvidia fading a bit.
You could bet on this win. You could bet on
Stochastic rising.
this.
Stochastic rising. So that's telling you
And lose.
to look for close in the upper half of the daily range. That's easy enough. We're up here in the upper half of today's range. So we should be good for today. The momentum is clearly more bullish. Just watching S&P, trying to get some kind of a read here from the S&P, which is just sitting here doing nothing. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, August the 5th.
Mom, when my grandparents moved here, did they know what our family would be?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met with their wishes for. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been.
All right, so we have no news for the rest of the day. Fed Governor Cook, he'll be speaking after the close. Other than that, there's nothing going on between now and the close. Price action is just sitting here doing nothing.
Schwab gives you round-the-clock access to over 1,100 most popular stocks and ETFs, plus a wide variety of futures markets. all with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading, no matter the hour.
S&P just sitting here. 77.45 is a GEX level that we ran into a couple of times. 77.45 right here. 77.45 is holding things back. It's a 99 percentile level, so would be surprised if it didn't take it out. Earnings have been good, so you would think the S&P would bounce here. Earnings are good. Guidance has been good and bullish. Some of the stocks that have been mentioned today, Shake Shack. Shake Shack off the best levels of the session. Callaway Golf. Callaway Golf. At Doji. Callaway Golf. Doji for now. Shake Shack off the best levels of the session. You can see where stochastic is. It's at the highs.
Last year, my dad had a stroke. Big shock to see this
All
person.
right, S&P, no follow through yet. S&P just taking a break up here.
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with
Doji spinning top. And hedge flows are just sitting here doing nothing.
Makes a huge difference.
One-to-one up down volumes telling you that there's no momentum in the markets. Lack of momentum just means we're going to be flat for the day. Doji.
New up to the watch list. I'm Nicole Peppolides. It's 2 p.m. Eastern Time. Live from the New York Stock Exchange. I'm so happy you're with us this Wednesday afternoon here on Schwab Network. Coming up on today's show, busy earnings day here on Wall Street. We'll break down some of the biggest recent reports. You'll be very interested to hear more about that. In the meantime, our tech spotlight, we will dive into the first earnings report from SpaceX. It's going public in June. The watch list panel will discuss today's report from Walt Disney. So it's a lot to pack in there. Meantime, a quick look at the markets as we hit records on the S&P 500 and the Dow Jones Industrial Average. And hey, NASDAQ not too far away. Though it's pulled back some now, it's down 31%, but it's about 3 or 4% away from the all-time high. The S&P 500 up 3 points, 7739, after hitting a record this morning, and the Dow is at 467 points. Right now, up 0.86%. The small caps have since turned around. Right now, the 10-year bond yield is at 462, and oil is pulling back. Taking a look at some of the sectors here on Wall Street, as we see names like Newmont Mining leading the way on the S&P 500. Looking at the sectors, many of the sectors here moved to the red. So we've had a bit of a change of heart here on Wall Street, and volatility is what people expect these days. That's certainly what the name of the game has been. And we've seen energy and also utilities and some of the others like consumer discretionary to the downside. I'm sorry, communication services is lower, as is consumer discretionary. NVIDIA is holding on. Some good news there with the deal with Elon Musk, and that's bringing some optimism there. Eli Lilly's doing great on Manjaro and Zepbound. Those are some of the bright spots that you're seeing right now. Dell doing well, probably on the heels of what we had been hearing from Arista Networks, for example. Okay, so there you have it. That's the big picture on the heat map. And so stocks next, the S&P 500 right now is looking up 3 points. And here's a look at the dollar and oil and gold. So oil's at 74.95, it's down 82 cents a barrel, and gold's at 40.
All right, S&P is going to do something at some point or not. Just sit here and just chop around. You can see hedge flows are just moving sideways, not going anywhere. Not going anywhere real fast.
Sitting at 61,990, it's up 0.75%. 10-year bond yield 4.60. Trading day to approach the closing bells here on Wall Street. We have market moves. Joining me for that right now is Diane King Hall, taking a look at some of the names that are on the move, including Diane. We're taking a look at AMD,
And so, look, Elon Musk says he's going to NVIDIA for Vera Rubin. AMD had a great, we looked way back at that AI conference and now to the earnings this week. Some of your thoughts on AMD today?
So Tom and I were talking about this earlier today. It feels like a classic case of buy the rumor, sell the news. Shares have performed really well so far this year, whether we're talking about year to date or a year-over-year basis, and they were strong going into the results. So, there was definitely a high bar to clear. It's not something that actually cleared the bar because, look, they did better than expected on the top or bottom line. You had revenue essentially doubling from a year ago, coming in at more than 11.5 billion. Earnings per share on an adjusted
Okay,
basis.
we're trying to break out above this level here, S&P.
Certainly it's data center.
77.45 is the level.
6.7 billion. So it shows that the
Apple's still fading.
picture is intact and more than intact.
Broadcom turning back up.
Guidance, but they had nearly 200% rally coming into this. So
All right, looks like S&P is trying to go here. S&P trying to go. $77.45. All right, we're trying to get something going here. Watch. The stocks catch a bid. S&P starting to move now. We got this 77.45 GEX level above that 77.65. Okay, that's pretty small now. And then 7,800. All right, so brief little pop there. Took out some stops, it looks like. Who knows what's going on.
In the changing autonomy landscape, investors want to hear that there's a trigger here. Uber did say they plan to invest more than 10 billion over the coming years to scale autonomous vehicles.
All right, hedge flows are starting to turn up. We'll see if that continues. For now, the markets are just chopping people up.
But the question is, where does it sit with regard to Waymo and any of the other robo-taxi progress that we're seeing? Where is Uber going to fit into all of this? Because it's puzzling, investors are like, we're going to sell first and ask questions later.
Look at, with this disappointment and revenue miss and some concern about the spending when autonomous is coming and beating growth, the stock is near 52-week low. In fact, sell-off today of more than 6% is really its biggest sell-off since last year, since November of 2025. Last but not least, we take a look at Eli Lilly, and I think about Eli Lilly, and they've now moved to oral GLP-1s.
Yeah.
They said that just the good old regular Zepbound and Mounjaro really helped the company in one quarter.
It's funny that you're calling it the good old now because they have moved into the next phase of the weight loss landscape here. It was another blockbuster quarter for Eli Lilly. Strong earnings, 838. She was just looking for 601. Revenue coming in at nearly 23 billion. Also a big beat there. Revenue surging 48% on a year-over-year basis, well ahead of expectations. You are seeing shares respond to that throughout the day session. It's really all about the one growth story that is still the engine here that is pushing the company, whether we're talking about sales or how shares are performing in response to Mounjaro, up 91%. Zepbound also increasing. Those sales also beating forecasts together. Those sales together totaling about nearly $15 billion in one quarter. So it highlights Lilly's dominant position, that stronghold they have in treating both obesity and diabetes. It's one of the biggest long-term growth stories that investors have been paying attention to here. The GLP-1 story here. The outlook for management, they boosted their 2026 guidance to that range between 85 to 87 billion. That was up from their previous guidance. That's a little ahead of expectations in terms of earnings per share, guiding for between 35.50 to 36.50. They trimmed the top end of their range a little bit, but investors are not bothered by that. Management is clearly upbeat about what the demand story looks like. And you mentioned the pill next, and people were waiting for the pill because, they don't want to inject themselves because it hurts. So they're like, okay, where's the pill and all this? So that's the next leg of their journey here. And it looks like investors like how they're doing and the hold they still have on this market, Nicole.
Yeah, and in addition, some people have a phobia of needles.
This is true.
In addition to it maybe being discomfort or something like that. Eli Lilly up 4.5% today. Diane King Hall, great to see you. Thank you so much. Coming up, we'll spotlight tech and dig into the first earnings report from SpaceX after that June IPO. We'll have all the details for you. And still to come, some big moves. Tom White will join us with real options trades for Freeport McMoran, Walmart, and Chipotle. Much more when the watch list returns. Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Okay, I did buy some, just bought some put flies just in case this pulls back towards 760. They're cheap, 70 cents.
Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, how it's going to impact the markets. Watch live on Schwab Network, schwabnetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that
gracious work. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Opportunities don't stop when the market day ends. So neither do they. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24 hours support from trading specialists who understand the ins and outs of 24-hour trading. Do that with your
Today, I should say, the software company recently raised its revenue and earnings forecast for the current fiscal year. The firm believes sales
All right, hopefully we push higher and don't need these hedges.
shares up sales since 3% in June. Right now, up about 1% on the stock. Okay, folks, let's go deep on SpaceX. Tech spotlight is focused here on SpaceX. Pete Steiner, equity analyst, CMR Research, is with us. And you noted the strength, and you said it was a landmark second quarter. There were many bright spots, but of course, there's always the sell-off that can happen. Right now, the stock's down about 12%. What did you make of the SpaceX earnings report?
Yeah, I mean, there was a lot to like especially, revenue growth was solid. They beat expectation basically across the board, but again, there were some red flags. I mean, the big one for me was CapEx. And so CapEx jumped to $18.4 billion this quarter alone. And that, again, is a very concerning figure for us. So, I mean, even just doing some back end on that only gives them 5 quarters of this spending level before they burn through their cash. And so the question is 5 quarters enough to build out their data centers, to develop Starship, to finish launching all of the Starlink satellites they want to? That's the big question in everybody's mind. And then, of course, tomorrow you have the first major unlocking of insider shares. We're going to have 900 of the million new shares available to be sold. And so the question there is, are insiders going to sell or are they going to hold on to their positions? That's the billion-dollar question. And I think that could be a big pressure on the stock moving forward.
Think about the unlock of the shares. It's hard to know who will sell and how much will come available. That's always the kind of thing that causes volatility and potential selling on the stock because then it's more diluted because there's more shares out there. Let's talk a little bit about some of the things that sort of were in the hand movement. I mean, we know that the company did talk about some of the orders that are now in line that they were talking about in October, ramping up to $6.7 billion. They locked in on some cloud revenue that they can count on. It's not speculative. They're saying that is actually firm in hand, just we haven't seen it yet.
Yeah, and I mean, they do have enough contracts between Google and Anthropic for their computing services. And so that is firm revenue right now. But with that said, those contracts do have an expiration date. And the question on my mind is, are they going to be able to transition from basically an infrastructure company, which is what they are right now, Anthropic? And that's really what's needed for them to make the jump in terms of sustainable revenue. And, right now they touted some new versions of Grok that are going to be released. We'll see how powerful they are, but they're behind the competition in terms of their models. And so while these infrastructure deals are important to the segment right now, they're not going to last forever. And will the company be ready to grow on its own without renting out excess capacity?
And also, I'll tell you, when you think about XAI and Starlink, those are both seen as the driving would you agree? And I'll tell you, Steve Wesley, supporter for Tesla, thinks XAI can be
All right, NVIDIA turning back up. Okay, so I have these put flies here, just in case this pulls back towards 760. So I start making money on any pullback. Okay, and they're cheap. There were 70 cents per contract, $70 per contract. I have 5 of them. Cost me $360. Maximum profit. If for some reason this pulls back into next Friday and pins right there. If it pins right there, then that's max profit. More than likely, I'd be taking some off into this area right there with, I don't know, 300% profit.
But given what we saw in terms of CapEx, I mean, it's still in a very early stage. There's still a lot of building up data centers, development models, really getting the business off the ground beyond just the glorified AWS service that we offer right now.
Yeah, so the year based on, at least the numbers that we have today,
Okay, NVIDIA, looking for NVIDIA to take off to the upside. NVIDIA.
Totally critical market was a fantasy in my opinion. And so when I was valuing it, I was
Intel.
and so I had to put a sell on it just given where shares
New York Fangs are flat.
more rational funds share prices right now.
yeah, since the IPO, it's been 16% or so.
Okay, let's look at the New York Fang. New York Fang index hasn't done much today. Okay, so you can see why. It's a doji day. No progress. We hit double top or what? What are we doing here? Speculation on SpaceX lockout expiring tomorrow.
There, you have loss problems that, while a speed test might tell you your speeds are pretty good, your experience of speed tends to be relatively low because there's a lot of packet loss. And so there's a lot of essentially fixing broken and lost packets that slow down the experience. And so the speeds that they're offering are not close to the speeds that you would get from a cable operator or from a fiber operator. So even there, I think you have to be at least a little bit skeptical about just how large that threat is.
Hey, Craig, it's Tom. The one thing that these major telecom providers and internet service providers have is existing infrastructure that allows for a propagation of Wi-Fi, right, across different areas. We talk about cellular and coverage, but is there a world in which there are enough Wi-Fi hotspots everywhere to cover everything that we want to cover from a population standpoint, but then augmented with hybridization alongside satellite, so that you have like two working together? How far are we off from something like that?
We're a long way, right? I get the idea. And in fact, that's kind of the concept behind what the cable operators offer today, which is they have the Verizon MVNO agreement or wholesale agreement that gives them coverage essentially everywhere, but they offload as much of it as they possibly can onto Wi-Fi and increasingly to their own 5G networks using what are called strand small cells. That's fine and great, but without the coverage of the MVNO agreement, it just wouldn't be good enough to serve customers as it is. It's a great offering, but they have the underlying MVNO layer that comes on Verizon's network. Starlink doesn't have that, and so you can offload a lot of traffic onto Wi-Fi. Today, the average Verizon customer does 80% of their traffic from their cell phone over Wi-Fi in the home or in the office. But that other 20%.
All right, so NVIDIA is trying to go here. NVIDIA.
Service that didn't give you a high quality experience for that other 20% of the time. And that's really the problem. It's sure you can use Wi-Fi in the home, and with a femtocell mesh network that they described, you could probably use it in certain locations if you happen to be close to somebody who's a subscriber, and if you put up the radio towers and that sort of thing on rooftops. But trying to replicate what you've built in 30 years and hundreds of billions of dollars of capex with towers is simply not a realistic expectation to think that you're going to have a service that's going to be competitive with what the terrestrial wireless operators
I thought that was fascinating. I think everyone should get like 2 credits of continuing ed in physics or like an honorary AP3 score. But I thought that was so fascinating. Craig, thank you. Really appreciate you breaking it down like that.
Intel trying to break out. Intel.
All right, still ahead here.
Intel trying to break out as well.
We're going to speak with the CEO of one of America's biggest data center developers about what's happening next and what's going to happen after in the coming months. Keep it right here.
Nah.
2026. So yeah, people pushing into this, as far as the utility of this metal in technology. That's why you're seeing it outperform gold, why you're seeing it outperform silver at this point. But if you look at their last earnings event a couple of weeks ago, FCX, they handily beat Q2 earnings forecast, but slightly trimmed its outlook for copper sales this year. Demand's outstripping supply a little bit. They had some issues as far as mining goes, so maybe that's kind of lending some credence to that. But to look at the moves that we've seen in FCX, getting close to all-time highs also. So you look at this, the option market. Probably this trader is thinking that maybe some of these gains in FCX, maybe copper starts to pull back the copper futures. We had a trader selling some upside calls, and this was out the September monthly options. About 44 days to expiration. This could be somebody that's just hedging a long stock position by selling out of the money calls. It could be somebody speculating that we're going to see some consolidation in FCX, maybe a pullback, maybe, they're giving themselves a good cushion to the upside because they sold these September 80 calls, sold over 9,000 of them for an average credit of about $2. So that takes a break even to $82 for this trader. That's about 18% above the current share price over the next month and a half here. So,
Okay, NVIDIA trying to break out. Intel's trying to break out.
existing long stock position, but
SK Hynix looks like it'll get a bid here shortly. Okay, NVIDIA.
Let's take a look now. And interesting about copper getting some new highs today as well. Let's talk about Walmart, which is down 15% since hitting its all-time high in May 19th. And I saw that Oppenheimer also had some concerns about growth. In fact, downgrading the stock recently to a market perform from outperform yesterday on the 4th of August. What stands out here in the trading session, Tom?
Yeah, I think that yesterday's downgrade by Oppenheimer was probably
NVIDIA looks good.
But the stock was already down pretty significantly from its recent all-time.
Big move today for NVIDIA. Gapping up, holding the highs.
Some guidance that wasn't up to snuff. Now you look at that.
Looks good.
The valuation of Walmart, it's getting to historical highs. Maybe that's part of the reason that we're seeing that pullback. This K-shaped, or which might be recalled, and and called the C-shaped economy right now usually typically lend support to Walmart, right? Where, even if the bottom consumer is not doing that well, the upward affluent consumer is actually pulling back and going more to Walmart. Walmart Plus doing really well. Gas stations, Sam's Club, Walmart Plus memberships are rising. So the company's been doing well. You start looking at valuation. I think that's a concern for maybe this analyst downgrade that we saw yesterday. Looked at their EPS that they came out with as far as guidance.
Intel's trying to go too. Intel.
And the current quarter EPS estimates were also cut from Walmart. But we did see some neutral to bullish activity here in the option market. This was out in the August monthly option. So about 2.5 weeks to expiration, a trader sold 20,000 of the 119 strike puts. They collected an average credit. These are in the money puts. They collected a credit of $7.30 on this opening position. That takes a break even where this trader starts to lose money at about $111.70. That's basically where the stock is right now in a flat day. Remember, the stock's basically
Apple's still fading.
all-time highs. That break even, right here, they bought their short 105 strike puts in. So they had 3,000 open interest there. They bought those in 40,000 times. Put volume is about 4 times normal daily average volume with these massive trades that we set. But this kind of gives this trader some confidence that, hey, maybe it's going to bottom out right here and the stock's going to rise and they get to keep this credit. Or if it remains below that 119 strike.
Tesla don't follow through. All of those faded. It's just NVIDIA right now, and Broadcom looks like it wants to go as well. Broadcom, the chips look okay.
Last but not least, let's talk about Chipotle. It dropped nearly 10% yesterday. They did speak of identifying jalapeno peppers as salmonella, perhaps, and so they pulled those out. So that's not a worry anymore. We did see the quarterly report late June on the 30th, where they had a beat and had a buyback that they announced $1.3 billion. Tell me a little bit about what caught your eye here on this name, which now year to date is pretty much flat.
Yeah, stock's bouncing back here a little bit. This isn't related to the cyclospora that we saw the impact to Yum Brands and some of the others names in the restaurant space. So you're seeing that 3% jump back, still down about 6% on the week. That big pullback yesterday pulling the jalapenos off of their menus. You did mention the earnings report. They beat on EPS. Revenue came in basically in line, but comparable restaurant sales increased 2.2%. And that's actually a positive because those had been trending the wrong way. They're going to open a lot more stores than the market anticipated. That's why you saw initially stock pop post earnings. But yeah, making some ground up on that news that came out yesterday. But we did see some bullish activity in here, and this was out in the September monthly cycle. Trader bought over 3,500 of the September 35 strike calls, paid an average debit of about 205 on these calls. So the break even for this trader where they start to profit is just above $37 a share over the next 44 days. I got a month and a half in this position. That break even is about 6% above the current share price in there. So somebody thinks that this is going to wash away relatively quickly and this stock's going to recover.
All right, Tom White, thank you so much. Good luck there and big moves at Freeport McMoRan, Walmart, and also Chipotle. Thank you, Tom. Coming up, our panel is standing by. I want to take a look here at Disney. We saw some strength in the parks. That was a bright spot. Toy Story 5 was a bright spot. The pros and cons of Disney. Our panel will discuss. We'll be right back.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account before the branches in the area. He really started with nothing. He worked hard, and after he passed away, and my advisor Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations.
Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Back out for our watch list panel, taking a close look at Disney. And so one of our guests saying what a really good quarter it was. I gave you some of the pros and cons there that are all about Disney. And let's have our guests chime in here. Matt Dolgan is with us, Senior Equity Analyst at Morningstar, and Ken Leon, Director of Research at CFRA. So glad to see you both. So Matt, in your notes, you said it was a really good quarter for Disney. You think the stock is undervalued. In fact, you have a fair value estimate of 125. Some of your thoughts on this quarter and the outlook.
Yeah, well, Nicole, you put it exactly right. With Disney, there are always pros and cons. But
All right, NVIDIA. NVIDIA trying to go some more here. All right, NVIDIA looking good.
But if you look at
It's at the highs. Opening range high just got rejected.
This company, and it is going really well. And in our view, it's still got headwinds that are holding it back a little bit. So sales grew 10%, margins expanded about 2 percentage points even before the boost they got from tariff refunds. That's really about the most important thing for this company. And then the
S&P, a little dip there.
for sure. But we would say a distant second is streaming. That's probably what gets the most attention. It is what people pay attention to. The business is performing well. It's not something we think is going to be a great business long term, but the most important thing is it is now firmly profitable. It's expanding, and right now it's still growing, and we think they're making the right moves. So although there are always going to be parts of Disney that are in decline, the things that are most important look really good.
NVIDIA needs to get about 221.80. Needs to get about 221.80. NVIDIA.
Toy Story 5 was a bright spot. Disney Plus is going to add games. They have
RSI rising.
Plus, they want to bring additional sports in, and we know sports has been a bright spot overall for streamers. Ken Leon, some of your thoughts here today on Disney, please.
Yeah, great to be with you. So with Disney, we reiterated our buy recommendation. We also have a $125 target price.
S&P still just chopping around here, not doing much of anything.
We find it's a company
Hedge flows are trying to turn up. It just feels like the momentum is not there. And dealers are just having to deal with individual traders, not institutions. Institutions don't seem to be trading that much today.
some of our competitors, and they had that blend. It's an interesting point they made about having bona fide large-scale physical businesses as well as streaming. So the opportunity here is they're playing into the high demographics in the U.S., particularly with investment $60 billion over 10 years for upgrading theme parks and cruise ships. Overall, I think investors, or it's value investors in this stock, not growth, are looking for durable businesses, high recurring revenue and cash flow, wider margins, and return of capital, which we really didn't see during the Bob Iger years.
I saw from one of the articles that Judge Morrow has decided to pour more money into intellectual property as part of the effort to now move Disney forward, that he's willing to do a few things.
NVIDIA looking a little better.
Would you say that's right? Is he doing some things that maybe are different or better for the company?
Well, Disney is a formidable company, resources. But they're really the innovator or initiator of AI innovation. They're really going to be a receiver of that. So they need to work that into their businesses, I think, for the next year.
All right, NVIDIA, let's go. Intel looking okay. Intel looking good too. Intel is at the high of the day. Intel I got the 100, 105 call spread. Those expire in September. Most of my options positions are out in September, October, November, December. I have some a few further out, but that's the closest I have. September is the closest. Day trades only. On a day trade, I might take a weekly or something like that that expires within a few days, but like the SPY puts, the put flies that I took, those expire next Friday. Other than that, everything I have is out further out in time. Looks like NVIDIA wants to go here. NVIDIA looks like it wants to go.
To stabilize what would otherwise be declining rapidly in the entertainment segment. And second of all, it does fit in with the other
Big gap up today on NVIDIA. All-time highs, not too far away for earnings.
that's different than ESPN, also streaming, which is part of the sports segment.
Okay, let's see if we can't break out here.
It's a strategic fit. And so that's a different story. But if you're talking about entertainment streaming, we think they're doing the right thing.
Intel.
They should be asked about on the call that they,
Intel's trying to break higher as well. Intel.
It's just not going to be a big driver of growth for this company. And like Ken said, this is not a growth company in our view, but that doesn't make it not really undervalued for what it does. It's being valued.
Shows just quickly, Ken, some confidence in the consumer. We're going to be going into back to school and the holidays. How are you feeling about the consumer after seeing what you heard from Disney and just the big picture?
Yeah, I would agree. Disney's there. They got great assets. Sports. If the Knicks didn't win in 4 games, but in 7, maybe they would have had a strong quarter because they missed that on air runs. But overall, Disney's going to be okay. It's just going to take time to see how formidable streaming can be, and they have to work into wider margins with ESPN. Very expensive to play in the game of large sports events.
It's great to see you both, Matt Golden and Ken Leon. Appreciate it.
Intel, no follow through. Looking for a breakout on Intel. It looks pretty good. There's a lot of option volume trading today. Looking for moves to the upside. All right, it's 241 on the East Coast. It is Wednesday, August the 5th. All right, looking for the markets to do something other than just sit here and waste our time. All right, so the number of stocks advancing today, we got 236 advancing. That means slightly more than half are declining. We've got a doji spinning top on the daily. So we'll see what happens here, but the bias is definitely to the upside. I did take a hedge just in case. Most of my positions are long. Okay, so I have this hedge right here. 760, 750, 740. So for each butterfly, you sell one contract. You buy one contract on either side of the middle, which is 750. That creates the wings, and you buy twice as many to balance it out. So you have one on each side and 2 in the middle. You sell the 2 in the middle at 750. Total cost was $70 per contract. I got 5 of those for now. I plan to have 10, so I'll just leave that there for now. If the markets start to pull back over the next couple of days, these hedges will create a cushion, and that's all I'm looking for. Okay, S&P is turning back up now. Okay.
Well, the macro is a pretty good setup, right? You got the dollar lower, you got yields a little bit lower, but really it's the sectors that are making the S&P relatively unchanged and the Nasdaq lower. It's 6 down, 5 up. It's information technology is actually up 7.
Okay, Apple's starting to turn up off the low. Apple. So recall that we want Apple to close above the 50-day right here. We need Apple to close above the 50-day to get a more aggressive stance, if you will, or bias. For now, we're just sitting here consolidating after a gap down on an earnings disappointment. It appears institutions are buying. We'll know for sure if we get back above the 50-day and start to rise. For now, it's questionable, but we are holding this level, so that's good. Stocks are doing much of nothing today. All right, New York Fangs aren't doing much of anything. New York Fangs index, the New York Fang index. Okay, so you can see what's going on here. Doji, almost a shooting star. I wouldn't make much of it at this point. We've had a big move over the last 4 trading days. We hit the high, double top, maybe. I'm looking for a breakout only because we had this nice gain from March all the way up until May, consolidated, and now we're looking to break out. So markets do 2 things. Markets are always doing 2 things. They're either trending or consolidating. All right, so here's the trend up, and then the consolidation. What happens next? Do we pull back? The earnings are too good for this to have a dramatic pullback. I'm looking for a breakout. So trend, consolidate, trend. That's what we're looking for. No reason to believe this won't happen. If you look at the S&P weekly time frame, okay, this is supporting the idea that we could see more upside. You had this trend higher. Okay, you had the trend higher. You have the consolidation. What comes next is a trend. Now, if earnings were really bad, I would expect this to do this. But because earnings are good,
Thanks, Nicole. Appreciate the time. Essentially, from our standpoint, we've been running credit since our inception 20 years. And from our standpoint, the marketplace has been debating these products for quite some time. We wanted to wait until the SEC really gave some clarity on the share price. A lot of asset managers still in a position where we've had a fund complex in place for over 20 years. And we want to get a sense of what type of ATH, what's the strategy, what platforms we're running, what the clients are running, so forth. Once we got that clarity about 2 years ago, we stepped forward with these ETFs and culminated the launch last week of these 3 ETFs.
And so this is the first foray into ETFs for the company, the first entrance here. Let's talk about some of the ones that ARCP, for example, is the plus income ETF. Tell me a little bit about that.
Essentially, Paul, it really captures we think is our advantage. And our advantage is to harness relative value. One, it's a boast of the firm since our inception in 2007. 2, we have tested, experienced, stable investment team. Most importantly, our ecosystem around weaving the credit landscape, and that's talking high yield bonds, senior loans, investment grade corporates, structured credit, all of that, our view on relative value is played in 20 years. 4 plus is classic down the fairway, intermediate term bond, and then plus side, those are those asset classes I just mentioned, leverage finance and structured credit bonds. So in our view,
all right, so if earnings were bad, I'd be looking for a downside. The fact that earnings and guidance have been good overall, I'm thinking we're going to break to the up and continue to break to the upside. Okay. Momentum is slowing a little bit, so maybe we consolidate first. But in previous occasions where we've either pulled back or consolidated, we got our first weekly push. In this case, in the last case, we pushed back above the 10 EMA. In this case, we held the 10 EMA, which is also super important. We did not lose the 10 EMA. We were briefly below it last week, but we pushed back above it. That's super bullish, or super supportive of a bullish trend continuation.
On Pacific Line, 2007 to now with Aristotle, 1 billion beginning to now 31 billion that we run. So from our standpoint, it's bottom up, cash bonds, very little derivatives. We know our risk, and it's been time tested and delivered outstanding outcomes for our clients. It's just a matter of short duration. It's your basic investment grade, low interest rate risk portfolio. Then you have the core plus, and the multi-sectors are this flexible strategy.
Short duration, that has really been very beneficial to investors overall. Think about fixed income, right? Do you expect that to continue in the current environment? And if so, why?
Well, let's start with, I think in the last segment you talked about, we have inflation's probably been the biggest demon this year. The economy is doing well, the labor market is doing well, but we have a disruption that's taking place in the oil markets due to the situation. Thus, it's kept rates pretty elevated on it. Meanwhile, there's been interest rate falls. Look at this year, even though the equity markets have really been a story of capital market returns, the fixed income markets are pretty depressed. So you can either, if you take involved fixed income, it really hasn't led to outsized returns of 1 to 2%. Meanwhile, you can take low ball and you ended up with the same sort of returns. Now our situation going into the year, we've been just cut. Fed futures are indicating there's going to be 1 to 2 cuts this year. So the short end remains elevated, which means short duration bonds have to continue to run short.
Watching for Fed moves, I mean, there's the likelihood of a hike between September and December. We'll have to wait and see. See some specific units between September even. Thank you. A lot of data that'll come our way. Jobs are back on all of that. In the meantime, some charts to watch. Midpoint of this trading week, record day there on Wall Street. Will it be a record close? Probably. We sit around some of these levels. See, nobody really knows.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading.
All right, Apple trying to turn back up.
Big desk, team of efficient traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support.
Okay. Apple. Trying to turn back up.
Last year, my dad.
Stock's trying to close in the upper half of the daily range. This is good.
That's true. Yes. Now we're in the car together almost daily. I started to realize, what can I pick up? My dad, he's been with Schwab for a long time. Jim, financial consultant, program that 20 years. Jim's really been there to answer any questions I ever have. Makes a huge difference.
All right, S&P pulling back in. Okay, there's just absolutely no momentum. No momentum. Markets are not going anywhere.
Charts to watch. Joining me now, Kevin Warner, Senior Manager, Trading Services, Charles Schwab. Hey, Kevin, great to see you. Wanted to take a look at the S&P 500. We did see the high of 77.93 today, new all-time highs. It has since pulled back 77.40 and change 42. What are your thoughts on the chart?
Well, it's been a great week, obviously, Nicole. Good start. Exactly what we're looking for. The break of the consolidation window appears obvious now 2 days, 3 days down the road. So some levels we're watching. 7,800 above us, a nice round figure, of course. And that was close to today's intraday high. I think we got up to about 77.93 or so today so far. So we are looking at a new intraday high, obviously looking to close above yesterday's close, which came in at 77.36. So we've got, as you said, a real good shot of holding on and maintaining a positive new high close, which would be great. So a couple of quick things. That movement up through up 7,800 is an appropriate level, but really what's interesting is the 8,000 potential target.
we're looking at just the June 2 high at 76.20 to the June 9 low at 72.37. That's 383 points. If we extrapolate by adding that onto the breakout spot of 76.20, it gives us 8,003. So a measured move calculation in the neighborhood of 8,000 seems pretty intriguing on the SPX. Coincident with a crossover in the MACD happening at the signal line down below, that's pretty notable as well. So a nice bit of bullishness, all of a crossover in the MACD happening at the signal line down below, that's pretty notable as well. So a nice bit of bullishness all of a sudden out of that consolidation.
All right. And what about Synchrony Financial? It's up around 25% since hitting the lows in mid-March. It's had a nice, even a recent run, just recently, I think about even 1 month, it's up 5%. Let's talk about this name here. Some of your thoughts.
Well, financials have been largely improving of late, and the reason this made my chart today was because of the 10-point range we've traded in since April, 69.79. I'm calling out the midpoint of that, which is the 20, 50, and 200-day moving averages, all converging on that mid-range at 74. And now we're trading at 79.5 with a good chance to rally through it. What I find interesting, of course, a 10-point range, if we can break that 10-point range to the upside from 79, it gives us an 89 target, and that's coincident with prior highs. So the math plays favorably. Additionally, the calculation of the potential for a range breakout looks positive. And in the volume down below, what I've also noted is the on-balance volume line. That's that white diagonally charged move that we're seeing as we are at resistance. What's notable is that that's on-balance volume leading a potential breakout. Sometimes that could be a bit of a heads up that a breakout is maybe more likely to occur than to get rejected at resistance. So we're watching 79 very closely, but a breakout could be happening here in
All right, no follow through. It's just one of those days where momentum has collapsed. Stocks haven't moved. People that are trying to rekindle what happened yesterday or the day before are disappointed because the markets did not follow through. If you bought at the high of the day, if you bought options at the high of the day and you're underwater a little bit right now, you could consider selling calls overhead, either same expiration or a week or two out as a calendar, and decrease your risk and decrease the cost of the position that you took on. Or you could just take the position off because the markets are not following through. It's not doing much of anything. We're just sitting here. It's almost 3 o'clock.
All of those present as areas for bullish traders who are looking to take some profits could do so somewhere between 59 and 64 based on the potential of the trend continuation and initial move.
So we partnered with the quantum computing company Rigetti. That was on the 27th of July. So that was another interesting tidbit. This, as the stock has been on a run up 1 month, about 25%. Thank you. Good to see you, Kevin Warner. Thank you. And thank you, friends, for joining me here today on the Watch List on Schwab Network. I'm Nicole Pebble-Petey. Glad you're with me every single day at 9 a.m. and 2 p.m. You can download our Schwab Network app. It's available in the Apple App Store free 24/7. SchwabNetwork.com. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed.
Earnings have been good, so I'm expecting that prices are going to stay in this area. I'm not expecting a big pullback. In the event we do pull back, I do have those put flies I talked about. So you might want to make a note of it. I took the put flies for next week. Cheap insurance, $70 per contract. Only have 5. I will add up to 10, maybe 15 if this starts to fade. Payout's about 4,000 and change. Max profit, if it were to pin right near 750 next week, be close to $10,000 if I double up to 10 contracts. I'm just waiting for an edge. We don't have an edge today. The markets are just pretty much giving back all the gains. We're sitting there trying to stay green. No edge today. We had up-down volume 1-to-1. Up-down volume was 1-to-1. So that's telling you right there that you're probably not going to get much of an edge today. The Qs are around 2-to-1 down right now. So the Qs are selling a little bit more. S&P is pretty much flat, 50-50. 50% advancing, 50% declining. Slight edge to the declining. Intel. Intel, like to see a follow through tomorrow. Citigroup, the banks were doing pretty good today. The banks did well.
Schwab has been with us for almost 25 years. Through purchasing houses, opening up our business, having children. They've always been there for us. I want to invest in
Citigroup. Citigroup, I have 140, 145, and 150 calls. 140, 145, 150 calls on NVIDIA. Those expire in September. Had those for a couple of weeks. Was looking for Citigroup to move above the 50-day over a week and a half, 2 weeks ago. Finally, we're back above the 50-day. So we're looking for a push to the upside, looking for all banks to do the same thing. JP Morgan on the watch list at the highs. Bank of America on the watch list at highs, look good. So all of these are doing the same thing for the most part. Goldman Sachs moving higher. Morgan Stanley moving higher. PNC Bank moving higher. Wells Fargo Bank, Doji, but moving higher. So the banks look good. Banks had a pretty good day.
New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll dive into the tech trade and discuss the demand for AI infrastructure with the team over at NASDAQ. They will discuss your portfolio, and you could be looking at diversifying outside of just the US. How could you be doing that? We'll discuss that. We'll break down reports with the digital standards above beauty as soon as they hit the wire. Now, Molly, walk us through what you've been watching today.
Mixed reaction, Sam. AMD shares under pressure today after posting record quarterly sales. Revenue rose 50% year over year. Data center revenue more than doubled. But SpaceX chief Elon Musk saying his company would no longer buy AMD chips in favor of getting them exclusively from NVIDIA was enough to overshadow those better than expected results. Also, SpaceX on my radar.
All right, Intel turning up. Okay, Intel's popping right here.
So causing some concern among investors as well as that loss of exploration tomorrow. But Disney is higher on sector despite these results. Earnings far surpassed Wall Street's expectations, while net revenue slightly missed expectations. The parks and streaming division was up 10% year over year as their big number there. But let's take a look at how the markets are faring as we head into the end of the trading day and what is another busy earnings slate here. Still a mixed picture across the board. The S&P just up ever so slightly at 77.37, but given back most of the gains we saw earlier in the session. The Nasdaq is 0.4% lower at 29,614. On the Dow, we are 0.75% higher, 74,476, and the Russell 2000 is down 0.4% at 3,008. As we take a look at the 10-year, we're at 463. The dollar still hovering below $100. Gold is at 43.2230. A troy ounce, that's 4% higher. Crude Oil at $75 a barrel. It's been right around there all day long. And at this point now above 65,000 for the first time we've seen it in weeks, but still very close to that range, 65,050 right now for the cryptocurrency.
Intel's trying to break higher.
See what stories caught your eye today on the session. Sam? Well, as you just pointed out, Molly, I mean, stocks given the run-up that we have.
Okay, you're telling us something we already know. Tell me something I don't know. Would be nice. That would be nice. Not going to get any direction out of these people.
Not that complicated beyond exactly that, right? I mean, that's the underlying story of things, isn't it?
That is going to continue to be the story. And what I like about days like today, where you're seeing the NASDAQ is down because you have some of these headlines of companies like SpaceX or AMD is down, bringing down the weighting. You're seeing the underlying breadth in the markets right now with the Dow being up. And that's what I like, is people are not selling equities, they are rotating out of them. And I think that is a very healthy sign for the stock market. I think these earnings are going to continue to drive that higher.
Do you guys think the momentum trade matters? You know, we had this incredible run up, then we had this incredible and fast reset.
Yeah.
And
All right,
Like what you're getting at is like,
all right, there goes NVIDIA. NVIDIA going now.
and in that also like
NVIDIA's on the move. There goes Intel.
it's not necessarily like I was talking about semiconductors, which is a part of the momentum.
oh, yeah, and a big part, obviously. Yeah.
Like it is very important to think about, okay, what do I have exposure to from a factor perspective? And then also thinking about like positioning, to your point, like to Goldman's point, right, making the comment that like earnings.
NVIDIA trying to break out as well. NVIDIA
It wasn't the second
opening range highs. NVIDIA.
Services that has only changed now. So and I think that again just speaks to the style, the positioning, and paying attention, particularly when you have as much leverage in the system.
Apple. Apple turning off the low.
How quickly things change.
Intel.
We're in around a 30% drawdown.
Intel pushing a bit higher.
Fast forward to today, we've seen the largest 4-day rally for the stock since COVID. Okay, the S&P has surged 5% over the last 4 trading days. That speaks to these, after the clearing event, into a 52-week high. In the last 30 years, that's only happened 3 other times, including March of 2000, which was the highs of the dot-com bubble. Yeah, what do you make of that?
So what I make of that is momentum bent. It didn't break. A lot of it was because of leverage, positioning, and almost every single portfolio was following the same thing. I buy things that go up and I sell things that go down. That was retail, that was hedge fund, that was institutional. You had to watch out of that. It's fine. The underlying fundamentals are good. We went back to 1998, long-term capital. This is not that. We went back to 07. This is not
Intel.
that. Credit spreads are still strong. You can still get liquidity in this marketplace.
NVIDIA.
Underlying fundamentals, again, are solid to very, very good.
Intel, NVIDIA looking good. These are breaking higher. Okay.
So what I worry about
Watching NVIDIA. Intel looks good.
which is not going to happen until I think second half.
Intel trying to break.
27.
Looking good, Intel.
Fed strengthening the balance sheet is because the credit markets are so important at this point.
Nice volume end of day, Intel.
That CapEx money is
going into the marketplace, and it has a multiplier.
Got some big trades today on Intel. Nice to see this at the highs at the moment, coming into the close. We got about 51 minutes to go.
And that's when we have to think about repricing the market, repricing a lot of the tech space.
How much of a wild card? I mean, it obviously speaks to the Fed. I think the market is trying to understand on its own for the first time in a long time what the message from the Fed is.
Correct.
Even if the message from the Fed is more opaque than maybe it's been in the last couple of decades at least. So what do we do with that?
Well, I think some of that is the story that's happening this week because there's also the geopolitical concerns, which are arguably lessening, which is that's going to improve the oil picture. So you're seeing energy prices come down, you're seeing inflation expectations come down on that. But you also just got an ADP payroll number. And I think this will be interesting to watch how this plays out because you're seeing that these numbers are softening. So you're seeing a cooling of the labor market, but not a breaking of the labor market, which could mean that the Fed has more likelihood that they could stay on pause. There are still some wrinkles in that. Like, for example, you're looking at wage growth does still increase. That can increase wage inflation. So I don't think it's not clear, but I do think you are seeing some signs here that maybe it won't be as bad as people had hoped when it comes to the Fed raising interest rates.
John, well, I mean, I'll go back to earnings. Waldron, I think, makes the case that if you're getting this broadening of earnings growth, doesn't that point to a healthier, broader, better foundation under the market?
Yeah, I think the argument is actually twofold. Like one being positive in that sense, and then being negative. I'll get into it, but like essentially, you've seen the median company in the S&P 500 accelerate from 6% earnings growth in 2025 to 14% this quarter. Right, that's really really healthy, and the majority, a lot of that, are the banks. Right, the large cap banks have had a stellar quarter. Then the counter argument is, wait a minute, but all of these, you're seeing this broadening because you're seeing this mass adoption of AI, and so then you're seeing margins expand. And that's true. Like that's the goal, right? When you're spending trillions of dollars, don't you want this to be, embedded throughout the economy and through all of these different sectors? Like that is the goal where it's going to become, AI is synonymous with all of these different things. But at the moment, there is differentiation from a performance standpoint, right? Like you look at the sell-off in, tech and semiconductors in June and July, and financials were one of the best performing sectors, right? So I think the conversation with clients now is more around because it was scary to go through that drawdown, that historic momentum drawdown. Like, what can I own that's differentiated? Financial stands out. Industrials are benefiting from that. They're a little bit correlated, but getting differentiated exposure.
Maybe we just made an overall reset kind of everything. We stepped back, like Scott Rubner yesterday of Citadel Securities was writing a note about there's nothing fundamental that's changed. And you spoke about this already. We sort of shook out some of the excess and some of the leverage. The story didn't change. It just reset.
That's right.
Okay, Intel.
We're too high. When we were coming into July, everyone's saying seasonality. July is always good. July is a great month. And I said, we're just going to flip a coin here. And I'm not feeling so good about things. And I'm feeling that expectations were too strong. At the beginning, we thought things needed to reset. They did reset. If you look at what really popped, it wasn't because of earnings. It was because there was a massive degrossing. And that degrossing created more degrossing. And then we had that liquidity event. Right? And what
Netflix turning up. All right, shorts covering on Netflix. Intel pushing higher.
And now we move forward because as we look at the earnings, we look at the fundamentals, we look at the commentary, what we're hearing is demand is good, but visibility is almost as good. The issue becomes supply chain and supply chain constraints. It's not the demand side. That's incredibly strong, and the visibility is there.
Yeah. The broadening trade feels like it's got some legs to you. What do you think?
Absolutely. I mean, I think, again, today is a good example of that, where you're seeing the Dow is outperforming, and I think that's going to continue. I think as an investor, you do still want to own the AI trade. I don't think that's over, but I think there's so many other areas of opportunity. I think, like, for example, Europe is a good place you can look at, which has kind of almost become the anti-AI trade. A lot of that is more driven by things like financials or energy, and it's really underowned. It's really undervalued. So I want to make sure as an investor, we own all of those pieces, because this year is a good example of how a diversified portfolio actually has really been working in your favor. And I think that's going to continue.
I just got to be careful. Maybe Chris, you look at this just now a bit. Try to use history as a guide for what certain months are going to be. August and September are typically not good for equal weight. Well, maybe this is going to be different this time. Like, what does it matter? Whatever history's been in the past, this time, it's kind of always different every time, isn't it?
Yeah, I mean,
flashing back to the last couple of years where everyone was like entering September and they're like, oh man, this is going to be really bad. What are we going to do? And then it ended up being positive. So I do think there's an element of that. And it really matters to Chris's earlier point, like what the Fed is doing. Because what's interesting is obviously the market, the rates market didn't take, you know, the meeting last week well in terms of like the curve bear steepening. And so
Home Depot needs to take out this 359 level, 359, 360. Home Depot.
even though you saw the long end of the curve.
Yeah, let's
I have some October calls in Home Depot.
That's where the real the move happens.
Right.
Like 520.
And you would think, like, how can the equity market go up when you have a move like that in the longer end of the curve? But it really is when you look at overall financial conditions, because you had this monetization from the hyperscalers. You saw their CDS spreads and their credit spreads come down, which is a net positive, I would say, for liquidity and for sentiment and for risk assets.
Last point. Are you surprised that the market has hung in there in the face of the long bond doing what the yield doing what it's done?
So we take a yes and no. What's really more important is credit spreads, right? If you look at credit spreads, and credit spreads have been incredibly tight, that's more important to multiples and to earnings than anything else. The level of rates important, and if we get to a certain level,
Home Depot looks good.
it's really credit.
Intel just sitting here at the highs doing nothing. Nobody's buying.
Leverage and tail risk. We relearned that lesson last week, last couple of weeks, and now we move on. That's kind of Walter's message.
What's Micron doing? Micron
Lesson for risk.
just sitting here, Micron, looking for Micron to build the right side of this cup and move higher over the next 6 months or so. Micron. Chips and memory look fine. Earnings have been fine.
We'll leave it there. Guys, thanks so much for being here, everybody. We'll see you again.
What's
soon.
SpaceX doing?
Let's get to some of
SpaceX.
today's top stock stories. There are
SpaceX starting to bottom.
noon or so today.
Wow, I can't believe SpaceX. Well, I can, but you know, I'd rather it not be moving lower.
Yeah, it really was. You got Alphabet shares still under pressure after that major AI leadership change. Demis Hassabis is stepping back from day-to-day management of DeepMind. CTO Craig Kabukoglu is taking over, and longtime chief scientist Jeff Dean is leaving with 3 other Google employees to launch an AI startup. Now, the timing is what investors don't like. It is another major organizational change, as the street is already questioning Google's position at the AI frontier, with this latest shakeup adding to concerns out here in Silicon Valley that Google's exodus of top AI talent is gaining momentum. Now, we've just seen a string of prominent departures, including Nobel laureate John Jumper to Anthropic and Gemini co-lead Noam Shazir to OpenAI, just 2 years after Alphabet spent nearly $3 billion to bring him back. Now, the bull case is that Alphabet is putting a stronger operator in charge. DeepMind was built as an elite research lab. Now it also has to ship products faster, more reliably, and at lower cost, especially after Alphabet forecast as much as $205 billion in CapEx and turned free cash flow negative for the first time on record. Scott?
Okay, Matt, thank you. Mackenzie Sagales, we are tracking some big moves in the chips again today. It all falls in with that momentum trade we spent a lot of time talking about. Christina Partsinevelos spends a lot of time following it too. What can you see?
I'm going to start off with AMD because that one is moving. It's selling off even after a record quarter. Revenue jumped 50% on data center business that now makes up nearly 60% of the company. But I bring all of that up because shares have more than doubled this year. So a beat just wasn't enough. And the reason you're seeing the sell-off today is that the guy topped Wall Street, but not the whispers. Increasingly more important, capital spending came in nearly 3 times what analysts modeled. And there's also the price of winning those AI deals. AMD is handing key customers more than $15 billion in stock warrants for every roughly 15 to 20 billion in future revenue. And the biggest payoff, it's Helios AI racks. It's really just a 2027 story. Then came Mr. Elon Musk. On his own investor call, he said his companies will build, quote, exclusively on NVIDIA, calling Blackwell the best architecture, which was a reversal from May when he said he'd buy both. And by Blackwell, I meant Vera Rubin, sorry about that. And this is a big number for NVIDIA. By its own math, every gigawatt of AI data center is worth roughly $35 billion in revenue. So that could potentially unlock billions of dollars in revenue for NVIDIA. And it also deepens a circular tie in AI. NVIDIA put up at least $2 billion into Musk's xAI this year, and it's also his chip supplier financing the very GPUs he then buys. So today that loop came at some of the AMD's expense.
Okay, all right, good stuff. Christina, thanks. Christina Prince-Nevelos, Eli Lilly, and Amgen are both rallying today following their strong quarterly results. Let's get to Annika Kim Constantino. She has those details for us. Hi.
Hey, Scott. So we had a strong quarter for both of these names, but let's start out with Lilly. The company smashed estimates for the quarter and hiked its revenue outlook once again. Sales jumped 48% this quarter, thanks to higher demand for Zepbound and Mounjaro, which helped offset lower prices of those drugs in the U.S. And Mounjaro almost topped $10 billion in sales for the first time. And we're seeing strong demand for that drug internationally. We saw Lilly's
Yeah, Lilly pulled back though, right? Lilly pulled back today.
which is generally aligned with estimates. So
All right, so we're looking for Lilly to do something. It needs to break out above that 1250 zone. Apple, we want to see that close above the 50-day. We're just below the 50-day, but looks better than yesterday. We're doji. We didn't hit this low again, so that's good. This 303, 50, 304 level low. We didn't get down there. We bounced, moved higher, 50% into yesterday's candle. So expecting to see price above the 50-day sooner rather than later. Broadcom looking for a push higher. Broadcom.
love to travel and investors are
Okay, doji on this one too. Intel, no follow through.
Great earnings report, optimistic expectations, but again, the U.S., its fastest growing market in the quarter. Expedia is also up 2%. It reports after the bell today. Truist analysts think Expedia might have an even greater potential upside than Booking because it doesn't have as much global exposure where we've seen macroeconomic pressure. Lodging up as a group, you've got Marriott, Hilton, Hyatt, Choice up between looks like 3% and 4%. What's clear from the group is that Iran is having an impact. It's squeezing the global travel companies. Marriott saw a 43% drop in revenue per available room in the Middle East, reported that on Monday. Higher fuel prices are having an impact. Booking said, not because really gas is expensive, but because the plane tickets are so expensive. Even European and Mediterranean travel has suffered declines. And then you've got those long haul flights to Asia that have had to adjust their routes around the conflict in the Middle East. All of those headwinds, Booking expects to persist through the third quarter, but you've got luxury remaining above the fray. We heard that from Booking, and the domestic travel demand is strong. So when I say domestic travel,
S&P
around the globe, people are
with very little time left.
even if it's just within their own borders.
We have about 39 minutes to go. S&P is just sitting here doing nothing. So best case scenario looks like S&P is going to close on a doji.
The stock liked it a lot. Where is it trading now, Brandon Gomez?
It shares are still up.
Okay, so S&P is going to close on a doji or spinning top. Could be worse. RSI hasn't made it above 70 yet. Volume looks good, so that looks like institutions. MACD stochastics are okay, so maybe we flag tomorrow. I don't know what we're going to do, but definitely more bullish on the bias. We're above all these all-time highs here. Volume by price is supportive. So if we do pull back those put flies that I bought, we'll insulate. I am looking for higher prices though, and that's mainly because of earnings, guidance, and the overall momentum. We consolidated for 12 weeks and now we're pushing higher.
Took a stake in the company and pushed for changes, including improvements to operations and shareholder returns. While now investors are watching if Starboard pushes for operational changes too, or broader strategy shifts like it has the past with names like Darden and Apologize.
All right, good stuff, Brandon. Thank you, Brandon Gomez. Now you're up to date on all the big movers. We're just getting started, though. Coming up next, soccer superstar Alex Morgan. She changed the game on the field. Now she is making her next move off the pitch. She's teaming up with JP Morgan to help fellow athletes master their money. She'll join us next with the Stock Exchange, the New York Stock Exchange, and you're watching Closing Bell on CNBC.
Nasdaq 100, they're really driving innovation in their part of the world. They're part of their industry and providing investors access to, again, the companies that are driving.
And we're just barely off highs in terms of the markets overall, but in the Nasdaq 100 specifically, I mean, we're just barely off the highs that we saw in June. As you look at that, are investors still adding to their exposure, or are you seeing them become more selective?
They are still adding their exposure. I think you're seeing different things, right? So if you look at the cues, it is a capital markets vehicle, right? So you do see trading there the way you would a capital markets vehicle, the way you see some of the other largest ETFs in the world trading.
All right, Apple's turning up. Apple.
And investors are expressing that through that.
Apple is on the move here.
Like QQQ, even now IQQ and QNDX, I think you're seeing
Apple
you see that through the trends. More buyers
pushing back up. Apple.
Where you're seeing investors, regardless of what's happening in the ecosystem and the overall economy and markets, they're continuing to add to those positions as a core of their portfolios.
And so as we look across
Apple rising on volume.
that more than $30 million flowed into options-based ETFs on Blossom Social, and only about 3 million of them were sold. So I want to walk through that. Does that suggest that investors are treating these more as like a long-term hold rather than a trading vehicle?
Absolutely. So I'll take a step back. So Blossom Social, I think we've talked to them before. It's a social trading app.
Apple on the move.
It's a social app. You can go, and a lot of investors will link their brokerage accounts as their profile. And so there's about $14 billion in assets that are attached to the Blossom app. We are working with them to create a paper on options-based ETFs and retail investors. That should be out the next month. And as part of that, we looked at
Pre-market high is substantially higher, of course.
until May, we started offering the paper. And what we saw was, again, $30 million from retail coming into three main products: QQQI, which we talk about a lot from NEOS, JEPQ from JP Morgan, and GPIQ, which is sort of a new emergent when it comes to retail from Goldman Sachs. And those three made up 80% of that 30 million buying. But to your point, the interesting piece was that only 3 million was sourced. It's in like an 89% retention rate, indicating precisely what you said. Investors, particularly retail investors, if you look at the demographics, it's widely split from 20-year-olds to 45, 50-year-olds, and they are largely holding these longer term, illustrating to us that these options-based products are not being traded on the fringe. They are indeed across the graphic being held.
Why do you think those strategies specifically are resonating in today's market?
I think investors are looking for income anywhere they can find it, truly. And they're looking for ways to find income outside of traditional fixed income. Rate environments aside, they're looking for ways to diversify their portfolio. And these are ways that investors can capture upside and they can still capture that income. And the NASDAQ 100 ETFs, as you look at the flows, are capturing the lion's share of these flows because of the higher underlying volatility of the NASDAQ 100 versus the S&P 500. If you do options, which I know you talk about a lot, you're getting a higher premium. And so that's leading to a higher income and higher demand for investors.
And there's been a lot of debate about the AI trade and if it has peaked and it continues as earnings season continues. Your view is that it is broadening, and I know you well enough now that you don't come to us ever with a view that isn't backed up by evidence.
Yeah.
So walk me through the data that you have that is backing up this broadening of the AI trade versus the peak.
Sure. So we're really seeing it in two ways. I'll start with the first. So what we're seeing is AI is the story, but electricity is what's fueling it. Right. So you're seeing all these stories. I saw a story recently. It was a picture of a data center building. I think it was in Louisiana. It was practically the size of Manhattan. And so what has to fuel those? Electricity and a modernized grid. So you cross that with global sort of energy transition, and we've seen incredible demand for a particular ETF, grid. It's the First Trust Clean Edge. It's kind of a mouthful. First Trust Clean Edge smart grid infrastructure ETF. They've seen $5 billion in flows this year from retail, institutional, international investors because there is such a demand for what is fueling the AI trade, and that is this infrastructure.
And a great ticker grid.
Exactly.
Just say that whole name.
Yes.
How long we have conversations about what inning we're in, sort of in this AI build out, but from your viewpoint, how long do you expect this investment cycle to be that is specifically focused on data centers and the grid modernization and electrification? So the build out part of the cycle.
I think the build is continuing. I mean, we're just really, I feel like on the front end. I was doing an interview with somebody not too long ago from Synopsys, and he was talking
Okay,
about
Meta turning up too. Meta's starting to see more short covering. Meta short covering.
Robotics and all the things that come from it. I'm way over my skis when it comes to these things. But it was really interesting to watch this evolution that we've seen. And so I think we're still very early in that regard. And we're also seeing, it's a huge uptake in things like semis. It really has become what is fueling this industry because the industry is ever evolving. So whether it's semis or electrification, those things that are fueling this rally, or fueling this trend are really what we're seeing in the assets.
And you mentioned semis there. Is there a possibility where power infrastructure becomes as important to investors over the next decade as we have seen the semi?
NVIDIA next.
I think there absolutely is, and we're seeing it.
Intel at highs.
These data centers and what we need there, and just generally.
Okay, so here's Meta. NVIDIA looking like it wants to go some more. NVIDIA.
The sort of this global renewable energy trend that we continue to see as well, and so those two sort of confluence of circumstances are really leading to the flows we're seeing. Semis too. I mean, I think we get so trained to think it's NVIDIA. It's so much more than NVIDIA. You're talking about equipment companies. You're talking about memory companies, and so something like the SOXQ, SOXQ.
Broadcom turning back up. There goes NVIDIA. Starting to look good here. NVIDIA. Apple looking good. Nice little close. Too bad they wait until the end of the day, but that's what they do. Got 30 minutes. Just over 30 minutes to go.
And so as we look at how much more diversified the semi space and some of the available offerings are, do you view that as the overall sort of bull market that we've seen in semis as becoming a healthier bull market than we have in the past 2 years because it isn't dominated by NVIDIA all the time? They're not the lead in the conversation.
Every time I can see more diversification, I think it's a positive sign for that bull market. And so absolutely, as you're seeing more and more companies, global companies come into the game, right? Whether it's a Taiwan Semi or a Broadcom here, yeah, so you're definitely seeing a more diversified global approach to these themes, which for me, the more diversified it can be, better for the bull market, also better for investors.
Jillian, always so great to have you in the studio.
Thank you so much.
Really appreciate you coming.
All right, all the New York banks are starting to see some short covering.
Thanks, Molly. Coming up next, we will dive into the rate environment and how fixed income investors are adjusting to elevated interest rates. Mark Rothbard will be right back.
NVIDIA pulling back in now.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
All right, NVIDIA pulling back in now. Intel trying to go. Intel is also trying to push higher.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Market on close. I'm Marley Kane alongside Sam Bottas in New York. Here are the Wynn Resorts rallying after earnings topped estimates on both the top and the bottom line. Total operating revenue for the quarter was up 7% and was led by Wynn Palace and Wynn Pop. Shares of Wynn Resorts for the year are still down 13% overall. As we look across some of these hotel names to see how we're performing today, there's Wynn up more than 4.5%. Penn Entertainment down closer to gaming down 2%, and Las Vegas Sands is marginally higher on this session. I do want to shift gears here, though, bring Sam back into our conversation and take a big picture look at the markets with our next guest. Joining us now right here in Chicago headquarters, Mamadou Al-Bussar, the co-founder and president of Eastward Quantitative Management. Mamadou, great to have you back on the show. Let's start to talk about the Fed here. I haven't talked about the Fed today, so I want to start with that. You sent over some great notes in advance of our chat. You said that the long end of the curve is really a referendum on the Fed's inflation credibility, and I love that. Is the bond market telling us that investors do not believe that inflation is heading back to 2% anytime soon?
So that's the way I look at it. Ultimately, when you think about the fund rates, this is your right eye inflation price. But over the long run, this is what the lenders are looking at. And when you have a spread between the Fed rhetoric and the yield curve, as a systematic manager, I tend to trust the curve. And we saw basically a 10 basis point up in the 30-year. The 10-year went up by 7 basis points, and the 2-year went down by basically 4 basis points. So a real steepening of the yield curve, which means that the rhetoric didn't register as well as the expectation. And I think the market is still adapting to Kevin Walsh style with no forward guidance and less economic outlook. We got spoiled for many years of having a prompted outcome, but now it's all about expectation for the expansion for the long run, how we're processing that in.
Joining the conversation here from New York, I'm wondering what you made of the U.S. participation in the yen intervention the other day. I mean, does that suggest to you that Bessent and Co. are concerned about the Fed potentially losing control of the long end of the yield curve? And do you think they're buying some time before BOD Jane once again?
So when I looked at the Japanese side, for me, it was very interesting. It was portrayed as a friendship support of the yen. But if you know the real reality is that Japan owns 1.2 trillion of U.S. treasuries. So that safer was all about the 30-year bond. Because if
Apple.
Japan were to offload the treasuries, it's going to have an
Apple, nice reversal. It's still way off of the pre-market highs. Pre-market highs are way up here.
The market needed to stabilize, and that
Pre-market high.
going forward will be probably more about how can we
Right
make
there.
sure we are looking at 30 years, a great proxy on the pressure we have on long-term inflation, but also for me, fiscal risk is the big item on the 30-year as well.
And so as we look at long bonds, I mean, right now they're offering a highest yield that we've seen. I think it's 2007 or so, but you also come with a pretty significant interest rate risk here that we're talking about. Would you rather own the long end, or would you stay in the front and intermediate part of the curve right now with the uncertainty?
So I don't think that you need to take such a duration risk to actually lock up such a yield. I would say around a 10-year yield earning 4.67 without taking undue risk is probably the right place to be. I'm expecting more pressure on the 30-year going forward, given all the expectation around inflation. And also the fiscal risk is likely to push the yield probably higher. So I would say don't go too far in the yield curve to achieve that yield, because you can get more without taking undue risk on durations.
Global yields, I mean, do they look more attractive at this point as well when you think about the gilt market or JGBs?
So I'm hearing a question being around the global markets. Okay. So I had a client who approached me a few months ago and asked me, well, I'm doing so well with S&P 5. What if I were to switch all that and move to MSCI World? And I had a good and bad news. The bad news is that MSCI World is more American than you think. Just because of the global nature, 70% of the stocks in that benchmark are actually U.S. capitalization. NVIDIA and Apple represent weight that
S&P moved a bit lower. All right, so pretty much what we've been expecting today. Markets are not going to go anywhere. We did fade. We're flat. We're flat. We're slightly green right now. I don't know if we're going to keep that into the close, but you can see that hedge flows did gradually start to move higher. With 22 minutes to go, not much movement, and not expecting it really.
I knew it was heavily weighted. I just didn't realize it was quite that heavy. So if somebody does want to have a genuine exposure to these faster growing economies,
Intel trying to push a bit higher. Intel.
Traditional avenues that we would normally take.
Intel's trying to push higher.
So one of the things you will be mean, let's look at emerging markets. It's been an exciting story this year. The MSCI emerging market is up 19.02% year to date. But here is a caveat. It's driven by technology stocks. 45% of the index is tech heavy. So my take is to actually divide the blocks into single countries exposure through ETFs, as opposed to buying a basket as one entity. So don't take MSCI EM as the way to do it. I will divide that between China, Brazil, India, and looking at each country in the lens of P/E ratio and opportunities, as opposed to saying, I need an EM exposure, hence here is an ETF that does the trick for me. So investors need to do more work to diving into that, and decoupling the blocks is what matters right now.
Where are the opportunities in EM? And I would throw Japan in there as well at the moment, Mamadou, beyond some of the obvious tech names. Oh, I don't know that he can hear you, Sam. I'm just going to repeat your question for him. She wants to know where the opportunities are in EM, and she wants to include Japan also in this conversation, beyond the obvious tech names that we talked about.
So on the consumer side, I mean, the AI story is the main one, but I think when you look at the real story for me is in real assets in emerging markets. Because whenever you have alliances, as we're seeing right now, they trickle down into commodities like copper, aluminum, but also large project and infrastructure. So Sam, the way to do it is to actually to look at sector exposure within EM. And I will say right now, it's commodities play and infrastructure that actually paying dividends and are fairly priced in.
And I'm going to do this last one for Sam, and shout out to Australia here. You highlighted investments by Australia and also Japan, their favorites in critical minerals. How are you looking at that space as a potential investment opportunity? Because I'm finding I'm having more and more conversations about that potentially being, I had a guest earlier call it the new.
So I will agree with that statement, actually. It could be the new one. Just because of the diversity of that particular baskets, oil in itself is actually driven by the same fundamentals. But when you trickle down to actually copper, aluminum, and all the commodities, they are driven by all the
Microsoft, short covering on Microsoft, starting to turn back up.
natural resources and upstream. That's where they will go right now, just because of the diversification. And I think the entry point with the trade flows is where the CapEx play is. The story today of global alliances is a natural resources play and a sector-specific outlook. So I encourage investors to double down in natural resources.
Mamadou, always great to have you with us. Really appreciate you coming back and joining us in studio here. That's Mamadou Abou-Sar from B Square Quantitative Management. Coming up next, we've got Options Corner. Rick Ducat will be joining me right here in our Chicago studio to take a look at the activity in Sandisk.
From here, let's ask Jeff DeGraff. He's chairman and head of technical research at Renaissance Macro. Welcome back. It's nice to see you.
Good to see you, Scott.
You point out today in a note, after a momentum peak of this magnitude, the analog is an initial oversold rally. Now, that's what we've witnessed over the past few days, then drift with the typical trough not showing up until roughly 6 months later. What does that mean then for the time between now and, let's say, January?
I think Leopold put a face on the crash, right? So I think that's important. It kind of gave people some recognition as to what was going on, and maybe makes you feel a little bit better and more comfortable about going, back into the water, if you will. I think it's important to realize that the conditions that drove it to the high, particularly in the parabolic phase, are probably done. We're not going to have the same amount of leverage, the same kind of urgency going forward. So I think we'll rally probably somewhere around 30-35% off the lows for a lot of these momentum names, really specifically for, I think, semiconductors. And then from that point, I think you end up with another correction, and you'll end up at either testing the lows or undercutting those lows. And it'll all kind of sort itself out somewhere around January. That would be my guess.
Does that mean that we have a pretty good runway between now and then if we've gone through the kind of deleveraging event that blow up obviously showed, and how the market's reacted since?
I would caution that. I think we'll probably poke our heads through the 50-day moving average. Again, something that's a 30% move. So depending on what stock that is, there's probably maybe halfway to go on a lot of those other names off those lows. And then you tend to drift, and then you tend to roll over. And so, from my standpoint, one of the things that we've been, urging clients for the last 3 months is you don't sell on the way up, you sell on the way down. But really what you do is you shoot them in the back. In other words, once they crack and they start to run away from you and they rally, we want to start letting go of those names that aren't acting right, and that's where we think we are in the phase of this correction here. So I think the one thing to keep in mind, it's easy to say, hey, are they up or are they down? Not that it's easy to say if that's going to be right or not. But the other scenario that I think gets lost is that a lot of times they can just drift. And I think that's what we're really staring at. If we look at the analogs historically, is the drift. And certainly I think that the upside is from here. But I do think the drift is probably the more urgent message for clients between now and the end of the year.
Okay, so if that's true, though, now I want to talk about everything else. I think that's what I was implying in looking past the momentum trade. So let's say the momentum trade just drifts. As John Waldron was saying this morning, as we played on our show, it all comes down to earnings growth for this market, and earnings growth and the strength within it is broadening. You see that as a sign that of the overall market, despite whatever momentum does, is primed to do pretty well.
Yeah, look, I really don't follow earnings, so I know that sounds antithetical, but that's not my game. But we follow the tape, and what the tape is saying is exactly that, which is there's a broadening. I mean, look, the Russell 3000 breadth line hit a new high yesterday. That's good news. The one fly in the ointment that we saw yesterday was the 20-day highs did not really expand. They were like 19%. For a market that's making a new high, we'd like to see something at least in the 30s, if not 40% plus. So I don't get too worked up about that. That can catch up. But I think when you look at breadth and you look at the percentage of issues above the 200-day, et cetera, this is a market where whatever money was coming out of momentum stocks, it found its way into something else. And that is a healthy sign. What we worry about is when they say, hey, these yields at 5+% look pretty interesting. Let's shift the allocations. And that's not what we're seeing, which I think is good news for the market overall.
You say lean into energy and healthcare. I mean, that would suggest that you are a believer in this broadening aspect of this market.
100%. Yeah. And what I would say is, and this is something that people have not paid enough attention to in our view, is we have seen tightening financial conditions. The latest episode of that is what's happened to the yen. Prior to that,
Okay, Apple.
Real rates, and you see that. You see
Trying to push higher. Apple.
Which a lot of the momentum names were.
S&P, not much going on today. It just sat flat near the lows. We're going to manage to close a little green if we are lucky. We got 14 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Wednesday. Kind of a boring day. The markets didn't go anywhere. Most of the evening session, the markets went sideways. It is August the 5th. We got about 14 minutes to go. Who's reporting tonight? Who is reporting tonight? Fastly reports. Okay. SanDisk. Okay, we got quite a few stocks reporting tonight. All right. All right, all of these are looking at 10 to 12% moves here, expected moves. Okay, app 11, looking for a pop in app 11. Okay, NVIDIA pulling back a bit, profit taking. Netflix turning back up. There goes Apple. Apple pushing a bit higher right now. Netflix turning back up. Okay, nice move off the low. Close up here would be preferred, obviously. Need to get above 78. Right now, we're still dealing with that 75, 76 zone in Netflix. But it is turning up. That looks good. Intel's trying to hold on. Okay. Shopify earlier today gapped up. It's closing a little bit lower right now. Marriott, another one that looked good this morning. Closing near the highs of the session. Marriott. Amgen and the pharmaceutical stocks, a lot of those looked good. Citigroup, the banks look good. Citigroup's fading a little bit right now. Morgan Stanley. Okay, these are all seeing profit taking. Wells Fargo. Bank of America looked the best. Okay, that's holding at the highs. And Goldman Sachs. Okay, Doji. All right, so New York Fang didn't do much today, all right? New York Fang didn't do much. We got a Doji, almost a shooting star.
Christina down the stocks just watching. What do you say?
Well, let's start with Flutter shares because they are plunging 14% up slash its full year US profit outlook. And then also said CEO Peter Jackson will leave his role in October and be replaced by the head of its international. You're also seeing lower betting sales of customer trips that made stock shares fall 60% this year and down, like I said, just 14% right now. Uber shares also in the red after it issued a soft outlook as it continues to wrap up investments in autonomous vehicles. The company said it expects to commit more than $10 billion in coming years to bring EVs to market at scale. Shares down 5%. Last but not least, Shopify shares surging on the back of a strong revenue outlook for the current quarter. It comes really as the company's AI efforts draw more merchants to its services. And it's often to be clear about growing competition from AI and the likes. Shares are up 18%. Best day in years.
Christina, thanks. Christina Porcelana's coming up next. We get to set up for all the big earnings movers in overtime. Do that in the market zone, which is next.
All right.
Intern, this place is right open. It's where I get all your office supplies. Your home boss, your fancy coffee, giant TV. It's everything in one place. It's like Schwab. Everything investors need. Oh, so again, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. Bigger, slick. We have to buy one.
Invest your way with Schwab.
Welcome back to Market Home. It's live from the floor of the New York Stock Exchange. It's time now for overlooked stocks. Shares of Bloomberg Brands have jumped to its highest level in over a year after earnings. So joining me to discuss this is Jeff Atlas, who's the Director of Regional Investment Strategy. Charles Schwab. Jeff, example, I guess, of the top end of the K doing well. I mean, we hear so much about people trading down, but people are trading up, they say, to buy more premium cuts at places like Outback Steakhouse, which admittedly and sadly I've never been to, but I did work in the Outback and I love steak, so I suppose that counts. Just walk us through what we learned with this one. It's a nice reaction.
It's doing really great, Sam. You're absolutely right. K-shaped economy is working out well for Bloomberg Brands. So for the viewers out there, they operate restaurants like Outback, Wings, Fish Grill. Today they gained about 30%
Okay.
or so. It's off Q2 earnings, which were stellar. They reported 39 cents per share, which
Intel.
is 10% over expectation beat. Phenomenal return. And that, by the way, is
Okay, Netflix turning back up. Netflix. All right, so we're easing off of this level. Buyers stepped up at the low of the day. That's a good